is what we are seeing everywhere.
Going back to the Musk hypothesis on what this is actually going to do in terms of cost of manufacturing, what are you seeing today in terms of cost of manufacturing on account of the deployment of AI, of robots, etc.? And what could we be talking about 5-10 years on?
So two things changes with deployment of these robots. One, the ability of the customer to deliver products at speed, and second, at scale. And second, the cost. The cost definitely reduces because you remove all the non-value added work, and those non-value added work, sometimes it goes out of the system because you are rethinking the process once again with these robots, etc. Or this gets done by robot, and per piece work reduces. So to the tune, we have seen many customers gaining to the tune of 15%, 20% as far as cost of manufacturing or cost of delivery is concerned.
And that's not because of a manpower cost reduction?
No, never it is because of the manpower cost reduction. It is, so sometimes it is because of the capex which they deploy. So let us say if it is a completely manual system, you need 100,000 square meter, and for that you need to have land, you need to have the construction going, etc. Same thing with automation, you can do it in 20,000 square meters. Okay. So maybe 5 times reduction
so
in the area. So
the economics changes completely.
Completely.
Let's talk about your economics now. We're sitting here in your facility in Noida. This is one of the facilities that you have. You have about 900 people that are working with you at AdWorb. And it's been a very rapid expansion for you, all in a matter of 10 years. And this facility came up, about 6 years ago, right?
6 years back,
so,
yes.
And now you're servicing not just the Indian market, but you're servicing the world as well. What is the plan from here on?
Yeah, so today 60% of our revenue comes from, or used to come from, overseas market. There is, last year was a thing because of American thing, but
yes, because of the US tariffs, and
US
that
tariff,
impacted your business.
Yeah, but otherwise going forward, 50% revenue will continue to come from India and 50% from overseas market. Okay. Today we have 900 people in India and around 150 people in overseas market. So we have 100% subsidiary in US, in Europe, in Australia and in Singapore, and we cover almost 25 countries from these 100% subsidiaries. And we export robots. So everything gets manufactured in one of our facility, which is world's largest facility, Botverse.
It's the world's largest facility for robots.
For mobile robots.
For mobile robots. Okay,
yes,
and that's right here in Noida.
Right.
What's
here.
the capacity? How many do you turn out?
Yeah, we can do 100,000 robots a year.
100,000 robots a year.
100,000 robots a year. We are not using the capacity yet.
How many are you currently doing?
10,000 plus robots a year, and all different kinds of robots.
Okay. So, in terms of competition, especially as far as the global markets are concerned, you're up against the Europeans, you're up against the Japanese, you're up against now the Americans as well. What is the key differentiator for you as you compete in the global market?
And Chinese.
And the Chinese, yes, of course. How can I forget?
And with different companies, it is different. One of the biggest differentiator for us is the range of robots. There is no company in the world today which can say they have all these form factors of robot. Okay. And we have 22 families of robot today, and each of these families would have 5-6 versions, etc. We have Zippy, we have Dynamo, Tracker, Humanoid, and all different kinds of robots.
So 22 children.
22. Yes. And so that enables us to use it as a Lego and solve problem for our customers. So we never sell a product per se, we solve or we give a solution to their problem. So that is what differentiates us today in this robotics automation market.
What is the current order book looking like for you? And, what do you expect in terms of adoption as you see the pace picking up? What could it potentially look like a couple of years on?
So India, if you see, it is still, all the factories and warehouses put together, we are less than 1% as far as automation is
Still
concerned.
less than 1%?
Yes, less than 1%. Our factories and warehouses. The large factories, of course, they are automated. The newer factories, the newer industry, let us say new energy, solar, battery, anyone who is putting it, it is automated, whether Reliance, Adani or Wari or any company. Similarly, electronics, whether it is industrial electronics or consumer electronics, mobile factories, these are automated and these are world class. But the traditional industries and the older factories of even these large companies are not that automated. The MSMEs, they have not tested the benefit of automation at all at this point of time. And these would be really, really large consumer base once they start using it. We have an order book of 1,400 crores for next year. This year we will do 800 crores.
Let's also talk about the fact that Reliance has made a very big bet on you. How did that come about?
So we were in 2018, from 2018, we started in 2016 and 2018, Reliance started investing in their e-commerce platform. And that is when they needed warehouses which are fully automated. And they called 25 companies, globally 25 companies came. And we were lucky, we were small, but somehow we found that place in that room. And
what made them pick you out of the 25?
Yes, because of the speed which we promised. So all the, as I was telling, there were a lot of European companies and they said 18 months and 20 months, and Reliance doesn't wait for 18 months and 20 months for things to happen. So they asked us whether you can do it in 6 months. We didn't know.
You just said yes.
We said yes.
But now funding requirements, additional funds needed, and possibly the road to an IPO. I mean, everyone's talking about when will India have its own AI story as far as the stock markets are concerned. Is that something that you're working towards?
So, yes, we need fund. And right now, all the funds we are getting from Reliance itself. And but we need massive funds if we have to compete with
what are we talking about? What's the ballpark? When you say massive, how massive is massive?
Okay, in the short run, at least $100 million or $150 million kind of thing. But it will happen, and we are on the right track as far as that is concerned. As far as IPO is concerned, we are very convinced that we have to be of certain scale. And we have to be profitable in all fronts, and then only we go to the public market. So.
And by when do you expect to be profitable, given the visibility that you have?
We are EBITDA positive, but yes, it will take another 2 years for us to be net positive. Maybe next year, but...
Maybe next year. Well, 10 years of AdWorb, what will the next 10 years look like?
Next 10 years, we have this dream of becoming one of the top 5 players in the world as far as robotics is concerned. Today, we are delivering at 25 countries. We want to be Toyota of the robotics, where we deliver it to 180 countries in the world.
Well, that's a big dream. It's a big task, and it's a big ambition to be the Toyota of the robotics world. From India, servicing the world, hopefully at some stage 180 countries, as you point out. It's been an absolute pleasure, Sangeet. Thanks so much for joining us here on Young Turks Reloaded, for giving us an insider's perspective on what it takes to build tools that will help the world automate faster, but more importantly, how India can play a strategic role in this journey going forward. Thanks very much for your time, and we wish you the very best of luck.
Thank you for having me.
Well, with that, it is time for us and from all of us here to say goodbye to you on this episode of Young Turks Reloaded. Do send us your feedback and your comments. We always like to hear from you. For now, from the team, goodbye and many thanks for watching. evening. Thanks very much for joining us on India Business Hour. I'm Shriram Finance. The headlines we're tracking for you this evening. Tata Sons defers its decision on Group Chairman N. Chandrasekaran's term extension till the next board meeting, now scheduled for June. Sources say Tata Trust Chairman Noel Tata asked for certain conditions to be linked to Chandra's reappointment while raising concerns about losses in certain group companies. Both Noel Tata and Chandra sought deferment of the decision rather than a vote. The IT sell-off continues on Dalal Street. The Nifty IT index is on course for its biggest monthly decline in 23 years. The Sensex and the Nifty end with sharp cuts, erasing all gains made in the last two sessions. The AI scare resumes on Wall Street. A viral blog post by Citrony Research sparks a major sell-off across software and IT stocks globally. President Trump's reworked 10% global tariffs kick in days after the Supreme Court rules his sweeping tariffs is illegal. Trump vows to raise the rate to the legally permissible 15%, but no executive order passed yet. Wall Street Journal reports the Trump administration is considering additional tariffs on 6 industries, citing national security. Textile stocks remain under pressure after the government halved benefits under the Export Support Scheme, or RODTEP. Exporters urge the government to restore the benefits. Rajiv Bajaj plays down the impact on Bajaj Auto but warns of negative impact across other businesses, says RODTEP is not a subsidy but a tool to negate the inefficiency of our own ecosystem. The government charts a 4-year plan to monetize assets worth nearly 17 lakh crore rupees. Gale Gas set to go public in FY28. Coal India likely to see equity dilution. Stake sale in companies spanning across power, infra and hotels also on the cards. Ukraine's President Zelensky gets a standing ovation at the European Parliament after his speech marking 4 years of a war with Russia. Macron says Moscow does not have any desire for peace, as he remains skeptical of the truce negotiations. The government plans to roll out a nationwide campaign for HPV vaccine to prevent cervical cancer among adolescent girls. Sources say the vaccine will be provided free of cost to 14-year-old girls across the country through government health facilities. It's official, Kerala is all set to be renamed as Keralam. The Union Cabinet approves the change to the Malayalam language name by which the state is traditionally known among its people. Well, let's go straight to the top story this evening. The Tata Sons board has deferred its decision on Group Chairman N. Chandrasekaran's term extension till the next board meeting, which is now scheduled for June. The 62-year-old industrialist has been at the helm of the $300 billion conglomerate since February of 2017. Now, his current tenure is set to expire in February of 2027. We learned from sources that the Tata Trust Chairman Noel Tata asked for certain conditions to be linked to Chandra's reappointment, while also raising concerns about losses in certain group companies. We'll get you more on what transpired in that board meeting in just a bit. But first, my colleague Sante Gora, who's been reporting from the iconic Bombay House, gets us the key takeaway from N. Chandra as he walked out post that meeting.
So after a day-long meeting, Tata Sons board meeting ended at around 5:45. The biggest takeaway, the biggest development of the meeting was that the decision to extend N. Chandra's term was deferred. CNBC TV18 spoke to N. Chandra as he stepped out of the meeting, and this is what he said. He said that he himself recommended that the decision to extend his term should be deferred, and this changes nothing for Tata Group at all. Listen in.
Can you give us the outcome of the meeting, please? Yeah. We have been standing since morning. We have really worked hard while being outside.
So it can mean that your reappointment...
No. I recommended it should be deferred because that was a request made by one of the directors.
From the promoter side, from the trust side, were there issues raised, Chandra?
I'm not
all right.
So the part where it was said that, the performance of every company of the group, there was a lot about that also. Any comment on that, sir, that how one company's performance cannot be a benchmark?
No.
All right. What changes for Tata Group, Chandra, from here? What changes?
Nothing changes.
Well, nothing changes. That's N. Chandrasekaran there post that board meeting, which lasted several hours, starting at 11:30 this morning, ending in the early evening. Parikshit Tutta joins us now with the inside track of what transpired in that board meeting. Parikshit, it's unusual because a decision had been taken informally in about October, saying that there will be a reappointment for N. Chandrasekaran. What has changed and what are the kinds of issues that were raised in that board meeting linking them to Chandra's reappointment?
Well, dramatic developments at Bombay House today. This was supposed to be a routine board meeting because 6 months ago, Tata Trust had already recommended the reappointment and extension of N. Chandrasekaran as chairman for another 5 years. He is currently the chairman. His term continues till February 2027, and he was supposed to get an extension for another 5 years. But Noel Tata, the chairperson of Tata Trust, raised certain objections. He sought certain commitments during the board meeting. His objections were as follows. Firstly, the circumstances have changed in the last 6 months when the Tata Trust recommended N. Chandra to be reappointment. There were discussions on the performance of TCS for that matter, the dividends that are paid out by the company, the investments made by Tata Sons in Air India, in semiconductor ventures, losses in certain Tata Group companies, impact of artificial intelligence, not just on TCS, but on the Tata Group in general. And keeping that in mind, 3 conditions that were laid out by Noel Tata. 1, Tata Sons should never be listed. But this is something for the RBI to decide. Number 2, there should be no future investments in new projects which endanger the liquidity of the company. This is because in the last 6 to 7 months, there has been value erosion in certain Tata Group companies. And thirdly, Tata Sons should settle matters with Shapurji Palonji. Now, these were terms which N. Chandrasekaran, other board members, could not immediately agree to, and that's why this matter of extension for N. Chandra was deferred till the next board meeting in June. So he continues, N. Chandra continues as chairman till then, but it creates a certain amount of doubt and uncertainty over Tata Group companies.
So 10 years after that last bitter boardroom battle, the House of Tatas is seeing a boardroom battle yet again, and we will have to wait to see what transpires between now and that next board meeting, which is scheduled in June to take up the reappointment of N. Chandrasekaran. Will it be done? Will it be done for a period of 5 years? Will it be done for a period of 2 years? Or perhaps 3, we don't know. But at this point in time, there is a question mark now on N. Chandrasekaran's tenure as the Tata Sons chairman. Of course, his term goes on till Feb 2027. That's the current term, ends in February of 2027. Now, weak global cues, a big sell-off in IT stocks and expiry date jitters weighing on the Lal Street. Markets erased all of their gains in the last 2 days, dragging the Nifty below the 25,450 mark. The Nifty and the Sensex down 1%, but the broader markets fared mildly better. IT stocks were the worst hit after an AI-led disruption continued to intensify the sell-off that started earlier this month. The Nifty IT index hit a 2-year low and is on course for its biggest monthly loss in 23 years. Every single constituent of the index is now down more than 10% since the start of 2026. The AI scare resumed on Wall Street as well after a while.
Wall Street ends higher, buoyed by tech rally as renewed enthusiasm for artificial intelligence offsets concerns over its disruptions. Nasdaq was up over 1%, while the Dow Jones and the S&P 500 end the session with gains between 0.5% to 1% as well. Asian markets have also opened higher after a tech rally lifted Wall Street overnight. The GIFT Nifty is also indicating a gap-up start for our own markets. Oil prices have eased as Iran agrees to take steps towards a possible nuclear deal with the US. Gold prices have retreated, easing from a 3-week high on renewed strength in the dollar. The silver also follows suit. Tata Sons has deferred its decision on Group Chairman N. Chandra's term extension till the next board meeting in June. Sources say that Tata Trust Chairman Noel Tata asks for certain conditions to be linked to Chandra's reappointment while raising concerns about losses in certain group companies. Both Noel Tata and Chandra have sought the deferment of the decision rather than a vote. And the offer for sale for IRFC opens today for non-retail investors as the government looks to divest 2% equity in the company with an additional green shoe option of another 2%. The floor price for the OFS has been set at 104 rupees a share. Midweek is here. You're watching Power Breakfast right here on CNBC TV 18 in the Mumbai News Centre. I'm Hormus Fatakia. All eyes are on Donald Trump and his State of the Union address that is set to begin any time from now. And as you can see, visuals coming in from the Capitol where Donald Trump is going to take the stage in his State of the Union address. Mind you, he has already given us a warning that it promises to be a longer address considering he has a lot to talk about. So all eyes on Donald Trump and his State of the Union address. The US futures as of now are on the edge. No significant movements there, but the Asian markets have started off well, considering the overnight rebound that you saw on Wall Street, and you can see that on your screens as well. The Hang Seng is up 0.5%. The Taiwanese index too trading with gains of over 1% as well. Similar gains seen in the Kospi as well. So Asian markets are doing relatively okay as of now. And pull up the GIFT Nifty, and after yesterday's moves that we saw, the GIFT Nifty is indicating a positive start, if you could call it that, for our own markets as well. And let's set you up for the trade as well. Now, yesterday's session, despite the fact that there was red across the board, there were some positives, if you would like to call it that. The first positive being the fact that the Nifty managed to defend the 200 DMA on the downside. It defended that level and it saw a recovery of just around about 100 points from there. And from there, we built on to those levels. We managed to also close above the mark of 25,400. And leading that contribution was the recovery in Reliance Industries as well. That was one primary reason why the Nifty saw a recovery towards the last few minutes of the trading session. Now, of course, the overnight rebound makes a case for a bit of a pullback from the lows that we saw yesterday. Of course, the overnight rally on Wall Street is one reason. The software stocks that staged a recovery as well on Wall Street yesterday, that contributed, and that as a result could have an impact on the Indian IT companies as well. That saw a bit of a 1 lakh crore rupee rout in yesterday's trading session. So Nifty IT, and if Nifty IT moves higher, that will have a positive impact on the index as well, especially considering the fact that the other index heavyweights, be it Reliance, be it HDFC Bank, they have done fairly okay. They have done the heavy lifting. So if IT moves higher, that's a case for a rebound as well. Now, what is the important level? The 200 DMA near 25,300 of course becomes the most important downside level that you need to watch on the index. In case we move higher, of course 25,500 is the first level that the Nifty will have to reclaim and then sustain above it and then move higher, and then we take it forward from there. Now, for the Nifty Bank, that was one index that was holding the Nifty together at least until the first half before that collapsed from the highs in the second half of the trading session. And 61,000, here too it managed to defend that level of 61,000, and that will be an important one. And Tuesday's low, which is 60,800, which is an important level to watch on the downside. However, the Nifty Bank has made a lower high and a lower low on the daily chart. That needs to be watched out for as well. Today is the start of a new series. We start off with a clean slate. We have to also watch for a reaction in Tata Group companies after the developments that have emerged from Tuesday evening. So that needs to be watched out for as well. There are block deals that are there in Aditya Vision. IRFC has an OFS. So earnings are over. Block deals are back. and of course the reaction, if any, to Donald Trump's State of the Union address. So all eyes of course on that. We'll get to it as soon as Donald Trump begins to speak, but for now the GIFT Nifty is indicating a positive start for our own markets. It remains to be seen whether that sustains and we begin the March series on a positive note. Over to Upasna, the stocks to watch out for in today's session. Upasna, good morning.
Good morning, Hormaz. First up, let me start with Shuffler India. The net profit is up 36% on a YoY basis. It reported its Q4 numbers. Revenue has seen an uptick of 27%. Margin stood at 17.8 versus 17.3% on year-on-year basis. Next up is IRFC. OFS for non-retail opens today, and for retail investors will be bid tomorrow. The government is likely to sell 2% of the equity with a green shoe option of 2%. Next up is RVNL. It bags order worth 270 crore from Central Railways. Thus, hence, the stock will be in focus. Next up is Dr. Reddy's. SEC concludes investigation with no enforcement action against the company. Lupin will also be on our radar today as it receives approval from US FDA for the launch of an oral solution in US markets. Hexaware is the next one. It collaborates with Amazon Web Services to deliver AI-powered SDLC solutions. HG Infra is also the next one on our radar. It has declared L1 bidder by NHAI for a project worth 1582 crore. Wari Energies, Premier Energy is also on our radar as US to impose 126% initial duty on solar imports from India. Now, according to sources on Aditya Infotech, promoter and Dixon Tech is likely to sell up to 5.8% of the stake in the company via block deal. The offer size is set at 1,000 crores and the floor price is at a discount of 0.6% to the current market price. Next up is Hindalco. The company's subsidiary buys Novelis shares worth nearly 1,700 crore. And lastly, coming to Power Grid, the cabinet has approved raising Power Grid equity investment cap to 7,500 crore versus 5,000 crore. So all in all, we'll be keeping an eye out on all these stocks in today's trading session.
Upasna, thank you for that update there. Over to Sudarshan, who is joining in with cues from the F&O space just as Donald Trump has entered the arena. Sudarshan, take us through the F&O cues quickly before we go across to Donald Trump.
Good morning, Harmaz. So it was last day of February series and we did manage to hold on to levels above 200 DMA, and that was a good part for Nifty. And talking about the March series, it's the last series of FY26, and if you take a cue from the history, there is something to cheer about because last few March series we have seen big gains, except March 2021. If you take March 22 up 7.5%, March 23 up 5%, March 24 up almost 2%, even in March 2025 up 3%. Now, in the last few series, in February, in majority of the series, market has been range bound. In February, we have gained 250 points, but in January, we are down 760. In December, up 55. November down 51, and in October we had seen big gains of more than 1,300 points. Now in March series, Nifty rollover is below 70% versus 3-month average of around 72 to 73%. And if you talk about FI's long exposure, it's at multi-month highs. And as we start March series, long exposure is at 21%, and it's they remain heavily shorted. If you talk about the net contracts, it's at minus 1.07 lakh, and for client exposure, it's at 78,000 contracts. Now in the March series, what all would be the important trigger? First, Trump's comment related to tariff, we'll have to watch out for that. Second, what's the update on US and Iran talks? And lastly, in March, especially we see bump up in insurance data, that also will keep an eye on. And lastly is vehicle sales also, because normally in the month of March, we see a strong set of numbers.
We'll keep an eye out on all of these names. Sudarshan, thank you for that. Selfies, pictures, as you can see at the side of your screens as well. Donald Trump entering the arena, set to address the Congress on the State of the Union right now. A lot of talking points, of course, be it tariffs, be it the credit card limit, the cap that he wants to impose, the insurance sector that he has been after. Of course, you'd hear a lot on the Supreme Court verdict as well. It will be interesting to see how he approaches that. Geopolitical tensions with Iran, with Russia, with Ukraine, all of it. There is a lot that needs to be addressed, and you may hear a lot of this from Donald Trump, as you can see visuals as he's walking through the Capitol right now to address the Congress. And we'll be hearing a lot from this. And there has been a lot of chatter with regards to Donald Trump and his approval ratings being at all-time lows. He's been on this long truth posting bit on Truth Social with regards to tariffs. He also issued a warning yesterday to countries that want to quote-unquote play games after the Supreme Court decision. Remember, last Friday, the Supreme Court had rejected the tariff. Let's go across to the Capitol to Donald Trump.
Members of
Well, thank you very much, everybody. It's really an honor. Speaker Johnson, Vice President Vance, First Lady of the United States, Second Lady of the United States, members of Congress, and my fellow Americans. Our nation is back, bigger, better, richer, and stronger than ever before. Less than 5 months from now, our country will celebrate an epic milestone in American history, the 250th anniversary of our glorious American independence. This July 4th, we will mark 2.5 centuries of liberty and triumph, progress and freedom in the most incredible and exceptional nation ever to exist on the face of the earth. And you've seen nothing yet. We're going to do better and better and better. This is the golden age of America. When I last spoke in this chamber 12 months ago, I had just inherited a nation in crisis with a stagnant economy, inflation at record levels, a wide open border, horrendous recruitment for military and police, rampant crime at home, and wars and chaos all over the world. But tonight, after just 1 year, I can say with dignity and pride that we have achieved a transformation like no one has ever seen before, and a turnaround for the ages. It is indeed a turnaround for the ages. And we will never go back to where we were just a very short time ago. We're not going back. Today, our border is secure. Thank you. Today, our border is secure. Our spirit is restored. Inflation is plummeting. Incomes are rising fast. The roaring economy is roaring like never before. And our enemies are scared. Our military and police are stacked. And America is respected again, perhaps like never before. After 4 years in which millions and millions of illegal aliens poured across our borders, totally unvetted and unchecked, we now have the strongest and most secure border in American history by far. In the past 9 months, 0 illegal aliens have been admitted to the United States. But we will always allow people to come in legally, people that will love our country and will work hard to maintain our country. The flow of deadly fentanyl across our border is down by a record 56% in 1 year. And last year, the murder rate saw its single largest decline in recorded history. This is the biggest decline, think of it, in recorded history, the lowest number in over 125 years, year 1900. In fact, substantially before my wonderful father, I had a wonderful father, Fred, before he was born, substantially before he was born. That's a long time ago. He wouldn't like me to say that, but that's a long time ago. The Biden administration and its allies in Congress gave us the worst inflation in the history of our country. But in 12 months, my administration has driven core inflation down to the lowest level in more than 5 years. And in the last 3 months of 2025, it was down to 1.7%. Gasoline, which reached a peak of over $6 a gallon in some states under my predecessor, it was quite honestly a disaster, is now below $2.30 a gallon in most states, and in some places, $1.99 a gallon. And when I visited the great state of Iowa just a few weeks ago, I even saw $1.85 a gallon for gasoline. In 4 years and falling fast, and the annual cost of a typical new mortgage is down almost $5,000 just since I took office. 1 year. And low interest rates will solve the Biden-created housing problem while at the same time protecting the values of those people who already own a house that really feel rich for the first time in their lives. We want to protect those values. We want to keep those values up. We're going to do both. And we are going to keep it that way. The stock market has set 53 all-time record highs since the election. Think of that. 1 year. Boosting pensions, 401ks, and retirement accounts for the millions and millions of Americans. They're all gaining. Everybody's up, way up. In 4 long years, the last administration got less than $1 trillion in new investment in the United States. And when I say less, substantially less. In 12 months, I secured commitments for more than $18 trillion pouring in from all over the globe. Think of it, much less than $1 trillion for 4 years versus much more than $18 trillion for 1 year. What a difference a president makes. A short time ago, we were a dead country. Now we are the hottest country anywhere in the world, the hottest. As thousands of new businesses are forming and factories, plants, and laboratories are being built, we have added 70,000 new construction jobs in just a very short period of time. It's getting bigger and bigger and stronger. Nobody can believe what they're watching. American oil production is up by more than 600,000 barrels a day, and we just received from our new friend and partner, Venezuela, more than 80 million barrels of oil. American natural gas production is at an all-time high because I kept my promise to drill, baby, drill. More Americans are working today than at any time in the history of our country. Think about that. Any time in the history of our country, more working today. And 100% of all jobs created under my administration have been in the private sector. We ended DEI in America. We cut a record number of job-killing regulations, and in 1 year we have lifted 2.4 million Americans, a record, off of food stamps. And for all of these reasons, I say tonight, members of Congress, the state of our union is strong. Our country is winning again. In fact, we're winning so much that we really don't know what to do about it. People are asking me, please, 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 Mr. President, we're winning too much. We can't take it anymore. We're not used to winning in our country. Until you came along, we're just always losing, but now we're winning too much. And I say, no, 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 you're going to win again. You're going to win big. You're going to win bigger than ever. And to prove that point, here with us tonight is a group of winners who just made the entire nation proud. The men's gold medal Olympic hockey team. Come on in. ahead. Ladies. That's the first time I've ever seen them get up. And actually, not all of them did get up. But they beat a fantastic Canadian team in overtime, as everybody saw, as did the American women who will soon be coming to the White House. They were in the Oval Office before, and I just want to say a second very big congratulations to Team USA. But I have to say that, and I told them this, and we took a vote of the team. I said, anybody votes no, I'm not doing it. So they stood there, and they weren't about to say no, because I've never seen a goaltender play as well as goalie Connor Hellebuck. Think of it, 46 shots on goal, and I asked him, the one shot, the one where you put your stick in the back and it hit the neck of your stick and bounced off, do you practice that, or was that a little lucky? He refused to answer that question. But I just want to tell you that the members of this great hockey squad will be very happy to hear, based on their vote and my vote, and in this case my vote was more important, that I will soon be presenting Connor with our highest civilian honor, which we will be given and which has been given to many athletes over the years. But when I say many, not too many, like 12, it's called the highest civilian honor in our country, the Presidential Medal of Freedom. Great athletes have gotten that, very great, the best, and I thought he deserved it. And I did take a vote, every single one of them. I said, I'm not giving it if anybody goes no, and every single one of them rapidly put up their hand. So I want to thank you all. What a special job you did. What special champions you are. Thank you very much. I'm also pleased to say that the next time the Olympic torch is lit, it will be here in America for the 2028 Olympics, and it's the summer version right in Los Angeles. We're going to do a good job in Los Angeles.
Well, that is the live speech coming through from President Donald Trump at the State of the Union address. And, what we're going to do, of course, is, listen to the speech. Our team is going to listen to the speech and, we're going to put out anything which is, of course, important right at the bottom, and then we'll go back to it. Typically, the speech started at about a little after 7:30. It'll go on for about an hour or so. So this is going to run all the way till 8:30 our time, and we will be on it and let you know anything which is important in terms of what is said, etc. So far, of course, I mean, I think we've not seen anything market moving important from that perspective. I mean, I think he'll get to those portions a little later. Well, this is, a Bazaar Morning Call. We are coming to you live from the CNBC TV 18 Moti Roswal studios. I'm Prashant. Let me welcome in my colleagues, Rima and Nigel. Guys, hi, good morning.
Hi, morning.
Hi, good morning. New series. Let's hope it brings better tidings because Wall Street close was pretty positive.
Well, that's right. And, I think the February, though the series was more or less flattish, there are a couple of bright spots in terms of the broader market outperformance, the banks, as well as the flows. But we'll talk about that, Prashant. Let's get straight to the action.
Absolutely. And I think it's a little better, just a little bit better compared to where we were yesterday, same time. But, yesterday, same time as well, we were down, 1%. We woke up to a 1% correction on the NASDAQ. But there were other problems, right? I mean, software stocks selling off. So it's across the board on all parameters, a little better. Now, let me just take you through what really happened. So that's the final close. S&P 500 up 3/4, NASDAQ up 1%. So basically recovering from the fall that we had the prior day. And the rebound, I mean, the tech sector giveth, the tech sector takes back as well. And it's been that cycle, right? I mean, a little bit of recovery, sell-off, recovery, sell-off. I mean, the S&P, it's been 4 months now, if you think about it. And there's been so much violent dislocation across sectors in the US. But for all of it, the S&P has not gone anywhere for 4 months now. It's basically at around the similar kind of levels. So that's the final close. Dollar index went up a little bit, about 0.19% higher to about 90, just under 98 on the dollar. Gold and silver futures flat. I'm just sort of ticking through some of this stuff to tell you why, not what happened, but what did not happen, which is, big action like day before. So gold, silver, absolutely flat. The 10-year was unchanged, 4.03. Oil, little changed at about 71.47. Just in terms of single stocks, Meta announced a $100 billion deal with AMD. AMD stock was up about 8.5%. We'll talk more. PayPal was up 7%. There are reports that Stripe wants to buy it. And we'll see if the deal materializes or no, but there was that. Now, Anthropic's Claude, essentially, they announced that it's expanded its chatbot, the Claude chatbot, to build partnerships in the software and the services sector. And, the market kind of took that away to mean that maybe, this is working with the software services sector and not trying to replace them. So this is partnerships, and that is something which the market likes to hear. Now, we'll have to delve into it in terms of what this would really mean. Is this a change in direction or anything? I don't think so. There was the Anthropic event last night, and this came through from there. This was basically mentioned there, and the reveal happened in terms of these new chatbots, new functionalities, etc. happened. But the market lashed on to the point of partnerships, and it kind of said that we want to. And this is what the Anthropic CEO told us in that interview with our colleague Shriram in Delhi when he was down for the AI summit, that we don't want to replace, we want to work with all these companies. But in any case, the market lashed onto it last night. Nvidia reports earnings tonight, that is, after markets close, after US markets close. But that's always an important bellwether for this entire AI trade. The software stocks, a cursory look, I think it's become important to take a look at this. And Infosys was flat. Wipro ADR was down about 2.8%. EPAM was down 1%. Accenture down 2%. Cognizant was absolutely flattish. Globant was up actually about 1.8% or so. So that's it's better than the handover at the same time this morning, but nothing very significant in that sense. Now, I'll just tie in the levels here. The Nifty, of course, remains within the channel, the downward sloping channel. Day before yesterday, we had a big pop. Yesterday, we had a big sell-off. So we are in that range. The midpoint of that range, the downward sloping channel, is 25,500. And I think, where we open, on what side of that 25,500 level we open, I think is important. And then where we head from here is very simple. 3 levels, 25,500, 500, the midpoint. So that kind of becomes the pivot. The lower end of the channel is 25,230 because it's downward sloping. The numbers change a little bit. And the upper end is about 25,780. So we've been in this for the last 3-4 days now. And we need a break on either side. And then we can open up discussions on what happens. But so far, there have been big moves, but we've been ranged here. GIFT Nifty gives you a quick sense of how we're likely to start before we go anywhere else. It's up about 80 odd points. So reacting to slightly better cues from last night. Let's look at the positioning and how we are set up. Nigel has walked across to the wall. Nigel, over to you.
Well, Prashant, before I get to the positioning, one bright spot in February is that the FIs, they have turned buyers after a 4-month break, and they're also on course for its highest monthly inflow from the FIs after many, many months. And that chart should come up for you on the screen. What we're tracking right now is the February month, the FI flows are close to around 20,000 crores. This is data coming in from the NSDL. Now, February was a positive month for the Nifty, which was supported by banks. It was dragged down very, very aggressively by the tech index, though. But the biggest positive was that after a while, the broader markets actually outperformed. And that's the reason your portfolio will be feeling a little bit better. Now, March series has been a positive series more often than not, with the Nifty delivering, positive returns 80% of the times over the last decade or so. So the bulls will want a positive series in the month of March, but keep in mind that seasonality factor will play out in the first part of March. That is, there'll be some kind of rejig that takes place, and that's where parts of the broader market will come under pressure. So just keep that in mind. But on the whole, March could be a positive series. Rollovers as well a little lower as the Nifty as well as for the markets on the whole. In comparison to, the 3 series average, both for the Nifty as well as the market-wide positions, rollovers were a little bit lower. And that explains why the Nifty futures open interest, it's a little lower in comparison to what we saw at the start of the February series. So we're starting the series a little bit lighter than earlier. So, that's actually not such a bad thing. The FI short positioning at the start of March, well, that's the lowest we have seen in percentage terms all the way since July 2025. So yes, they're short with 79% of the positioning on the short side, but that's much lower in comparison to the earlier series, as you can see. Clients, they remain net long, but they're lighter in comparison to the start of the earlier series as well. The client long positions is what we're looking at. The Nifty, it appears that we are in this broad 1,000-point band, 25,000 on the downside, 26,000 on the upside. But in terms of the near levels, I'm looking at the 20-day. It comes in at around 25,600. That's the important mark you want to, look at. And on the downside, you don't want this level, that's a 200 DMA, to get broken very, very decisively. The Nifty Bank will have to continue its good form, as we have seen in the February series itself. And the bulls will be banking on the Nifty Bank to take us over the line, in terms of continuing its good form. However, the Nifty IT index, that's going to be very important. 22% down in a single month. The open interest has swelled up big time. If you compare it with what we saw earlier, open interest is up between 30 to around 40%. And you have the stocks that are down 25 to around 35%. Something's got to give. Maybe there is some room on the downside, but I think the bias will be on the upside from there on. Just a near-term technical bounce. The trend is still very much lower, but otherwise, I don't think you should rule out a technical bounce on the Nifty IT index from those oversold levels.
Thank you very much. Yesterday, the flows action was also interesting. While the Sensex was down more than 1,000 points, Nifty nearly 300 points. If you look at the cash market flows, the FI sold only 100 crores, while the DIIs bought more than 3,000 crore in the cash market. But yet we had the market sinking. So where did the big selling come from?
So, Rima, just one point. The reason why I didn't refer to that particular number is because it's sometimes you have the expiry-related factor, right? Because the position between futures as well as cash. But as you said, yes, I mean, for the kind of sell-off that we saw, we didn't see any big sell number,
big selling,
which is good. And the NSDL data says the FIs have turned buyers, so okay, we want them back. They're back for now.
All right, let's see how the March series panned out. The last 4 March series, the Nifty has clocked in positive returns. Let's get to the equity calls then. It's Sayan Mukherjee of Nomura who says the Indian market has continued to underperform global peers. He says the Nifty is down 3% in dollar terms in 2026 so far, and the drawdown in Nifty is largely driven by IT services, which is down 15%. He says AI-related disruptions have raised market concerns on deflationary pressures on Indian IT services company, and they are not that bearish on the outlook and think the concerns are premature and overdone. This is all on IT. He expects IT companies to realign and gain from new business opportunities with these assumptions. He thinks the risk-reward is favorable and retains his positive view. They're also positive on financial, cement, consumer discretionary, auto ancillaries, telecom, pharmaceutical, so broadly the domestic play, and they maintain their December 2026 Nifty target of 29,300. So that's a good 4,000 points upside from where the Nifty closed yesterday, which was about 25,400. Let's get in Hartmut Essel, head of APAC Equities Global Wealth Management, Chief Investment Officer at UBS on the show. Thank you very much for joining in. Hartmut, I guess you were listening in to the State of Union address by the Trump before we got you here on the channel. Anything that stood out for you? Anything that popped?
No, look, I mean, I think we're watching the tariff side. That's the one that's most interesting for us, right? Especially on the macro side, right? So let's see if we hear anything more sort of earth-shattering. But that's really where we stand, right? We want to see what, how things develop there.
All right. What about an Indian IT? What is the UBS call, especially from your vantage point, where you can compare Indian IT with what's happening across the AI tech plays in the other emerging markets? Now, we've had a massive sell-off. In the month of February, in rupee terms, the Nifty IT index is down 21% already. What is the call you all are taking at UBS?
I have a more positive view, I must say, especially now, when these stocks have actually drifted a bit south, so to speak, right? And much more rational here, right? So on the one hand, you have one camp that says, okay, AI is coming in, right? So there's a lot of displacement, all these things are happening. But then if you think about, right, say from an India IT services standpoint, right? So what are their clients saying, right? So global companies, right, like ourselves, maybe even, but certainly many others. What are they saying, right? They're saying that right, we are trying AI, we're experimenting, but to really get the benefits, somebody has to integrate our backends, right? Without that, right, no data processes, and that we're really getting the benefits out of it, it will not happen, right? So the question is, who does that integration, right? Will it be a new AI company? Most likely not. Will it be hyperscalers in the US, right? Also most likely not. So who would it be, right? And that's also why we're seeing, I think, all these partnerships, right? That with between AI companies, including the IT services companies. So there's no coincidence. So from my point of view, right, they are needed. Look, I've seen previous tech cycles. It's not the first tech cycle I see, right? So far, we've always seen, including the Indian IT services companies, right, playing a role in this cycle. So it would be the first cycle where this doesn't happen. I find it a bit difficult to believe. So I think actually it's not a bad timing to pick up some of these names.
Okay? Apart from this, so there is the AI bit, there is the Trump bit. What else? I mean, how are things looking to your mind, Hartmut? I mean, just in terms of where money is flowing and where action is likely. Which parts of the globe and which asset classes and which particular specific themes, really?
Yeah, certainly. I mean, to stay with the equity side, would be like global equity. So that includes many regions. It includes certainly also the US market, right? It includes Europe, but certainly also the APEC. And within APEC here, also India, we have on attractive. So we see upside here on the markets. Could be even mildly double digits towards the end of the year. That wouldn't surprise me at all. But let's compare it also, right? We mentioned, or we heard here also early on the program, money flows, right? So at least from that point of view, it looks a bit better for the Indian markets again, right? You can always make that argument, from a valuation point of view, it's one of the higher ones, right? I mean, it always has been, right? But at least over the last couple of months, I would say certainly 12 months, right? We've actually seen the Indian market sort of also going up, but lagging a bit for the other markets. So that means the valuations of the other markets, in many cases, also here in APEC, right, say North Asia, for example, right, have actually caught up a lot. So that makes it a bit easier again in that environment for India also to not stand out as a particularly high valuation, but the premium has actually come off to some extent. That is one area I look at.
Hartmut, we leave it there. A good conversation, quick one. Thank you very much for joining us. I think we can cut back to President Trump. He's addressing tariffs.
Congressional action will not be necessary. It's already time-tested and approved. And as time goes by, I believe the tariffs paid for by foreign countries will, like in the past, substantially replace the modern-day system of income tax, taking a great financial burden off the people that I love. Right? Moving forward, factories, jobs, investment, and trillions of dollars will continue pouring into the United States of America because we finally have a president who puts America first. I put America first. I love America. For decades before I came along, we had the exact opposite. from trade to healthcare, from energy to immigration. Everything was stolen and rigged in order to drain the wealth out of the productive, hardworking people who make our country great, who make our country run. Under Biden and his corrupt partners in Congress and beyond, it reached a breaking point with the Green New scam, open borders for everyone. They poured in by the millions and millions from prisons, from mental institutions. They were murderers, 11,888 murders. They came into our country. You allowed that to happen.
Okay, I mean, there is a fair bit of course, as is expected, as is customary in State of the Union. I mean, it is about gloating about one's achievements, and that is that all presidents of both aisles have done it, and so is President Trump. But, there's just one thing. Tariffs will replace income tax as time goes by, and congressional action will not be needed on tariffs. Those are the two things that we want to just put out. Yeah, there you go. Apart from, of course, all the self-congratulation with regards to everything else. We'll keep dipping in and out, and we'll put out the basic important highlights from it. Let's take a quick commercial break here, and we'll come back with more on this one. I just want to quickly put out the interactions which are lined up in the next 2.5 hours. So you'll hear from the Jubilant Foodworks' management. So not just about that company, but QSR in terms of how it's evolving. That's coming up at 8:35. Aditya Valekar of Axis Securities will be with us at 9 o'clock. We have 9:20 Pratik Gupta of Kotak Institutional Equities, our market march of the day. 9:30 IRFC management to talk to us about how the government set to trim stake up to about 4%. We'll ask them about those plans. Genus Power management at 9:40. Interesting company there. And 9:50 we bring you a discussion of the latest developments in the Tata Sons board meet saga. This was, of course, with regards to the reappointment of N. Chandra, which has not taken place yesterday. So we've got a discussion coming up with InGovern and Mr. Jain Gupta, former SEBI official. Towards the end of the program, Lata in conversation with Chetan Iyer, Chief Asian Economist at Morgan Stanley, and how Asian and Indian economic growth will pan out in the backdrop of changing tariffs.
Time to slip into a quick break, but we've got a lot of stock-specific action to track for you today. We get to that in just a bit in our special Top 10 segment. We're looking at Biocon, Schaeffler, HCLTech, as well as Capillary Tech. All of them will be reacting to positive news flow. While you'll have IRFC, Dr. Reddy's, Wari Energies, Vikram Solar, Afcon Infra, as well as Aditya Infotech that will be reacting to negative news flow. Take that break, come back. We get into further detail on all of these names.
Welcome back. It's a Wednesday morning and it's time now to tell you about the stocks that you should have on your radar as we get set for another day of trade. And the Gift Nifty is suggesting that it's going to be a positive start, aided by the rebound in Wall Street, where Nasdaq ended up with a gain of 1.1%. The S&P 500 up 0.8%. Asia is also largely positive. Let's get to our team then. Hi guys, good morning. Hormus, let me begin with you. IRFC and Aditya Infotech.
IRFC, the much talked about PSU name for 2023 and a better part of 24 as well. The OFS opens for subscription for non-retail investors today. The government plans to sell 2%, additional green shoe option of another 2%. The floor price is 104 rupees, which is a 4.5% discount to yesterday's closing price. And based on that floor price, a 4% stake sale could fetch the government close to around 5,500 crore rupees. And then IRFC has been a bit of an interesting one as well. The government has 86% stake here, so a 4% sale will bring it down to around 82.5, and even then they'll be still higher than the minimum shareholding compliance. So the excess stake that they have currently is well over 14,000 crore rupees as of now, based on the current market price. And the stock itself made an all-time high of close to 230 back in 2024. It's down almost 52% from those levels. So expect some bit of red on IRFC at the start. The OFS will open for retail investors tomorrow. And the other one, of course, is Aditya Infotech. Is a recent listing here. There is a block deal that's going to take place. The sources have said that promoters and Dixon Technologies is likely to sell close to 6% stake. The deal is valued at close to 1,000 crore rupees. The floor price is almost the same as yesterday's closing. And as a stock as well, Aditya Infotech is well up over 100% from its IPO price of 675 rupees. So some supply at the start. The start of with red for Aditya Infotech as well. May see some recovery if there is buying from big names in the block deal.
All right. Thanks very much, Hormus, for that. Yeah, I mean, so we'll just focus and pay attention to those stocks as they open up. Well, Biocon and Dr. Reddy's are the next we want to focus on, and Ekta has got details here. Ekta, good morning.
Morning. I'll start with Biocon, since you mentioned that. I expect the stock to possibly see some green today because they've got the US regulator nod for liraglutide injection, which is one of the GLP drugs, but it is older in terms of a formulation as compared to semaglutide and tirzepatide. So while it is an important approval, remember that it is already, there are newer forms of the drug which have been used. Now, the drug is used in treatment of chronic weight management, market size around $127 million, and Biocon has received approval for liraglutide in the UK in 2024. It's a good approval, but it's not extremely game-changing, you would have to say. Now, for Dr. Reddy's, they are in focus because they disclosed that there was an initiation of an investigation which took place in 2020, which is into anonymous allegations of improper payments to healthcare professionals in Ukraine and potentially other markets. Now, the US Securities Exchange has stated that it has concluded its investigation and does not intend to recommend enforcement action at this time. So positive news for Dr. Reddy's, but it does not exonerate them totally and does not preclude any future action. Additionally, however, there's more news. Novo Nordisk has cut its list prices of Ozempic by 35% and Wegovy, which are again semaglutide, weight loss and diabetes drugs, starting from Jan 2027 in the US. Citi says that the company may opt for similar price cuts in markets like Canada and Brazil. Remember, Dr. Reddy's is a forefront runner for the Canadian markets for semaglutide, and hence we could possibly see the stock under pressure on account of this. So good news and bad news for Dr. Reddy's. Let's see which one weighs at the end of it.
Okay, all right. Thanks a lot for that. Ekta, well, let's hop across to Vinny. She's in to tell us about Bharti Energies as well as Vikram Soda. Not too great news coming in, right, Vinny?
Yes, hi, good morning. Not so great news coming in for the solar cell players. Mainly, US has set an initial duty on Indian solar imports at 126%. Now, obviously, this is the initial rate that they've decided on. The rates have been determined and decided on the foreign subsidies that are allowed to these exporters. And mainly what the US Commerce Department is saying that solar imports from India in 2024 were worth around $792 million, which is 9 times more than what was in 2022. Now, obviously, exposure in terms of export market, Premier Energy is not, they have 0% export. So not an impact coming in, at least for Premier Energies, but Bharti has 17% exposure to exports. Vikram Solar has 16%. Do not forget that, Bharti Energies does have a plant in the US as well. So how will that work, or how much is the share going from there will be key to watch out for, but surely a negative coming in for Waaree as well as Vikram Solar.
Thank you very much for that. And as she pointed out, Premier Energy is unaffected by this news. Schaeffler India came out with numbers. Sudarshan joins in with the fine print.
So overall, it's been a good quarter for majority of the auto ancillary companies. Now, Schaeffler India has come out with its Q4 CY25 numbers, and it's been a good growth that company has seen. Revenue has seen a double-digit growth, and that's been led by the biggest segment, that's the automotive technology, which has seen a growth of almost 41%. And when intercompany exports, which is not the biggest contributor, but that too has seen a growth of more than 51%. And that has resulted in company reporting revenue growth of almost 27%. EBITDA too has seen a jump of almost 30%, and margin has improved by almost 40 basis points. It has come in at 18.5%. Company has reported even an improvement in gross margin, and that too has hit 40% versus 37%. So on the back of a good set of numbers, I'm going with green for Schaeffler India.
All right, thanks very much. So for that, Schaeffler in focus. Well, more stocks with news flow. Winnie's back. Winnie, good morning.
Hi, morning, Prashant. Firstly, we talk about Hexaware Technologies. We're expecting green here after the company has expanded its tie-up and strategic tie-up with AWS. This is mainly going to be focusing on AI-enabled software development, life cycle capabilities to enterprises worldwide. Other than that, this will help them accelerate cloud adoption, application modernization, as well as AI-led transformation. At a time when everyone's talking about AI, this is a bit of a positive coming in for Hexaware Technologies. Capillary Tech, that's the next one as well. The company has acquired MasterCard's customer loyalty as well as rewards business Session M, and this is an all-cash deal of around $20 million. This acquisition was in line with the strategy that the company had planned in terms of strengthening their presence in North America as well as Latin America markets. Given that this will strengthen their presence there, it's a bit of a positive here. Afcons Infra, that's the last one. We'll expect red on the screens here after one of its clients, SAG, has issued a notice for terminating an EPC contract where they'd already completed the work of around 93-94%. The project was completed, and this is as on date of 31st December 2025. 93% of the work was completed. Now, despite that, there is a termination in terms of contract. The value of the contract is around 113 million euros. So it is an important one because they are going to be taking some legal remedies and pursue some contractual remedies on this front as well. So it will be key to watch out for, but right now it's a negative for the stock.
Thank you very much for that. And I will also generally watch for all the three Shapoorji listed companies in India. That's Forbes, Afcons, and Sterling and William. Afcons, of course, is separately fundamental news. But in the board meet yesterday, what we learned is that Noel Tata has sought commitments for the reappointment of N. Chandra. And one of them is that Tata Sons should settle matters with Shapoorji Pallonji Group. So let's see whether that has a positive impact. Forbes, Afcons, and Sterling and Wilson are the three companies there. But let's get a complete roundup of all the action from the commodity and currency space. Manisha joins in as always. Manisha, hi.
Hi, morning, and thank you for that. Well, I'll start with the crude oil prices, which seem to be holding gain, and this is ahead of the third round of U.S. and Iran negotiations in this week. Well, the U.S. 10% tariff have come in effect on Tuesday, that is yesterday, and the street is looking at the passing of 15% of tariffs going forward. So some uncertainty continuing into the markets because of that one. But China is back into action, and we are looking at that and many of these metal prices. To begin with, it is the precious metals where China has gone in for some profit taking. So gold fell nearly 2% overnight. Silver was down 1% as well. And the Asian markets right now are trading slightly under pressure as well. It is the base metal prices which have continued to do well. The strong long-term demand estimates and the expectation of demand from electrification, data center, all of that has been quite supportive. So you have copper prices gaining 2% in last 2 days. Zinc is near 3-year highs. Tin price is very close to its all-time highs. So it is the base metals that should be on focus. Gains, good gains coming in for this one.
All right, Manisha, thank you very much for that. Commodities in focus there. Well, 30 minutes to go for the pre-open session. We are joined by, as we said, the management of Jubilant Foodworks on the other side. So quick sense of how that business is doing, but of course also the wider QSR space. So Samir Khetrapal of Jubilant Foodworks coming up.
Welcome back and hope you're having a very, very good morning. Well, as promised, let's shift focus to the QSR space. From the sidelines of the Kotak Institutional Equities Chasing Growth Conference, my colleague Mangalam caught up with the management of Jubilant Foodworks and started off by asking about the green shoots in the sector. Let's listen in to a slice of that conversation.
I think for me, there is enough demand that we can capture. We are in a $60 billion food services market. 2/3 is unorganized. Pizza is just $1 billion. So it's always very hard for me to look at a very small category that is eaten thrice in a year by just 50 million customers and say the demand environment is booming or not. What we have worked on is 20-minute delivery, menu innovation, free delivery, making sure that we are present on IRCTC to a Giridih and a Shasharam. Those are the pieces that are working for us, and we see very strong demand and growth based upon the initiatives that we have taken.
So you had said in your post-earnings call that, December's momentum has continued into January. Has that continued into February? And to that extent, in the next couple of quarters, what's the kind of LFL that we can expect?
See, what we are building is the following, right? And we want to build a 5 to 7% LFL business, add 8 to 9% of organic store growth. Together, it is about 13%, and Popeyes adds about 1 to 2 percentage points. So we are building a 15% revenue and 15% EBITDA business. That's kind of the business that we are building. One quarter here and there, I think we are lapping a very high basis. I think was the last quarter we grew 5% on a 12% base, which was, I think, very high number. January was very good, and I think the momentum we'll wait for the March to end around the Holi to.
So 5 to 7% LFL is what something that the street should pencil in going forward on a consistent long-term
basis is what, right? I mean, I want to say that the self-help initiative that we have taken allows us to kind of get to and if you look at last 10-year average, Mangalam, we have grown the company at about 11.5% CAGR in revenue terms. And the simple average of LFL is 5.5%.
Got that.
So I think we've always delivered that.
All right. What about the current trends? If we look at it in the sector, there has been consolidation. Devyani and Sapphire have decided to merge. There has been a new owner that has come in for Restaurant Brands Asia. At the same time, there are a couple of these 15-minute players who've shut shop, citing economic, lack of economic response, so to say. What is the sector doing right now? How is that impacting your performance, or how is that likely to impact what your strategy is?
I think this augurs well for Jubilant Foodworks. That's what I see. I think my sense is sector was overly beaten because the potential of India, whether I'm not even saying long-term, short-term, medium, the potential is intact. Right? When we open a store in an IIT or an engineering institute or an MBA college, we get massive sales. We are penetrating into Giridih, Shasharam, we get very strong growth. So I think the potential and the reality is there. Consolidation will help, in my opinion, getting more efficiencies, and therefore is good news for consumers. New players coming in, buying into sector is there. My own sense is a lot of competition that came in after COVID, and as aggregators grew, that should consolidate, that should little bit get more sense. And as discounting and other profitability as a marker becomes more important, I see good times for brands like Domino's.
Good times for brands like Domino's. Where does the next 1,000 Domino's stores, how do they pan out? Are you looking at it in cities? Are you looking at it in places which don't have the access to Domino's? Because when one looks at, say, a metro like Mumbai, it seems like the penetration is fairly high. Or when one looks at, say, a tier 3, tier 4 town where there is no access to Domino's, the excitement of a Domino's store opening is fairly high. So how do you balance that?
I think so for us, there are 3 vectors of store growth. First one is cities like I mentioned Giridih and Shasharam, right, where we are the first QSR to enter.
Got it.
For context, we are present in about 510 cities. Maruti dealerships are in about 2,000 plus cities. So with a huge runway to grow in these cities. Second, in existing cities like Jaipur, we only cover 40 to 50% of the city.
Got it.
Right? So these are all green spaces. And third, in existing large metros, take for example Gurgaon. There were 30 stores about 3 years ago. We have now 50. And we think we can add another 20 And in the process, the frequency of pizza eating in Gurgaon has gone up from 3 to 3.5.
Got it. So
Right?
more stores
So
did
more
not cannibalize.
more stores actually lead to better experience, hotter pizza, 20-minute. We were together when we launched 20-minute.
Yeah.
If we do it consistently, that drives frequency and higher market share.
All right. And what does that do to your margins then?
Yes, it should improve. I think we are ultimately, we'll reduce our expenditure in supply chain, in G&A, faster deployment to technology. So it should ultimately lead to better margins for us.
What's your aspiration here over the next 4 to 5 years? What kind of margin should you be at?
So I think, like I said, we are building a 15% revenue growth and 15% pre-Ind AS margin. That's the company that we want to operate 15-15. And we had already said based on a FY 2024 base, we want to grow 200 basis point in PAT.
Back. The other big story is Tata Sons has deferred the decision on Group Chairman N. Chandra's term extension till the next board meeting, which happens in June. Sources say Tata Trust Chairman Noel Tata asked for certain conditions to be linked to Chandra's reappointment, and he also raised concerns about the losses in certain group entities. I presume he was referring to Air India and etc. In fact, let's listen in to what N. Chandra had to say, and later Parikshit will also join in with more details on this.
And can you give us the outcome of the meeting, please? Yeah. We have been standing since morning. We have really worked hard while being outside.
So it's a news that your reappointment
No. I recommended it should be deferred because that was a request made by one of the directors.
From the promoter side, from the trust side, were there issues raised, Chandra?
I'm not
All right.
But so the part where it was said that, you know, the performance of every company of the group, there was a lot about that also. Any comment on that, sir, that how one company's performance cannot be a benchmark?
No.
All right. What changes for Tata Group, Chandra, from here? What changes?
Nothing changes.
Okay, so that's N. Chandra saying that he requested a postponement of his tenure extension talks, but he was tight-lipped on the conditions or perhaps some sort of tensions between Tata Trust and Tata Sons. Parikshit is now joining in with more details, and just to get an indication of the kind of commitments Noel Tata asked for reappointment of N. Chandra.
This was supposed to be a routine board meeting of Tata Sons, especially because 6 months ago, the Tata Trust had recommended the reappointment and extension for N. Chandrasekaran for another 5 years. His term ends in February 2027, and he would have got another 5 years if this board meeting had gotten off smoothly. But what happened was very dramatic. While there were certain board members strongly in favor of N. Chandrasekaran, Noel Tata, the chairman of Tata Trust, raised certain objections. He said, things have changed. Yes, the Tata Trust may have recommended N. Chandra's reappointment, but we have to look at what has happened in the last 6 months. He spoke about losses in Air India. He spoke about the changed global atmosphere, the impact on TCS. He spoke about the impact of artificial intelligence on Tata Group companies. There were also questions raised about whether N. Chandrasekaran can give a commitment that there will be no future investments in risky projects which could harm the liquidity of the company. The second major condition was that Tata Sons should never be listed. Remember, Tata Sons has surrendered its NBFC license, and the RBI now has to take a call whether it will accept Tata Sons' proposal to remain an unlisted entity, which is an exception from its rules. So now that is something that the RBI can only decide. The third condition was that Tata Sons should settle all matters with Shapoorji Pallonji. Now, these were conditions that other board members and N. Chandra could not agree to immediately. There was a discussion on a vote as well. Some board members wanted a vote on the proposal to extend N. Chandra's term. And that's when N. Chandra said that when it comes to the Tata Group, it has two pillars, Tata Trust and Tata Sons, and they work in a united fashion. If there is no consensus right now, let the matter be deferred. So quite dramatic what we saw yesterday. The meeting started at about 11:30 in the morning, went on till about 5 in the evening. So for the moment, N. Chandra remains at the helm as chairman. The next board meeting is June. Let's see if there is consensus till then. But clearly, this kind of uncertainty will be an overhang on other Tata Group companies as well.
Well, the good thing is there is still one more year. His term officially expires in February of 2027. So there's one more year to perhaps get the realignment between Tata Sons and Tata Trust. So that's, thank you, Parikshit, for joining in with the latest there. Deven Choksi, Managing Director at DR Choksi FinServ, is now joining in on the show. Thank you very much, Deven, for joining in. Do you want to first tell us your analysis that US has imposed those extra tariffs about 125, 126% on solar imports, and that could hurt companies like Avari Energy or a Vikram Solar? Have you all done any analysis on this?
Yeah, good morning, everyone. Well, not clearly, I think, how much it could possibly result into impact to the respective companies, not immediately calculated. But yes, I think we are watchful about how the export business are going to be playing out going forward. So certainly, I think early for us to make any early comment or on the impact, etc. But I think we are watchful about the situation, looking into these companies.
This Physics Wala, have you analyzed the company? It's trading below the issue price. I mean, the current market price is 91. The high that the company hit post-listing was about 161, which means it's fallen 44% from its recent peak. Now, we keep talking about the impact of AI on IT services company, but it's going to disrupt other sectors, for instance, education. Instead of paying, say, a Physics Wala for understanding the course material, maybe you can get it done through AI and the various LLMs. Have you all done any analysis on, say, Physics Wala or the impact of AI and how it can disrupt other industries other than services?
In fact, I think the AI should be an enabler and not a killer in this case, in my viewpoint. But having said that, I think the major concern to the market is always on the valuation. The current profit versus market cap ratio, if you look at, I think that's where probably I think the major challenges are. When you are not getting the valuations right at that point of time, I think any small fear, I would call fear, could also result into I think fall in the market capitalization. That's the victimization that we are seeing across many companies, and this company will be one more. In fact, I would think that AI could be a good enabler for many of these companies, which are platform-based companies, which are extending, in this case, education. They could possibly be, I think, driver to this entire driver of this technology to the entire student fraternity. So one will have to look and see how exactly I think they play out with their programs in this case. But more or less, I think we believe that yes, I think there is going to be an opportunity and not otherwise.
Got it. Hi, Devin. Good morning. Good to see you in. Devin, yesterday, even in a weak market, the metal stocks were glittering. You have liked Vedanta. Still like it?
Yeah, Nigel, I think we continue to believe that the white metal commodities, I think they are definitely going to remain strong. The demand position for them is remaining strong. And one important aspect, which is basically working in favor of most of the metal companies, they have basically moved significantly with the captive power on the renewable side. Now, this is where probably you are talking about improving the margin along with the demand situation improving. The margins are resultant improvement into the balance sheet performance of some of these companies. So I agree that I think it's a full capacity of the power is not fully backward integrated at this point of time through renewables, but I believe that I think they are on the course of it. So we like to believe that we would like to believe that I think these companies probably eventually would have a significantly lower per ton cost of power vis-a-vis what they are currently spending. And that is where the directional call, as far as I think these businesses are concerned, remains positive. On one side, demand signal, on other side, profitability improvement. As a structural call, we see happening for most of these companies. And Vedanta definitely is also the candidate for the demerger related story. So certainly, I think one would remain invested into this company.
Clean Max Energy, do you all have a recommendation on this? This is again a renewable play, but unlike selling to discoms, they directly sell to corporate clients, so higher margin. They've locked in 20-year plus contracts. They've got a bit of an AI data center play with more than 40% of the contracted power going towards AI and data centers, including companies like Google. Today is the last day to close subscription at DR Choksi. Do you all have a view?
Yes, I think we are putting a subscribe view and we like this particular business model. So certainly this company looks relatively more favorable. Not completely sure about whether I would like to talk immediately on the valuations, but I believe that as a business model, the company looks absolutely very promising.
You know, there are many companies, Devin, which, many stocks, which have fallen 30, 40, 50, 60% from its peak levels. Say an Inox Wind or a Yatra, and many others. And I'm sure you all have been constantly doing the research to find out stocks which have fallen more than their fair value. Can you identify a few of them for us?
Yes, I think you're spot on. We have been looking at some of the good quality companies which have fallen significantly, likes of Bajaj Housing Finance, which has now started coming down closer to a realistic price to book value ratio from what it used to be to I think what it is right now. The stock is currently probably 15% or so. I think they are 20%. I think they are above the public issue or the IPO price. So this is one company which looks good, continuously growing at a significantly better rate of growth. Tata Technology, again, I think a very strong moat as far as the business is concerned. Almost near to the IPO price, the stock has come down to after touching 1400, 1500 levels. So certainly, I think makes more sense to buy some of these companies in the portfolio. I believe that I think many companies in the market today have started getting attracted now with the valuation. So I think the downside risk in these companies are protected. Maybe I think the upside triggers will have to be searched in some of the cases, but we like I think the opportunities at the current level in some companies with a 2 to 3 year view from here on. These companies look reasonably good from the investment perspective.
Any others? So Bajaj Housing Finance is one. Tata Tech is another one which has seen a sharp collapse. Any others that you'd like to highlight? And you want to compare Tata Tech for us over, say, a KPIT Tech or a Tata LXC, which are also in a similar space of ER&D?
Yeah, true. I think ER&D space agreed. But I think the Tata Tech, the business model we like more because starting from conceptualization of the vehicle to designing of the vehicle and designing of the manufacturing facilities to the production lines and sales and distribution, and finally after sales service. The entire program that they do for their customers, the OEM customers, is an end-to-end program. And that is where probably I think they comparatively differ from the other names which you have mentioned. The other two names, I think they have niche in some areas, but I think here are this company is a complete platform builder for majority of their OEMs, including JLR, including BMW, with whom they have got a 50-50 joint venture. So yes, I think the moat is very strong in this case, and that's where probably some of the European majors are likely to look at this company very favorably after BMW tariffs. So we remain relatively more confident about the prospects going forward.
Thank you very much, Deven. This was a helpful conversation. Thank you very much for joining in. CleanMax also, they have a subscribe rating on this IPO. It closes today. Get into a break on that note. On the other side, we'll find out what the technical trades should be this morning. Prepare for a bit of a rebound after yesterday's sharp 290 fall on the Nifty. Welcome back. Let's find out the big movers yesterday. Stocks which saw very heavy volumes. Hormis, as always, joins in with that list. Hormis, I suspect there would be quite a few IT names because the rout eroded 1.2 lakh crore of their market capitalization all in a single session.
IT stocks, indeed, there is a big rout that we saw yesterday. And we were talking about this during closing as well. At least for every IT stock, at least 50 to 60% of the total shares that were traded were marked for delivery, even in yesterday's trading session. But the list today is slightly different, and start off with an outperforming name is Polycab. And Nigel was also mentioning about this yesterday, about the fact that the stock being at a 52-week high in an otherwise weak market in yesterday's session has gained in 6 out of the last 7 trading sessions, in fact. And yesterday's volumes were the second highest in the month of February for Polycab. Close to 9 lakh shares were traded yesterday, the 20-day average being close to 2.5 lakh shares, and 60% of the trading volumes in Polycab were marked for delivery in yesterday's trading session. Close to 5 lakh shares marked for delivery, 20-day average just being 1.5 lakh. And on February the 28th last year, the stock had made a 52-week low of 45.55, and from there the stock has seen a rebound of almost 80% and is now at a 52-week high. On the flip side, an underperforming name, IRCTC, and the second straight day of losses yesterday. Tuesday's volumes were again the second highest in the month of February. Over 40 lakh shares were traded yesterday. That's double of its 20-day average, which is close to 20 lakh shares. And the percentage of delivery volumes yesterday as a total number of shares traded was the highest in the last 3 months, or going back to the 9th of December 2025. The 25 lakh shares marked for delivery, 20-day average being just around 8.5 lakh shares, among the first of the railway names that peaked out in 2024, and since then the stock is down well over 50% from those levels. And lastly, a much hyped name from last year, Urban Company, back at its IPO price after making a post-listing high of well over 200 rupees. It was the 4th straight day of losses yesterday for the stock. The volumes, though, have seen a bit of a pickup in the last 2 trading sessions, and even in yesterday's session the volumes were the highest in the entire month of February so far. Close to 35 lakh shares were traded. Of course, volumes have thinned out significantly in Urban Company. At the start of trade, when the stock had listed, we had close to 1 to 2 crore shares being traded every day, but yesterday there were only 35 lakh shares traded, 20-day average of 22 lakh shares, and half of those were marked for delivery compared to a 20-day average of just around 11 lakh shares. And of course, back at its IPO price, which is 103 rupees, so almost halved from its post-listing high as Urban Company.
Indeed, thank you very much for highlighting that. Urban Company there. 103 was the issue price. Stock closed at 107, fresh 52-week low on that. Sudarshan Sukhani and Mitesh Thakkar now join in, as always, to help us navigate today's trading session. Thank you very much, gentlemen, for joining in. Good morning to both of you. Mitesh, you want to go first? If you do get that 70-80 point gap up opening, what's the strategy?
Yeah. So I've been maintaining that the index will do a range of broadly about 23,400 to about 23,800. Yesterday, we got a low at about 25,327, which is also the 200 average area. So I think there's good support around this 25,400, 350 levels. And assuming that we'll bounce back from these levels, I'll go with all long strategy. And the idea is that we might actually head towards the upper end of the range, which is about 25,750, 800 levels.
25,750, 25,800. Sudarshan?
Yeah, good morning. See, yesterday the idea was to stay away from the market. Today the view is slightly different. We have gone and done a test of those lows that we are reaching every time. Actually, going to a specific low again and again is not a very good sign for the bulls, but for the time being, a relief rally is possible. Therefore, if we get a sharp intraday dip in the 350-400 zone, 25-350, 25-400 zone, that becomes a buying opportunity with a stop under 25,300. If the dip doesn't come, then there is no trade.
Okay. What about stocks, Sudarshan?
Well, Coal India is a buy with a stop under 425. MCX is a buying opportunity with a stop under 23.55. Godrej Properties is a sell with a stop above 18.15. And Crompton is a sell with a stop above 265.
Okay, all right. And Mitesh, what about you?
I have all buy calls as well, as I said earlier. Coal India features on my list as well for targets of 445. Buy here with a stop bid of 424.5. Adani Group stocks are looking very interesting to me. All of them, have held very well in this choppiness and have been mostly sideways, but now, can break on the upside. So Adani E-Solutions is a buy with a stop at 1,019 for targets of 1,080. A buy on Glenmark Pharma. Keep a stop bid of 2035, look for targets of 2,100. And also buy on GMR Airport with a stop at about 100.5, look for targets of around 104.
Got it. All right, gentlemen, thanks a lot for that. Well, yesterday, even in a weak market, metal stocks were outperforming. Let's run you through the rationale. Dollar index remains weak. That's supported for global commodities. Then there are hopes of, we may avoid any kind of large demand destruction, demand these global uncertainties with regard to tariffs. And thirdly, structural themes like data centers and AI, they're expected to significantly boost demand for aluminium as well as copper going forward. Now, steel companies, they could actually witness some big margin expansion in Q4 FY26. The reasons are that there have been price hikes that have been supported by the implementation of safeguard duty. Flats are up by 5,000 rupees, longs are up by close to around 10,000 bucks. Additionally, it's a seasonally strong period, so operating leverage will play out as well. So that's why steel companies actually could report very, very strong numbers in Q4. Let's run you through some of the brokerage notes that we've got in earlier today. Macquarie, they maintain an outperform rating on JSW Steel. Reasons are that domestic demand remains strong for the industry on the whole. It's up 7 to around 8% on a year-to-date basis. They also say that despite the 9% price hike that we've seen since mid-December, domestic prices are just 1 to 2% premium to import parity pricing. And that compares with the historical premium of around 5 to around 7%. So they believe there is some room for a price hike. BofA Securities, they have upgraded Vedanta to buy from neutral. The target price has ballooned up to around 840 from 480 earlier. The upgrade is driven by positive outlook on aluminium, supportive silver prices, and they're estimating a dividend yield of around 6%. They also highlight that there's significant deleveraging at the parent level that reduces the risk around higher brand fees or intercompany loans as well. They've raised their FY26 to 28 estimates by around 16 to around 21% because they are factoring in high aluminium prices, higher fair value of Hindustan Zinc, and they're putting in the rupee depreciation as well. Finally, Nomura, they've initiated coverage on Lloyd Metal with a target price of around 1,600 rupees. The rationale is low-cost iron ore assets that are secured all the way till 2057, so they won't have any headwinds like some part of the industry will have. They're also pointing out backward steel integration, predictable MDU earnings, and copper diversification. The company, they believe, is transitioning from a pure play miner to a more stable, less cyclical business model. And that's why they're estimating an EBITDA of around 10,900 crores, which compares with less than 2,000 crores last year. The key risk, though, that they point out is political unrest in the Democratic Republic of Congo. That could affect the copper operations and also any kind of resurfacing of Naxal activity domestically. So put all that together, metals appear to be in a good space and explains why it's been outperforming of late. But let's get in Aditya Velekar, the Senior Research Analyst, Metals at Axis Securities, who joins in. Hi, Aditya. Good morning. Good to see you in. Aditya, first that point that BofA was making, we have seen price hikes, but they believe there is room for another price increase on the steel prices here in India. You agree?
Yeah, good morning, Nigel. Yeah, so Q4 is a seasonally strong quarter usually for metals and steel in particular. So in the month of March, we could see, we cannot rule out the probability of price hikes. Means on an import parity basis, we are almost at parity with the Chinese imported steel prices. Earlier, before the safeguard duty, when the safeguard duty was in limbo, the means the steel prices were trading at a discount of 12%. Now that discount has come down, but overall, because of the seasonal pickup and overall Q4 being a seasonally strong quarter post prolonged monsoon, so we could see some price hikes. It cannot be ruled out at this point of time.
Okay, price hikes cannot be ruled out. Interesting. Who is best placed, Aditya, according to you, from the fairest names? Because we have price hikes that have come about. I know that, coking coal costs as well have gone up. But in terms of spreads, first let's talk about spreads. What spreads are you assuming for the domestic guys, and how does it compare with, say, the last quarter? Because price hikes are good, but input costs as well have moved up. Though overall, there should be expansion. Go ahead.
Yeah, so the spreads will be mostly driven by the hike in the HRC prices, which have increased by almost 4,500 to 5,000 rupees per ton, which will be partially offset by higher coking coal consumption cost because coking coal prices have moved up, inched up a bit in Q3, which will be consumed in Q4. So that increase will be almost $10 to $15 per ton in coking coal. So overall spreads could likely increase by 3,500 to 4,000 rupees per ton in Q4 as compared to Q3.
And who is best placed? Some believe SAIL is best placed. because they have some benefit in terms of backward integration. Their product mix as well is evolving. MK actually had come out with a note, and they are talking about SAIL being best placed because the product mix is evolving. That's less amount of semis, more amount of finished steel. They have operating leverage, and they believe that debt has peaked out. What according to you is best placed from the ferrous names?
Yeah, Nigel. So I think all these names, they all look best placed, but means, yeah, and to individually point out, SAIL for, I mean, in the shorter term can be a trading bet because it has a long steel exposure and long steel prices have picked up. Debt has remained under control, and in last 3-4 quarters, we have seen that SAIL has delivered a good sales volume, and in Q4 also we expect that the sales volume will be strong.
Okay.
And it is sensitive to coking coal prices, so its operating leverage increases once the HRC prices increases. So from that perspective, SAIL looks good, but in the longer term, it is expanding its capacity from 20 to 35 million ton, and the expansion track record in the previous cycles we have seen was not at par. So that is one risk which remains for SAIL in the medium to long term, because the immediate ISCO steel expansion, the capex intensity will rise.
Right. So who do you like then? Aditya, which is best placed in the ferrous names?
So I think this, with the recent rally which we have seen, the valuations have caught up most of it, but Jindal Steel and Power, JSW followed by Tata Steel and then by SAIL will be my picking order. Because
all right. So Jindal Steel, top of mind. Got it. Aditya, let's focus on the non-ferrous names then. First, between ferrous and non-ferrous, what do you like?
Ferrous looks slightly better placed. Non-ferrous, we have seen a good rally, so the valuations have caught up a bit, and ferrous, there is some room for upside.
Aditya, I wanted your view on this. So much of talk about data center, AI as well, and that could be a bit of a tailwind for, base metals, aluminium as well as copper. So do you think there'll be a substantial tailwind, point number one? And point number two on this point of substitution between, copper being replaced by aluminium, because if I plot the copper price and aluminium price, now the ratio is at around 4x. And some believe that, at that point of time, there is some substitution that takes place, and that's why aluminium could outperform copper. Your comment on that?
Yes, Nigel. So aluminium fundamentally looks slightly more sound than copper at this point of time. So I will just talk some facts that copper inventory has increased across COMEX, LME, and SHFE. Post these lunar holidays, the inventory is social inventory in China is also slightly higher. So copper, we may see a medium-term supply slightly exceeding the demand. On the other side, aluminium smelters are shutting down. Recently, we have seen that Century Aluminium Smelter in US has shut down because of the power issues, and Mozal in Mozambique, which has a 0.5 million tons of capacity, and that is an important smelter which provides aluminium to Europe, that has also shut down. So aluminium being power intensive is slightly more vulnerable with respect to the power sourcing, and that puts it in a tight spot. And supply demand fundamentals are more supportive for that. As far as substitution is concerned, yes, means if copper prices rise, we could see some use cases where some instances where we can see substitution. But copper has its unique advantages over aluminium vis-a-vis conductivity and some other technical parameters. But overall, both these base metals, we are positive in the medium to long term. Short term, copper may see some consolidation, but in the longer term, because of the concentrate issues, supply concentrate issues, copper is also well placed.
Beautiful. Thanks a lot, Aditya, for joining in, breaking it down for us. Prefer ferrous in comparison to non-ferrous, post the recent outperformance of the non-ferrous stocks. And also, he says from the ferrous stocks, he prefers Jindal Steel because they have operating leverages play out, they're adding capacities as well. That said, let's get the 9-10 call. Sudarshan's back with us. Sudarshan?
It's Coal India. Buy Coal India with a stop under 425.
Got it. Mitesh, what about you?
I'll go with the buy on GMR Airport.
All right. The Coal India and GMR Airports. Thanks very much, gentlemen, both of you. 2 minutes to market open. Brokerage calls of the day. Sudarshan has parsed through those. Sud, what's top of mind?
So first one is Dr. Reddy's City has come out with a note maintenance sell call with a target price of 1,070 rupees per share. And it's on the back of Novo Nordisk's sharp price cut that it has taken for weight loss drug in the US market. And that cut is in the range of 35 to 50%. And Citi believes that similar cut can be seen in other markets like Canada and Brazil. And that will be a negative read through for Dr. Reddy's. And Novo is already pursuing a dual brand strategy in these markets. And this is the reason that Citi is cautious on generic semaglutide potential for Dr. Reddy's. Next one, HCL. CLSA maintains outperform call with a target of 5,436 rupees per share. It says deep dive into prospectus points to orders of $33 billion over FY25-23, and backlog was up 88% in FY25 and forecasted to reach to $28 billion by FY27. It believes that Mk-1A fighter jet deliveries will start in Q2 CY26, and visibility on GE engine deliveries and GE414M11 production delay will be the key catalyst, and it's the cheapest stock amongst all the defense names.
Thank you very much for that. By the way, Asian markets are on fire. The Taiwanese market is up 1.8%. It's hit a record high for the 5th straight session. Kospi continues to surge, and now it's crossed that 6,000 mark for the first time ever. Kospi is up 1.8%. And now its market capitalization, the South Korean market capitalization, is the 9th largest in the world. It surpassed France. Nikkei has gained about 1.5%. That AMD deal with Meta has also put a lot of these semi and chip companies in focus.
Okay, what do we have? First rates come through. It's a bit of a bounce, 0.5% higher, 25,540. The Nifty Bank, about 1/3% in the green. Sensex is up about 0.5, and you've got the small cap index up 1/3, mid cap index, which is also opening up at this point. So we've got, what, 270 odd points in the green on the mid cap index. So, that's the open, and it's 140 odd points up and about. The Nifty IT index will come up on your screen. Let's see if there is any relief, and then maybe we can go into individual names in a bit from now. It's not bad, 2.7% higher. When's the last time you had a 2.5% bump on the IT index on the upside? I think you'd have to go back a few days at least. But this is, at least to begin with, not a bad start, not a bad open on the Nifty IT. But as I said, we'll get to individual names in just a bit. Let's look at the Nifty heat map and get a quick sense of where things are landing. TechM, HCLTech, TCS, Infosys, Wipro are the top gainers. Reema, some green to report on. Finally, right?
Yeah.
And on the other end, you got Dr. Reddy's, which I think we highlighted as a bit of a collateral casualty with regards to what happened with Novo, Aisha, Max Health, and Maruti. But it's all green, and it's about, what, 48 names in the green and about 11-12 names which are starting lower. But it's tech in the green on the right side, or whatever you want to call it. But it's up and about. Reema.
Well, tech is indeed on the leaderboard. The top 5 Nifty gainers are the IT companies. You've got an HCLTech, TCS, Infosys, Wipro. Go down the curve, and then you will see a 4% rally recovery coming through on Birlasoft, Persistent, Emphasis, Coforge. Just yesterday, we were highlighting how the Nifty IT index, as of 24th of February, was down 21%, making it the worst monthly performance since April of 2003. I guess they don't want that, and Nifty IT has rebounded. And now the narrative after yesterday's Claude announcement, Anthropic Claude's announcement, the fact that Anthropic's tools, productivity tools, agentic AI tools can now be integrated with the software provided by many companies like Salesforce, Intuit, etc., will help rather than hurt. And you can see the rebound in the Indian IT companies. It's also rebounding, remember, from very oversold levels. And it's a broad-based recovery across IT this morning. So that's right on top, the Nifty IT index. Go down the curve, it's metals once again, which is doing well. Nigel was just talking about it. The Nifty metal index is up 1.25%. And you've got stocks like a Tata Steel gaining 1%. Pull up the others, JSW Steel, etc. also. The Nifty Bank, though, is playing second fiddle to the frontline index. While the Nifty and the Sensex have gained 0.5%, the Nifty Bank is up about 0.25%. ICICI Bank is holding up in the green, but then you've got red on the screen or no gains for an SBI, Kotak, HDFC Bank, and that's putting a lid on the Nifty Bank. Other losers include Dr. Reddy's, that's down 2%. Ekta was talking about it. Dr. Reddy's is the top Nifty loser. Aisha Motors also down 1.5%. We'll try and find out if there is any particular news dragging the stock there. So IT right on top, and on the way down, Nigel, in the broader markets is the solar companies like Vari Energies 10% lower, Vikram Solar 5% gone.
Well, that's right. Yatra Online, the stock is down 30% in this week. The street is fearing that AI takes over. Looks like, the stock is now down close to around 10%. So sharp downtick is what we're seeing out there. Bharti and Premier, both of them down 10% as Rima mentioned, and Vikram Solar as well under some pressure. Maupin Lads, they had won some order, earlier this week, and the stock had surged up. It's come in for some profit taking. So sharp downtick is what we're seeing out there. But it's been so long that we've seen this sort of move on tech companies. Let's see whether or not the tech index can hold up, irrespective of the fundamentals. I'll tell you what, the open interest has moved up drastically. So a glimmer of good news, and you'll see this sort of a bounce. But holding on to these gains will be important, because we're up close to around 800 points. By the end of today, if you can at least hold on to the 30,500 or thereabouts, the bulls would at least think that there is a glimmer of hope. But otherwise, 22% down in a single month, with open interest up between 50 to around 40%, that's quite a telling statistics in itself. 100 points, the opening batsmen raise up their bat for a century.
No, absolutely. And I think interesting in terms of where these stocks are landing this morning. And good to see, right? I mean, it's red every day. You come up and so there's got to be a bit of pushback on the other side. Takes all kinds on both sides to make the market. So we are seeing some of that at least come into play. Of course, I mean, will they hold, etc.? We'll have to see. And some of the other big movers are there at the bottom of the screen as well, Vari and other things. Well, I think we can go across to Pratik Gupta, who's with us. He's CEO and co-head, Kotak Institutional Equities. Of course, the Kotak Investor Conference is underway, and we had people join us from there yesterday as well. Pratik, good morning. Good to have you here. Thanks very much for joining us. So it's a bit of a strange if I can use the word dystopian time in our markets, right? Not just our markets, but generally globally. But what kind of conversations are you having around this AI scare trade, if you will? I mean, just looking for any interesting stuff you've heard from some top people, global managers. So if you can share that, go on. Morning.
Morning. So you're right. I think the AI scare trade has been the most topical sort of focus in the conversations that's going on. And we have investors from all over the world. But I must say, I think the US investors in particular are very much into this AI scare trade. They were already, most of them were anyway underweight India. In fact, most global investors right now are underweight India. And within their India portfolios, they're even more underweight the IT sector. Meanwhile, you've got local investors, domestic mutual funds, insurance funds who've been getting inflows regularly, and they've been sort of nibbling at some of these IT stocks as they were coming off and so on. And this AI scare trade has really gotten them spooked as well that, okay, we missed something. Looks like the foreigners were right in selling out of IT early, and we're still holding on to these stocks. So that's where the sort of conversations were going on as to whether this is a short-term blip, is this just like the Y2K scare, and whether these companies will adapt, and especially those who are focused on enterprise level into implementation. Will AI not become a productivity tool? Will the job loss scare, isn't that a bit overdone? And then obviously there is the other part of it. Those who are in the bearish camp are also jumping to conclusions that what this means for the overall macroeconomic setup in India, what it means for like Bangalore real estate or the food delivery companies or discretionary consumption in general. Basically, if you have a massive sort of layoffs in the white collar space, which is what, frankly, there's some sort of worries going on about that in the US. But in general, I'd say very mixed views. And no one at this stage right now is jumping in to buy the IT companies, IT services companies in India as yet. Most are sort of waiting and watching. Just bear in mind that even before the AI scare came in, the growth outlook was not that great. We were just barely, stabilizing on the demand outlook. And then you've had this IT scare, AI scare, and companies themselves are talking of anywhere between 2 to 4% revenue deflation. So that's sort of, as it is, if you take things at face value, that makes the environment quite unattractive. And then on top of that, if you go down the bear camp and say that they're in the view that there's going to be massive job losses and so on, that we think is a bit overdone, and that seems to be the general consensus view as well. And perhaps that's why you're seeing a little bit of a bounce today. But this has been the most topical point, and therefore, what are the implications for India? That seems to be the most dominant theme in our conversations with about 1,000 odd investors who are here at our conference.
So do you all have a view? Is IT now a buy? Sell-off is overdone. Yesterday we were chatting with Kawaljeet and he said that perhaps there is value emerging now. Are you getting that view from institutional investors after this kind of dramatic fall that we've seen in Indian IT? And then the question, how you said that, right? Everyone's trying to understand and assess the impact on the broader Indian economy. For instance, Jubilant FoodWorks, we were chatting with them. Manglam had a chat with them at your conference and he said there is some spillover, right? If IT slows down, discretionary spending comes down, and therefore it will impact the sale of Domino's, etc. Any kind of analysis done on the broader implications?
So I think it's a bit too early, to be honest. Firstly, to your question as to, is there value emerging? There are some pockets, perhaps more in the large caps than in the mid caps at this stage. But in general, if you look at the investor sentiment, that's still very, very cautious on these stocks. And frankly, the issue goes beyond just the March quarter earnings or the June quarter earnings. This is now more a question about how long will this disruption last, how serious will it be, and what happens to the terminal value. Because again, if you go to the extreme bear case, the view is that right now, what it takes 100 engineers to do, software engineers, that can be done by 10 engineers or 5 engineers. So there is that debate going on. I don't think some of those things are probably overdone in our view, but it'll take some time for clarity to emerge. The US is still going through a this AI rollout is still happening almost every week. You're seeing new products, new features being rolled out by these AI companies. Also, a lot depends on the AI trade itself. Do you see? We have Nvidia reporting, I think today or tomorrow, whether there's a sort of reversal in the AI bubble when that happens. But as far as the broader economy is concerned, I think there's unanimous consensus that if there is a sharp slowdown in the IT services sector in India, in the short term, you will see a pretty significant impact on the discretionary consumption plays as well, whether it's food delivery, QSR, auto sales, whatever, because this was because the rest of the economy is unfortunately still not firing in a big enough way, whether it's manufacturing exports, whether it's tourism or whatever else. It's not really the overall underlying outlook is still, the economy is still recovering gradually. So therefore, if IT comes down, that is a big blow to India. And that is one of the biggest concerns for many global investors in particular. I think our local investors, because they're getting monthly flows on a regular basis, they've been somewhat sort of complacent. They don't have a choice. They have to invest, and they're trying to find alternatives. If you look at it, in fact, interestingly, the Nifty IT index is down 21-22% in the last 1 month, but the Nifty in itself is up about 2.5% in the last 1 month. So there's been a massive rotation away from IT into other sectors, and I think that's which began with the foreigners. Now it's happening with the locals as well.
Yeah, got that. Pratik, did you read that 2028 piece which went viral? The latest to go viral. You go through it, that very, very long piece.
I sort of glanced at it, didn't read the whole report, but I got the gist. They're talking of India going through an IMF bailout.
In 2028.
Yeah, I think that was a bit
on a Wednesday morning,
too dramatic in my view to think.
Yeah. No, I'm just saying joking, but not joking, but joking, really. In 2028, if you're having a conversation like this, you and me, there'll be a robot sitting here, there'll be a robot on the other side, Pratik, huh? Or whatever, I don't know. I mean,
they're effectively saying, if I remember, I just sort of glanced through it, but something to the effect that there are going to be massive job losses, and by 2028, India will be going to the IMF for a bailout. That's a bit dramatic. For India to burn through $750 billion of forex reserves in 2 years, that's quite dramatic. So I don't think that sort of a change is likely. But there's
a fair bit of opposition to that view also, right? Which you must have gone through. I mean, CEOs have pushed back, and investors have pushed back, and techies have pushed back, normal folk have pushed back. And some of the sort of opposition to it is basically pretty fundamental, which is that, there will be this idea of creative destruction, destroying everything, perhaps is not true. There's other things which will come through which we can't fathom yet. And of course, the other point is that the idea of reflexivity, that if everything is down and out, how are these companies going to raise all the hundreds of billions of dollars to be able to continue to be on this path, right? So there are some fundamental points here.
Absolutely. Yeah, absolutely. In fact, if anything, if there are job losses, they'll probably occur more in the US and the Western Hemisphere, where the white-collar workers, the software engineers over there are far more expensive. India may get impacted, but will probably be further down the totem pole. The highest cost guys will go first, if assuming that that is the scenario. But more importantly, I think the point which the Indian IT companies have been saying, and not just the Indian IT companies, even the global IT companies, IBM, etc., is that when the cost of a service goes down, the consumption will actually go up. There'll be new products, new services, implementation of AI. Actually, I'll give you one example, cloud services. This is something which has been going on for 10 years, and we still haven't finished implementing it across all enterprises. So AI will also take similarly. It's not going to happen overnight. The market is sort of reacting as though these companies will all be toast within the next 1 year. That is unlikely to be the case. The markets always tend to move in extremes. They tend to assume the worst case or the extreme bullish scenario in euphoric times. Right now, we're going through the opposite, where everyone's assuming that IT companies are dead. We don't think that's going to be the case. But clearly, there is going to be some slowdown in the short term. There will be a realignment of the business model. The workforce will need to be retrained, re-engineered, reskilled. All of that takes some time. So you'll go through a transition period, but we don't think it's the end of the world as such.
There was one interesting opinion that we got. They said that, tech budgets, once they come down, it's very hard to increase it. So no company wants to reduce the tech budgets. And therefore, if the effort required, the money spent on application and development comes down, they will use the balanced tech budget to fund other avenues and other opportunities. But anyway, Pratik, moving on from, tech, that's clearly been the focal point of all our conversations. Tell us, share some anecdotes, some interesting insights that you gleaned from yesterday's conference with companies or investors that you'd like to share.
So just to give you a little bit of perspective, we've got investors from all over the world, as well as all our local investors as well, about 1,000 odd people. And again, I think it depends on where people are coming from. The sovereign wealth funds, they're actually looking at India. For them, they have tremendous amounts of pools of capital. They're looking to deploy more capital. They're literally going company by company. And they may not be investing in IT right now, but they're looking at other sectors, whether it's some manufacturing-related companies or consumer and so on. The global long-onlys, these guys, for them, just keep in mind, India used to be 23, the MSCI India weightage was 23% back in about July, August 2024. It's now come down to just around 13%, and most of them are underweight India. So the biggest fear in their mind is the AI trade unravels, or for whatever reason, India takes off, and these guys are already underweight. And the main sort of discussion point is, should we increase our overweights on India? And the general consensus is they need to start looking at India. There's no hurry as such. Right now, obviously, momentum is with the North Asian markets like Korea, Japan, China, Taiwan, etc. But they are sort of watching out for India, that India could suddenly, that trade could reverse, and they would be caught sitting on large underweight positions in India. So then again, we're coming back to the same old banks, NBFCs, hospitals, the domestic pharma companies, telecoms. These are the sectors which are seeing a lot of interest. Consumers still a little bit of lesser interest, consumer discretionary and staples because of valuations, and also because of question marks around the demand outlook, especially if there is indeed a slowdown in the overall IT services sector in India in the short term. So that's sort of where we're seeing a lot of the conversation taking place as to, should we increase our overweight, our positions in India now, or do we have time to wait for another 1 or 2 quarters, see how things pan out, and then take a view?
Pratik, great conversation. We'll try and understand what the corporate opinion and view that you got after speaking to corporates in another conversation. Thank you very much for joining in. Moving on now to IRFC. Remember, the government is looking to divest stake in IRFC via an offer for sale. The offer for sale, that's OFS, opens for subscription today. It's 2%, but there is a green shoe option of another 2%. Manoj Kumar Dubey, Chairman and MD at IRFC, is now joining in. And this, by the way, is the first large-scale follow-on divestment since the company's listing in 2021. The IPO price was 26, and the OFS is coming at 104. Stock is down well. Some questions, sir, and thank you for joining in. Will the government look to exercise that additional 2% green shoe option? And what is the communication from the government with respect to further bringing it down, because to get to 75%?
Good morning, Rima. So, as you rightly mentioned, today Government of India has come out with their offer for sale. As you mentioned, it is 2% for a normal sale, and there is a green shoe option of 2%. So, ideally, yes, as per the SEBI norms, the non-government holding has to come down to 75%. After 2021, the journey of IRFC has been a little different path. First, we started on single client model, then there was a pause. And in this current financial year, we have embarked on our journey of diversification. Last month, we spoke to you. And the way things are panning out, we are in a very sweet spot. We have already done what we gave the guidance for the whole financial year in terms of sanction of the estimates as well as the disbursements. And going forward, the next FY and next 5 years are looking very, very promising for IRFC for the fact that if you follow the budget, there are many announcements in the railway sector in terms of high-speed rail corridor and DFC, which should be our business in the future.
Okay, so just but getting back to it, will the government be looking to sell 2% or exercise the green shoe and sell 4%?
Well, that is their prerogative. Let us see how it pans out. But as the norms goes, 2% is the minimum that has to be given out. And if there is a good demand for the shares, it is for the government to take a call. Deepam is already there on the job. And let us see how the response comes for the buying of the shares. Our diversification mode and 2.0 is already on the platter, and we have spoken a lot on your channel also about the way we are doing things. So we as a company believe that our business plan and the models for next 5 to 7 years are rightly in place, and we are walking our talk. And coming quarters and the years are going to be very, very exciting and promising for the company.
No, but you and Deepam would have done some roadshows prior to the offer for sale. Can you give an indication of the kind of primary response, and therefore will you go up to 4%?
I mean, I won't comment on those things. Yes, we did roadshows to Singapore, to Hong Kong, to London a fortnight back, in Mumbai also. We try to discuss about new story of diversification that typically we call IRFC 2.0 to everyone. And the response was very, very positive in the sense that the kind of advantages we have as a company in terms of our very low overhead cost and a whole of government approach where we try to and we want to remain zero NPA, and despite that we are making 2x to 3x margins in our business. All these things are looking very promising. In fact, a few of the analysts talked about it's too good a story to believe. But we believe that this is a story which is already happening. We are walking the talk. And the 3 quarters that we already came out in this FY, it was double-digit growth in my PAT and in my NIM also. And we, as I spoke to you last month also, we believe that for minimum 16 to 20 quarters, this story is going to sustain. Perhaps this is the story that we wanted to share with everybody. And based on that, perhaps the Government of India wishes to come out with this OFS.
Yes, you've been talking about it, 16 to 20 quarters. You have confidence that the story will play out, IRFC 2.0 diversification. So when we last spoke to you, you said that you've already surpassed your full year numbers. So sanctions could cross 80,000, disbursements can cross 30,000 crore. Can you give us an updated number now? What are you likely to end the year with on sanctions and disbursements?
So Rima, now that what we have already done, we are expecting that by the end of the FY, our sanction of assets should cross around 80 to 90,000 crore, which is nearly 1.5 times of what we had given the guidance. And in disbursements also, we will be crossing the mark with quite handsome more of disbursement. What is more exciting for us is the kind of businesses that we are having on the platter, the diversification that we are looking forward to in metro railways. There are quite a few projects where already in a very advanced stage, to the port financing, to the railway ecosystem financing. We believe that right from the first quarter of next FY, our disbursements also will pick up, which was not in the case in this FY because there was no pipeline earlier. Now that there is a solid pipeline, and at IRFC, we are looking for big ticket projects. We are not looking for 1,000 crore project or 2,000 crore project. Our normal size is more than 5,000 crore, that is half a billion. So anything which is going to be added in our kitty this year, it will be showing a very good disbursement right from the beginning of the next FY.
Okay. So you spoke about the budget. Any particular announcements in the budget which IRFC would be interested in? And could you give us details, specifically in terms of the potential customers, the size and the timeline?
Yes, Rima. So that's a very important thing that we needed to discuss here. You know, in the budget, there is an announcement of 7 high-speed rail corridors and 1 dedicated freight rail corridor from West Bengal to Surat in Gujarat. Now, these businesses were typically funded by bilaterals. As you know, World Bank and JICA and all used to come and fund it. Now that we have done one refinancing of World Bank loan at DFCCIL, you saw it, $1.2 billion worth we did in one go. So we are going to be one of the important financiers for this more than $20 billion kind of investment which is coming in the next 5 years. And we are already working on that, giving a solution in terms of ECB loans as well as the domestic mix. So that is coming out to be more than 2 lakh crore. So this funding is also something which is on the platter of the IRFC. We are looking at the modalities. We are speaking to the siblings that we are there in the railway ecosystem. And of course, this will give a lot of fillip to us in our assets under management going forward also.
So you're saying from the budget announcements of this year, 2 lakh crore of opportunity opens up for IRFC. Is that correct?
Absolutely. As you see this 7 high-speed rail corridors and dedicated freight corridor. Now, the funding model is not open right now, but we believe that 100% is not coming from GBS, as was the case in case of dedicated freight corridor as well as the high-speed rail corridor that is right now going on. All the funding came from bilaterals. Now, IRFC has started positioning itself as a domestic funder, where either we collaborate with the bilaterals or multilaterals, or we did on our own. We can bring in the ECB loans also as well as the domestic funding. And we are trying to give a solution on the cost-plus model, which is looking very attractive for the users also.
Thank you, Mr. Dubey, for joining in. Always a pleasure chatting with you. IRFC, the stock is down today, 4%, but that's on account of an offer for sale. The price has been set at 104, and the stock is gravitating towards that level. We will get into a break. On the other side, the management of Genus Power will join in to talk about their outlook going ahead.
Welcome back. Well, let's address a couple of stocks that are getting absolutely slammed today. Waaree as well as Premier Energies. Both of them are under pressure. Vinny joins us to decode that for us, and also I think a bit of a clarification with regard to exposure, particularly of Premier. Vinny, take it away.
Hi, Nigel. So yes, what's coming today is that US has set these initial duties on Indian solar imports at 126%. Now, obviously, these duties were expected, but whether this rate was expected, that is a bit of a concern because 126% is quite a high rate. Now, these rates were determined by the foreign subsidies that are allowed to exporters to undercut the domestic solar produced. Now, US Commerce Department also said that solar imports in India from 2022 to 2024 had actually grown 9 times, and in 2024 the imports were at around $792 million. What's the exposure that Indian companies have in the export market? Waaree Energies, they have around 17% exposure to the export market. Vikram Solar, that's the next one, 16% exposure. While Premier Energies, like I mentioned before as well, has 0% exposure. It's just very, very minor, 0 point something. So it's absolutely nil as far as you can say in terms of a rounded off figure. So not an impact that comes in for Premier Energies because of these duties, though the stock is seeing an impact right now, but they do not have exposure to the export market or even the US market. Waaree and Vikram do have some exports there in the US market and overall exports. But do not forget, in terms of Waaree Energies also, they do have a manufacturing in the US market. So that is also key to note. But there is exposure there, and that is why these stocks are seeing a bit of an impact today.
Got it. Okay. All right, Vinny, I'll tell you what, the markets have clearly listened to what Vinny had to say with regard to Premier, because that stock has recovered substantially from the day's low. As Vinny was speaking, I think it's done a quick 3% move out there. Pull up the intraday chart of Premier Energies. You'll get the updated rate out there. That stock, in fact, from the panic lows has seen a good recovery. As Vinny said, a very, very minimal exposure explains why we've seen a bit of a bounce from there. Let's move on, though. Let's welcome Genius Power. That's the next management on the show. The stock is under pressure, actually, in 2026. And from the highs as well, it's corrected substantially. However, the company reported a strong set of numbers in Q3. To discuss this, what's the way ahead, Mr. Jitendra Kumar Agarwal, the joint MD at Genius Power, joins us on the show. Hi, Mr. Agarwal. Good morning. Good to see you, Ben. Let's just highlight the top talking points that we're going to be focusing on. Will strong growth continue? What about tender wins? What's the order pipeline looking like? And most importantly, what about the outlook with regard to cash flows? Will it turn positive? Well, Mr. Agarwal, let's get a couple of basic details first out of the way. Tell us what kind of revenue targets you have for this year and next. That is, 26 as well as 27. Margins have improved over the last few years. Is that a level you can hold on to, 22%? And also, what's the volume of execution you're looking at for this year? Very quickly, sir.
Yeah, good morning and thank you, Nigel. Always a pleasure coming back to your show. You keep making me think forward-looking, which is always great. So just to give you an idea about the revenue, we have been giving guidance of 4,500 crores for this financial year, and we are pretty confident to achieve that. And for the next financial year, we have been giving the guidance of 5,500 to 6,000 crores, and we are pretty confident of achieving that. Just to give you a 35,000 feet idea to all the audience about the business. In total, in this country, you require around 31 to 32 crore smart meters. Out of that, 15.6 crore smart meters has been ordered. Out of that, only 5.5 crore smart meters has been installed. So there's a clear headway of 25 crore smart meters to be installed and sold in this country in the next 5 to 6 years. So I see the future of smart metering industry and Genius to be very, very bright in the coming years.
And margins, sir? 22%?
We have been doing 20% EBITDA. I'm pretty confident we'll continue to maintain the same margins. It will only get better with the times to come.
Got it. Okay. All right. The biggest problem that the street has is they know that there is a long runway. But one important matrix for the stock to get re-rated will be the operating cash flows turning positive. What is the outlook on that front, sir? Because, the stock, I think it was 400 rupees. It's around 250 rupees now. Fill us in with a guidance on that front, because revenue is good, margins are good, but cash flows is what will give you the valuation. Go ahead.
So with the cash flow, everybody has to understand one simple thing. Right now, there's a lot of investment going on in the field. Today, I have stocks of around 2,000 crores in the market because I have to cater to 25 projects simultaneously.
And once these numbers will start converting to operation go live and money starts flowing from the projects, the revenue cash flow will come down. I am confident by the financial year 27 will be cash flow positive. Yes, I gave the guidance earlier to be positive before that, but looking to the market situation and what is happening in the field, I'm taking a more practical view. By the end of financial year 27 will be cash flow positive. And one very important thing which the market and everybody has to understand, we are dealing with the government. There's no threat of money getting, you don't get the money paid back. We are working with the government. These are all contracts which are very well defined. We are working under the contract. There's no deviation from the contracts. It's that initially to do the projects well, you have to invest a lot in the working capital.
Yeah, but for the stock markets are likes numbers. They want to see the cash flows turn positive. We're taking your word for it now, FY27. Okay, got that. But what about working capital days? Very, very elongated, sir. You're getting your money after quite long. I think the working capital days are 210. Help me out with the updated number, and how does that number as well come down?
So that number will come down to 75 to 100 days in next 12 to 15 months. As I said, there's a lot of investment in the inventory. The problem is not that we are not getting paid by the customer. It's that a lot of investment is done in the inventory because we have to open 25 projects at a time. And it is not 25 projects, it's practically 40, 50 sites. And if you want to install 1.2 to 1.5 million meters monthly, so that there are dip lows, there are lows in some months, there are highs in some months, that you have to invest in the inventory. That is the main reason of this lot of cash flow being negative currently.
Jitendra, hi, morning. So you're assuring that it will happen, and markets, of course, will wait for when that will happen, but it's good to hear. Now, on the other two other segments, right, which is gas meters and water meters, could you talk to us about what's the commercialization timeline? Because the opportunity set is known, but what's the commercialization timeline and what's the revenue opportunity for your company?
So currently, water meter is very humble beginning. Right now, we are doing a business around, like this financial year, we are doing a business around 15 crore rupees in the water meters, which is a very humble beginning. But next 3 to 5 years down the line, we see water meter to become as large as smart meters. The only reason I see this, the way the water industry is changing, and there is a clear focus of the government also going ahead. Why don't we look at water meter business as a AMISP? So we are pretty confident, not only in India, across the globe, water meter industry is going to be pretty large. When it comes to gas metering, there are 12 crore connections that has to happen in the next 6 to 7 years. So we see a good headwind. I don't see gas meter to become as large as electricity meter, but it will be like the way we used to do the domestic meter business, like 800 to 1,000 crores annually. I strongly feel the gas meter business will be in that range in next couple of financial years.
This is the pipe gas meters, is it?
Yes, this is the pipe gas meters, primarily for the industrial and the home use, primarily for the residential use.
Who does these meters now? Because
currently, Genus is also one of the players. This year also we will do around 30 crores in the gas meter business. So we are one of the significant players. The overall market will grow significantly in the next couple of years. 12 crore connections has to happen in next 6 years as per the Government of India guidelines.
So on this Tamil Nadu 3 crore meter tender, the fear is that on account of elections in Tamil Nadu, this tender will get pushed. Is that true? Is that likely? Or do you have a confirmation of the timeline?
So there's no confirmation on the timelines with us. Yes, this may happen. And if you ask me very frankly, it is good for the industry. You can't have everything falling down in same day. So if it happens after 3 months, I don't see any problem with the industry. Rather, it is good for us.
Okay, and the Delhi tender, when is that likely? And
Yeah. So Delhi tender is on the way. We expect to close it by next 2 to 3 months. A lot of discussions are going on there.
Okay, all right. Quick couple of questions. Operating and maintenance is how much of your mix right now? And as you keep installing, that will go up, right? The proportion will move up.
So it will go up. So just to give you a ballpark numbers that will give a fair idea. So out of the total order book of 25,000 crores currently for the AMISP business only, in that 14,000 crores is the supply and installation and 6,500 crores is the O&M, which will happen in 7 to 8 years. That will give a very ballpark idea to the audience that how we look at this business with the current order book.
Okay. All right. I'm looking at an MK note. They are saying that this year you'll do 550 crores of PAT. And in the next 2 years, they're expecting the number to be around 900 crores. You think it's possible?
It's definitely possible.
It's possible. Okay. But I think so 900 crores of PAT in the next 2 years. Operating cash flows turning positive. That's going to be a key metric that we'll be tracking. Finally, sir, GIC, they had a block that they were looking to sell, and suddenly that disappeared. And that's an overhang for you, for the stock at least, because they have 15%. They caused the re-rating when they came in. But now that block, part of that block we understand is still in the market. Have you heard from them?
So GIC, as I've been saying earlier also, they have a clear policy. If they get a good return, so for them, this is just a investment in the listed company. Their main business is doing business together, which we have an order book of almost 25,000 crores together. So which is, I think that is more focus for them rather than this block deal.
Okay. Jitendra, we'll leave it there, and we will sort of continue to talk to you as this, as some of what you said in terms of guidance, improvement, etc., shows up. Well, appreciate it. Tata Sons is the other big story, right? I mean, it's deferred his decision on Group Chairman N. Chandra's term extension till the next board meet in June. Sources say Tata Trust's chairman, Noel Tata, has asked for certain conditions to be linked to Chandra's reappointment while raising concerns about losses in certain group companies. We have Shriram Subramanian, founder and MD at InGovern, and J.N. Gupta, MD at Stakeholders Empowerment Services. Shriram and Mr. Gupta, thank you very much, both of you, for joining us here. So, Mr. Gupta, if I can ask you, sir, so, it's a bit of a googly here. From a investor perspective in Tata Group, and there are so many of these listed companies now, what's the right framework to use to think about something like this? Because the decision has been deferred, it may still happen, but it's a bit of an interim no man's land. How are you thinking about this?
We have to look into in various aspects. The first is that Tata Sons itself is an unlisted company, so nothing that happens in Tata Sons directly impact the investors, but every listed company gets indirectly impacted by what happens in Tata Sons board. That is one. Second is this, Chandra's term is till February 2027. So there is nothing which is earth-shaking event which is going to happen in 1 or 2 months. Third, I would say that we in TV studios do not have the same view that the board has. We, outside world, we can say, oh, Chandra is doing very well, or Chandra is not doing very well. But the board's parameters, we are not aware. That is that. Fourth is, we do not know who is the alternative. Whether Chandra is there the only person, or there is a person A, B, C, and we do not know whether A, B, C will be better than Chandra or not. Lastly, I would say, if I was the person who was in the board and to decide, I would say that, look, which is the most important company in the Tata Sons stable? The answer is TCS. And Chandra is from TCS. At present, what is happening in TCS and all IT companies, there is a turbulence. Now, in this turbulent era, will it be good for Chandra to continue, or you want to bring someone at Tata Sons and let Chandra go, who has been with TCS for donkey's years? So I personally would say that in a turbulent time where no one knows what is going to be the future, is it better to try a new horse or continue with the old horse? So personally, I would say that my vote will go for Chandra, but then I will be the lone person in the board. There are other board members, so I would say I will stop and then give it to you back.
No, it looks like all the other directors also agreed with that point of view, except, of course, except Mr. Noel Tata, right? So, yeah, point taken, Mr. Gupta. Shriram, if you want to come, if I can ask you the same question, I mean, how would you frame this, issue now, and how are you looking at it?
Yeah, I think, as you rightly pointed out, 4 directors seem to have backed Chandra's reappointment. It seems to be Noel Tata, who is sort of putting conditions. And more importantly, the conditions are very surprising. One is what not listing of Tata Sons. There is little that Tata Sons or the board of Tata Sons can do beyond what they have already done. And the remit of the decision is with RBI. Obviously, they have engaged in dialogue with RBI, and it has to be seen. If RBI rules that Tata Sons has to be listed, then why will the reappointment of Chandra be affected? So it seems sort of illogical and unreasonable to expect to link the reappointment of Chandra with the listing of or the not listing of Tata Sons. Secondly, regarding group performance and losses in other group companies, this is not the first time, or this is not the first year that the losses have happened. From time immemorial, I would think that there have been losses across many group companies, not just even fledgling businesses, even age-old businesses like Tata Steel, etc., have had losses for many, many years. And so the performance metrics and the parameters should have been defined upfront, and the performance should have been reviewed periodically. When Noel Tata has come in fairly new as chairman on the board of Tata Sons, so why, I mean, as a shareholder, and why is he sort of stopping or questioning the performance and linking it, more importantly, to Chandra's reappointment? I would think, if anything, the performance measures should be set and measured over a number of years.
Yeah, no, absolutely. There is also a report suggesting that Mr. Tata, Noel Tata has suggested splitting the roles of chairman, CEO and MD. Why would that sit from a governance perspective?
Yeah, I think that's a positive in that sense. But I mean, should that be linked to the reappointment of Chandrasekhar?
Okay, you're saying it should not. Yeah, that should not be. Mr. Gupta, you wanted to come in?
Yeah, I would say that we at SCS has already been always saying that the combining position of chairman and managing director is not a good governance practice. So our view remains same, that if you have the same position, it is not good, because we believe in 3 tier of governance: shareholders, board, and the management. And when you have a chairman and managing director combined position, that gets blurred.
Yeah. Yeah. You know, so there is headlines, etc., all make it out to be another power struggle and whatnot, right? Mr. Gupta, but if I approach it from the other side, does it also show a bit of healthy dissent? You know, Mr. Chandra himself has said, right, that it only works if both the trusts and the Tata Sons both are aligned together. So he is the one who also suggested yesterday at the board meeting that let the decision be deferred and not voted upon yesterday in that sense, right? Both have to be aligned. So I'm just asking you from the other side, which is in the post-Ratan Tata era, it also does show a bit of signs of healthy dissent, accountability, etc. Or you wouldn't look at it like that?
I would say always a dissent is must to get to the right result. See, what happens if you don't speak your mind, you are never sure that the result would be best. What I would always say in the board manner, when the discussion takes place, everybody should be speaking their mind, whether against or for. But once the board decides, it becomes the board's decision, and then each and every director owns that decision. It should not happen in a board decision that I am dissenting on something and the board ultimately decides that something which is against what my opinion, then tomorrow I should say, oh no, I was not in agreement. No. Once I am in the board and there is a discussion on any issue, if majority decides something, so I become part of that decision regardless of my dissent. That is the only way healthy discussion will take place. Otherwise, what happens? You create Hindustan, Pakistan in a board, and then you go different direction. No, that's not the case. So I would say it is good on part of Chandra, it is good on Noel Tata to put things in writing and place the things in the board meeting. They speak their mind. Because ultimately, each and every board member must be working for the common goal, and that is good of the company.
Got it. Got it. Shriram, if I can come to you, Mr. Gupta said what's happening here has no direct implication for investors in Tata Group companies. You'd concur?
As of now, it seems so. If obviously, as Mr. Gupta also said, if there is sharp divisions within the board and it leads to a big battle, then it could have impact in future. As of now, at least there is no impact on the listed companies or the unlisted operating companies.
Yeah.
But let's see how this pans out.
All right. And we'll have both of you back as we sort of track this story. Thank you very much both for joining us, Mr. Gupta, Shriram. Appreciate your time here on CNBC TV 18. Well, 195 points higher on the Nifty. So if anything, I think the index has moved up a little bit more. 25,620 is where we're at. And I think the market... It's basically exactly the opposite of what we saw yesterday. So 1,900 stocks are up, 800 stocks are lower. So clean over 2:1 advances to decline ratio. And of course, some of the worst performers, which is IT services, are on the gainers list today at this point in time. So still within the first hour as far as trading action goes. Manisha joins in on the other side with commodities in focus. Stay tuned.
Fly Emirates, fly better.
Welcome back. As promised, let's talk commodities. It's over to Manisha now. Manisha.
Thank you so much for that. Can't talk enough about metals because that is exactly where the space, all the action is. Take a look at the base metal prices. A decline in the US dollar index is one thing that has been supportive. Two, it is about the long-term demand estimates on paper, and the fact that the mining and refining both are not picking up in the same sense has been supportive as well. The US has begun collecting a temporary 10% tariff as of Tuesday, that is yesterday, and the White House is reportedly seeking to raise it to 15%. This is the uncertainty that the markets are dealing with at this point in time. Remember, many of these metals already are in the critical mineral list, and Section 232 applies to them. So what more can happen is what is keeping the space quite edgy. The US-Iran nuclear deals, where that is scheduled in Geneva to start yet again on Thursday, is yet another thing that the street will keep an eye on. The silver prices should come in on your screens because we've seen 2% of gains, and to that one in the Asian markets itself. More than that right now, so inching very close to that $90 an ounce mark. Copper as well has gained 2% in the overnight markets. Well, the Chinese have come back and they seem to be buying copper after that profit taking that we've seen in the last couple of weeks there. The weak US dollar has been supportive as well. And then China is expected to face lower average levies on metal intensive exports when they're dealing with US, also works in favor of China in that sense. And not just copper, the LME zinc prices have surged quite strongly, not too far away from its 3-year highs that we saw in the month of January itself. There have been concerns of tight supplies continuing to support zinc. For zinc, essentially, it is about the refined zinc production, which has seen a decline of 2% in the previous year, even as the mine output grew up by 6%. Take a look at aluminum prices, 3-year highs onto that one as well. And then tin, which hit an all-time high in the month of January, has gained up back yet again. There are concerns on tin supply onto this one as well. And then Indonesia government has been cracking down on illegal mining. There are reports of government seizing almost 500 tons, arresting also suspects of illegal mining therein. Remember, 1,000 illegal mines in Sumatra have been shut, which has been happening for the last 6 months now. And then Myanmar's Myanmar mine also operations have been slowed down due to ongoing resource audit there as well, which has been going on, by the way, since 2023 there. Demand from data centers, speculative buying, all of that has been supportive, especially in the Asian markets there. And the prices, while they hit 59,000 of an all-time high in the month of January, they're just about trading at 50,000 at this point in time. So metals, a third straight day of gains and continuing there.
Thank you very much for that. By the way, the Nifty is now surged past 25,600, aided by a 3% rally in IT, and the Nifty Metal Index has picked up 2% up. Vedanta is a big mover following the BOFA upgrade, and autos is another pocket providing support. The Nifty Auto Index up 1. Get into a break. On the other side, Lata speaks to Chetan Iyer, Chief Asian Economist at Morgan Stanley.
You want to talk business? Meet me in the Onboard Lounge.
Well, it's time for It's the Economy. The US Supreme Court throwing out the high tariffs imposed by President Trump has been a relief for Asian economies, including India. But the relief has been countered by the big worry of artificial intelligence killing jobs and maybe consumption sometime in the medium term. How will growth pan out for India in particular and for EMs in general, as also trade deficits, currencies, all the macros? I have with me someone who's a specialist in all this, Chetan Ahya, the chief Asian economist at Morgan Stanley. Good morning, Chetan. A pleasure to have you at a time when we want answers to some very grave questions. First up, do you think compared to a month ago also, Asian economies and the Indian economy are in a better spot, worst of tariffs behind us?
Yes, Lata, absolutely. So, what had happened is that when the trade deals were being done for bulk of the region in October last year, since that point of time, we had already seen an improvement in non-tech exports. Tech exports, of course, did very well in 2025, but the non-tech exports part was not doing well because of tariffs. And as we got some certainty on the tariff path with those deals for bulk of the world, yes, India was not yet still having its trade deal done. But to the extent to which that the global dynamics improve, you have seen an improvement in non-tech exports for the whole region. And now, of course, with this movement that we've heard from the Supreme Court verdict, as well as the new Section 122 tariff that the US has imposed, it is very clear to us that now one thing is clear, that the tariffs are not going to go up. Tariffs have now peaked. So that's adding on to this certainty on tariff outlook. So we think that the non-tech exports recovery story is going to get further support going forward.
For India itself, does this amount to wanting you to tweak up growth forecasts?
See, the question is still unclear in our mind whether they will take up country-specific tariffs under Section 301. So now what has happened is that the tariffs on India have come down by like a percentage point from 12% to 11% based on November, December trade composition of India with the US. So whether they're going to take it up tariffs back again under Section 301 is yet to be seen. But yeah, I think the tariff related story is out of the way in a big picture from a big picture perspective.
Okay.
And look, we had already built that trade deal will be done by March of 2026. So we're not changing our growth forecast on account of this action.
Yeah.
Because it's pretty much baked into our numbers.
No, there is the angry warning from Trump that if any of you walk away from the trade deal on the excuse of the Supreme Court order, he will retaliate. Now, what is his power of retaliation is still unclear. Is all this a growth overhang or can you still be comfortable with your growth number? I think you all have 7.6 for the current year.
I think growth is pretty much, growth outlook is pretty much secure. As I mentioned, big picture is that tariffs are not going back up in a meaningful manner.
Okay.
I think there could be like a small increase on account of Section 301 action that they would take. But it's unlikely to go from where it was pre-Supreme Court verdict.
Okay, fair enough.
So in that sense, it's fine. And just to clarify on what is the power that the US has, so Supreme Court verdict has clarified and said that the Trump administration can take up embargo. And Treasury Secretary was mentioning that post Supreme Court verdict that all the countries should continue to abide by the trade deal. Otherwise, they have the authority to put a complete embargo. So that's the complete embargo is the threat they can still use to ensure that the trade deal is done. And I think from a longer term relationship perspective, it's unlikely that any country will sort of break away and not abide by the agreement on trade deal.
Fair enough. Fair enough. I know these days economics discussions have become geopolitical discussions. Geopolitics is the new macro. What's the sense you're getting on India's balance of payments and currency? We did see some tapering off of FII outflows. I think February will end up with inflows. Nevertheless, in terms of balance of payments, is this the last year of negative balance of payments, or could that also happen in FY27, since now there is a sword over IT exports?
So look, I think before this whole concern on IT exports emerged, what we were saying is that there are two drivers to the weakness in the rupee. One is that growth itself had slowed, and for equity investors, earnings growth, which was expected to be, let's say, 5 quarters back, something in the range of 15-17%, turned out to be like 7-8%. So that factor has now turned. We have seen in the high frequency data points that growth is coming back. Our auto analyst was just pointing out yesterday that in the first 2 weeks of February, we've again seen, like, if you take all vehicles, two-wheelers, three-wheelers, everything taken together, the combined growth has been 18% year on year in February. And so that's sort of supportive of the balance of payments dynamic. The second is the trade deal, and that has also been done now and dusted. So we should see, balance of payment surplus emerging back again. Okay. Now, as far as the IT services exports is concerned, I think it will still take some time before that kind of creates a balance of payment deficit. It may be a 2-year out story before it begins to actually weigh on the exports numbers for India. Okay. And on that front as well, what our team is highlighting is that there could be a transition period. But this should be seen in the context of what we saw in the past as well. We have gone through the cloud era where there was an impact on the IT services company, and they rejigged their business model and emerged. Yep. So I think that's a medium-term story. In the near term, for the next 12 months, we think the first two factors that I mentioned will be supportive of balance of payment surplus emerging back again.
Yeah. I have some large medium-term questions, like India's job growth itself and India's growth story. But we can tackle that at another time when we meet. But Chetan, global growth itself has been a surprisingly positive factor for Asian exports, for Indian exports, as your own report says. Beginning of the year, say 1 year ago, if you remember, all of you wrote reports saying that the way these Liberation Day tariffs are being announced, global growth will suffer because industrialists won't know where to invest and in what product to invest. Aren't you surprised by the strength of global growth?
So, Lata, I think the surprise was driven by the fact that one is that tariffs didn't turn out to be that high as it was initially feared. As you remember, that what happened in April 2025 then very quickly got reversed. But more importantly, I would say that, look, the tariff situation did have a negative impact on everyone's growth globally. But particularly in Asia, if you look at the real GDP growth, it peaked in the first quarter and it kept decelerating all through the fourth quarter. If you look at nominal GDP growth, something similar happened. That's because, when you have a trade slowdown and growth slowdown, your inflation dynamics also deteriorate. So your nominal GDP growth also deteriorated. And what we have now is that as soon as the trade deal, as an evidence, is that as soon as the trade deal was done in October, you started to see improvement in non-tech exports. So I would not say that tariffs didn't matter. It had a significant negative effect on growth. One, as I mentioned, tariffs didn't turn out to be as big as it was feared initially. And second is that trade deals were done by the fourth quarter.
Fair point. Since you raised nominal GDP, and that was the big question I wanted to ask you, two related questions. How do you see Asian disinflation itself panning out? Because we are seeing metal prices higher, but that's not the only component of inflation. Therefore, how do you see India's inflation and nominal GDP panning out? The rejig of CPI has actually been benign. Core inflation has, according to the numbers, come out lower than what the street was expecting. So, two related questions: Asian disinflation, and therefore, how will Indian inflation and nominal GDP pan out in FY27?
So I think there are three factors to be considered here as far as India's inflation outlook is concerned. Number one is that domestic demand in India itself had weakened. I mentioned earlier about the earnings growth, but if you look at the consumption spending related items like the discretionary consumption spending item like auto sales, etc., had been softening across the board. So we had a weakness in domestic demand. The second thing was this whole global trade cycle. It did suffer. We had seen a significant slowdown in global trade, global industrial production, and therefore, that kind of caused a weakness in global industrial products that transmits down to India.
Yep.
And the third factor was China. And China's continuous PPI deflation also transmits into India. And we had done some work on this, trying to map out each segment of WPI and looking at what are the segments in which India runs big trade with China. Those particular segments were actually seeing bigger disinflationary pressures. So now when you fast forward, we see a turn in all the three factors. We've seen improvement in consumption demand in India already, and I just mentioned the auto numbers. We have also seen an inflection point in the global industrial cycle. You look at US industrial production, it's recovering. European industrial production is recovering. Asia's own industrial production is up to 42-month high. And then finally, third thing is China. So China has done a few things itself to address this deflationary pressures. They have slowed down the new investments quite aggressively. And this recovery in non-tech exports that I'm mentioning about from a global perspective, that will also help China to improve its own capacity utilization. And we are expecting that deflationary pressures out of China should also reduce going forward. So we are expecting an improvement in India's nominal GDP growth back up to about 10.5%. And improvement in inflation dynamics is one of the contributors apart from the real GDP growth.
Oh, that'll be a sigh of relief for the powers that be over here. The nominal GDP, if it were to be double digits or even 10.5%. Chaitanya here, always a pleasure speaking with you about the medium-term issue of jobs and Indian consumption, how it will pan out. I'll take a rain check from you for a discussion on another day. Thank you very much for joining us. We'll have to wind up on Bazaar and on It's the Economy. Time for Chartbusters after a break.
Overnight rally on Wall Street spells relief for the Indian IT pack. Tech rebound lifts sentiment, propelling Nifty towards 25,650 in early moves. All sectors except PSU banks gain.
Danish drug maker Novo Nordisk will halve prices of weight loss drugs in the US from 2027. The move puts Dr. Reddy's under pressure. Citi cites caution over semaglutide revenue potential in Canada, estimating it to be at $50 million, significantly lower than what the street expectations were.
United States sets preliminary levy of 126% on Indian solar imports. Rates determined basis foreign subsidies that allowed exporters to undercut domestic solar producers. Shares of Bharti Energy's Vikram Solar bleed.
A weak US dollar coupled with resilient demand keeps metal stocks afloat. Brokerages, they are upbeat on the space. The likes of JSW Steel, Vedanta, Lloyd Metals, all of them perk up in trade.
Earnings coming in from Schaeffler India. Healthy set in their fourth quarter of calendar 2025. Double-digit growth across segments. Automotive and intercompany exports surged between 41 to 50%. And the stock trades firm even as it comes off opening highs.
Hello and welcome to Chartbusters. We are coming to you live from the CNBC TV 18 Motilal Oswal studio. I'm Nigel. With me is Mangalam. The screen is green. Looking quite good. First day of a new series. Hopefully, March does what it has done best over the last 10 years or so. 80% of the times it's been positive. And for the time being, we're starting off on the positive note, Mangalam. So the market's finding its form. I'm sure you have an eye on Team India as well. Hopefully, the boys in blue find their form because it's a bit of an upward task, but we perform best under pressure.
We perform best under pressure, and you trust the team. You trust the team. You trust the process. You trust all of that, and that's the way you approach perhaps investment as well. You trust your process, irrespective of what's taking place in the world, the uncertainty, etc.
Very serious.
Very serious. What to do? Well, that's what you do. And the markets do what they're doing right now. It's up in a way for the frontline indices. The broader market is doing a lot better. The Nifty's conquered the 20-day moving average. All eyes on the 50 and the 100-day moving average as well, which is about 50 points from here. Where do we go there? Whether we go there, whether we cross that, whether we sustain above that or not. Chandan Taparia of Motilal Oswal Financial Services joins in for a quick technical check. Chandan, March has been good for the market. Do you think the start today gives you confidence that this one will not be any different from what we've seen earlier?
Yeah, good morning, Mangalang and Nigel. Thanks for having me. So yes, if I look at the seasonality heat map, usually the March and April has a history of going right or going positive in index for 80 to 90%. So I believe that will continue, and high potential that market can head towards 26,000, 26,350 level. However, it has been consistent. The good part is every time the decline near 25,350, 25,400 is being bought. So I believe it's time to again build the momentum. So one can look for buying opportunity with support of 25,400 on closing point of view. An index can head towards 26,000 to 26,350. And if I talk about the Bank Nifty index, which is really doing well, we have seen a buildup of selective long position in PSU names. Rollovers are on upside, and Bank Nifty is holding well to key support of 60,500. So with the support of 6,500, we are looking for an up move towards 62,000 marks in this series in Bank Nifty.
Okay, all right. You're sounding quite optimistic, Chandan. My team was telling me you were not there just a few minutes ago. I was going to get on the call and say, Chandan, mic up. But good to have you on the show, Chandan. What about individual stocks? What's on your radar?
Yeah, Nigel, I'm always there for you and entire TV18 team.
Thank you so much, Chandan. Good to have this relationship built on. But let's get to the stocks.
Perfect. So talking about trading ideas, first is buy on Tata Steel. Nifty Metal is now completing its consolidation of last almost couple of weeks and now all set to start the next leg of rally. Tata Steel has been making high tops, high bottom on the weekly chart. It has given a consolidation breakout on the daily chart after 12 days with a decisive hold about 210. We are witnessing put writing at 210, which also suggests bullish stance in the counter. So one can buy with support of 211 for an upside target was 226. Second trading area, that is buy on Voltas. And we are hearing that this time heat wave will be comparatively more and selective demand will be there in the AC, cooler and power demand will be there. So Voltas could be one beneficiary name, which has been consolidating in the last couple of days and all set to give a breakout as it is now trading at 13-14 months high with a decisive hold above 1500 mark. So one can buy with support of 1520 for an upside target to a 1620 kind of level. Last trading idea, that is buy on TVS Motor. It seems that auto index is now taking support for next leg of rally. TVS Motor has recently taken support exactly at 50-day exponential moving average, and small follow-up could lead to the fresh high. So one can buy with support of 3800, and this auto name can head towards 4100 marks this time.
All right, Chandan, thanks a lot for your picks and being there around for the team, etc. But both Nigel and I, what we're really looking forward to are some nice hot kachoris that you would send from Jodhpur along with a giver. That's something that we'll be looking forward to, apart from obviously you coming and guiding all our viewers on their stock levels, etc. as well. When is that happening?
Yeah, next time. Just allow me to go to hometown and we will be there with kachori and giver.
Done that, done that. All right, Chandan, thank you so much for that. After some, delicious stock talk with Chandan, let's get you some ideas for profit as well. Our colleagues from Money Control Pro joining in today. We have Madhu Chandade, who has a stock that she's been tracking closely. Madhu.
We are talking about Safari Industries, which is one of the leading organized luggage players in India. Indian luggage industry, which was once a space for few organized players, thereby creating an oligopolistic structure, has seen the entry of a number of Indian as well as overseas D2C brands, thereby increasing the competitive intensity. Safari, by far the most efficient player in the industry, has also felt the competitive pressure. In the quarter gone by, while Safari gained market share with a volume growth of over 20%, there was a drop in realization thanks to heavy discounting, which also partially impacted its operating margin. The company has announced a fundraising plan to augment its capacity, and it is also open to inorganic moves. Safari has forged a partnership with Carlton to beef up its premium offering, and this should have a positive rub-off on its realization as well as margin. The long-term demand trend for the luggage industry is extremely promising, and the steep correction in the stock price of Safari also deserves attention.
Thanks a lot for that, Madhu. Time to slip in a short break. Come back. We continue our focus on markets and stocks that are moving around.
This is worth sharing. Faster Wi-Fi on the new Emirates A350.
Welcome back. You're tuned into Chartbusters here on CNBC TV 18. Well, time to turn to the sector that's sparkling today, the metal space. Doing very, very well. That's outperforming even yesterday in a weak market. The sector was doing brilliantly. To help us out with a quick analysis, we have Sumangal Nevatia, analyst at Kotak Institutional Equities, who joins us from the sidelines of the Kotak Institutional Equities Chasing Growth 2026 conference. Hi, Sumangal. Good to have you back on the show. You know, there were a few years when we used to invite you and you used to not come. I think I'm lucky last 3 months, the second time you're making an appearance. So good times and good call as well. You know, aluminium, I recall that was that call you made on Finding Alpha when you said that you believe aluminium has good amount of triggers. Do you believe there are still tailwinds out there for the aluminium stocks itself? Vedanta is your big call. So first, will aluminium continue to remain in deficit? Second, what are the price estimates you're working with? And point number 3, so much of talk about data centers. Is it going to be another demand driver for these aluminium stocks?
Yeah, morning, Nigel. Thanks for having me back on the show. If you look at aluminium, that's a commodity with the best fundamentals in our view, right? And you're pointing to all the right directions. You have structural demand drivers coming from the entire energy transition investments. You have data centers which require aluminium and copper more for their electrical and structural efficiencies. And the new theme, or a theme which has been continuing since some time and which has got a fresh push, is the copper substitution. So all these triggers are suggesting that aluminium demand will structurally grow at the rate of anywhere between 2 to 3%. But the issue here is supply. Supply is not being able to keep pace. You have China, which has capped capacity at 45 million tons, not adding anything more and operating at 95% utilization. Outside of China, if you look at US, Europe, Africa, all these economies are struggling to feed these aluminium smelters with a long-term stable power supply contracts. Except Indonesia, which is adding 2-3 million tons, there's not much capacity coming on stream globally. So you have a market which is in a structural deficit. Prices will have to stay higher for longer to incentivize new supply. And in our view, given the deficit and the requirement of incentive prices, prices will remain supported in the range of $2,900 to $3,000. Interim, there will be some bit of boost, but this is where we see fundamental lags, and we are working with these numbers.
Okay, all right. So Mangal, got that. So you're continuing to remain bullish on aluminium as well as aluminium prices from here on. $2,900 odd is what you're estimating, which is still a discount comparison to the current prices. A quick question, since you were talking about that copper being supported, being substituted, beg your pardon, with aluminium. What is the ratio traditionally? If I look at the ratio currently, it's 4 to 1, $12,000 and $3,000. At these levels, you normally see the substitution take place if there is a matrix on that front?
Yeah, I mean, historically, anything above 3.2, 3.3 incentivizes some bit of substitution. And today, as you said, it is closer to 4x. So this is, but Nigel, not an overnight thing. It is a gradual thing.
Yeah.
So remember, aluminium is a good conductor of electricity, but not as efficient as copper. So you need more surface area, more material. So it makes the end product a little bit bulkier. But at the same time, what you get is lower cost and a lighter end product. So you have the global durable companies, the Daikins, Samsung, LGs, talking about substitution since years, and gradually they are doing it. But you need to alter supply chains, you need to alter production lines to make that change. These levels at around 4x the ratio, there is definitely a big push towards this. And this will be something which will be adding to aluminium growth, maybe around 20 to 30 basis points every year over the next decade.
Oh, interesting. So 3.2, 3.3 is where the substitution normally takes place. It's a story that will play out over the next few years, and 20 to 30 basis points addition in terms of aluminium demand. Got that. What about Vedanta? It's for them to lose, right? I mean, they have got volumes that are coming about. Pricing is strong. You don't know what Mr. Agarwal is going to do next, but till now he's not pulled anything out of, rabbit out of somewhere. So it's for them to lose, it appears so. Your take?
Yeah, I mean, if from a bottom-up story perspective, Vedanta is really the best placed. In our view, we are still seeing around 25-30% upside there. So you have 90% of the business firing. 50% is aluminium, 25-30% is zinc, and then you have 15% contribution from silver. So all these commodities are trading very strong for the right reasons, and Vedanta is really well placed. Also, you have volume growth across divisions, be it aluminium, zinc, silver, power. So this is one of the few companies which is seeing growth not just in the long term but also in the medium term. You have the demerger event which will play out sometime in the month of April and May. And remember, in the past, whatever has been the issues with the company, it was largely with respect to the promoter debt. Today, the promoter debt has gone down from $10 billion peak to around $4.5 billion, which is now very sustainable from dividends and the brand fee. So at least in the near to medium term, we don't expect any surprises on the negative side. The stock's trading at around 4.5-5 times EV EBITDA, more than 10% free cash flow yield, 5-6% dividend yield. We are not seeing a better story in the metal space here. So Vedanta remains our top buy at these levels also.
Okay, all right. But now will you get constructive on Hindalco? You know, that fire at Oswego, obviously it dented things with regard to cash flow, with regard to EBITDA as well, working capital as well got stretched. But now, you know, that Midwest premium is more than $2,000. So the negative impact of tariff actually will start turning into a positive in all probability if it holds at these levels. And also they have the tailwind with regard to the India business. Will the coming months actually look brighter for Hindalco, or you prefer to stick to Vedanta?
And also Hindalco, Nigel, is slightly lower in a pecking order. I think the growth is much more back-ended there in the India business. We like the India business a lot. And also at Novelis, there are a few more quarters of supply outages. Bay Minette is at least from commercial volume side at least a year away. The stock has done well, but from a risk-reward perspective, I think a few other stocks, a few peers have much more upside than Hindalco in our view at these levels.
Okay, all right. So got that, aluminium has been a big call. But Sumangal, in the near term, you know, non-ferrous has done very, very well. Is it time now for ferrous to actually play catch-up? See, pricing is up. If I look at flats, 5,000 rupees per ton. If I look at longs, close to 10,000 rupees per ton. That, you know, safeguard duty definitely has helped. Yes, I know coking coal costs have gone up, but spreads have improved drastically. And those stocks have underperformed. Time for them to do better from here on, or you want to stick to aluminium?
I mean, see, historically, we've always preferred one over the other, but I think this time we are quite constructive both on base metals and ferrous. Steel is more of a domestic story at this point of time. So you have a consolidating market, you have a structurally growing demand, and only few companies are able to add capacity. And you have government policies which are very supportive and agile. I mean, recently we got a 3-year extension of safeguard duty, which gives a very significant policy certainty. I mean, steel companies have taken price hike. Today, the prices are very close to import parity levels. And as you said, I mean, all the price hikes will flow through margins, and you will see a very strong expansion as far as profitability is concerned. So steel companies also, in our view, should do well. Our picks here are the non-integrated companies over the integrated companies. So JSW and JSPL are our preference given where the prices are today and the stock performances. Tata Steel sale would be much lower on the pecking order side.
Got it, Sumangal. Appreciate you joining in. Wishing you all the best for whatever's left of the conference. And do join in more often. It's good to hear your thoughts.
Thank you. Thanks, Nigel. Thanks for having me.
All right. Well, that's Sumangal continuing to say that aluminium is a structural story. Demand will outpace supply. Pricing will hold firm. And Vedanta is the one that he had stuck his neck out and said he likes it among the others. It's actually outperformed. If I look at it in the last 3 months, Vedanta is up 35%. Massive move out there. Time to slip in a short break. Come back. We'll focus more on markets as well as stock-specific action. Stay tuned.
Welcome back. You're watching us here on Chartbusters. A bunch of stocks which are buzzing around right now. We have Bosch, which has moved to the high point of trade. Hero Motocorp is the other one, which is spiking as well. All of this means that the market, which started fairly well, continues to hold above that 25,600 mark for the Nifty, and frontline indices doing well. The only fly in the ointment right now is the Nifty Bank, which has begun to underperform a little bit. Where does it go from here, and whether it sees some more sell-off is something that we will be tracking as the day goes along. But with that, we are out of time on this edition of Chartbusters. You stay tuned, because the team of Trading Hour takes the market action forward. Up next.
It's time for Trading Hour. We are coming to you live from the CNBC TV 18 Motilal Oswal studios. I'm Hormuz Patakia. With me as always, Manglam Malu. And considering the sell-off that we saw yesterday, it's a pretty good day for the markets. We've recovered most of what we lost in yesterday's session.
Yes, you know, yesterday was painful. Today is a balm. Are we out of danger? Perhaps not. But is this a relief? Most definitely. The only thing that we'll be tracking right now from here on is what happens to the Nifty Bank and the IT pack. Yesterday, we saw the IT stocks do not particularly well. Today, they've bounced back. Is this bounce sustainable, or is it just a bounce from oversold levels? And at high levels, we are seeing the Nifty Bank underperform after it had outperformed over the last couple of trading sessions. So those are a couple of things that we will be tracking as we move along. The Nifty has conquered the 20-day moving average. Still, business is unfinished at the 50 and the 100-day moving average above that 25,750, 25,720 mark. The important part, however, is the portfolios will be feeling a lot better today than what they were yesterday because more number of stocks are advancing than the number of stocks which are declining. In fact, that number is 2:1. So the advanced decline, crisscross lines come up for you. They look like a bit of a crooked train track, but you know, so far as the distance between the two is maintained, there's no problem.
Now, the bulls will take that, especially considering what transpired in yesterday's trading session. And it's a positive start to the March series as well so far. But that does not take away from the fact that there are lots of movers within the broader markets as well. Almost all sectoral indices are in the green today, barring the PSU Bank Index, which is, can't even say it's seeing profit booking. It's just seeing some sluggish moves in today's session. It's just off the highs of the day and has slipped into the red. So barring that, all the other sectoral indices doing well for themselves, led by the Nifty IT, as Manglam was just highlighting. And of course, the news-based names, the two, Vari and Premier Energies. Vari is still down 10%. At one point, both of them, Vari and Premier, were down 15%. But Premier has recovered significantly from the lows of the day. We'll hear from the management in just a bit as well. So Premier is down 5%. IRFC is the other one. That was down 4% currently as the OFS has opened for non-retail investors in today's trading session. So those, of course, the big newsmakers, and those are the ones that are the top three losers on the Nifty 500 in today's trading session. A sector that is doing well, though, other than IT, is the metal names. Nigel just spoke about those a few minutes ago, and positive brokerage notes have come in almost on most of the stocks. And Vedanta received an upgrade today from BofA. That's up 5%. That's the top gainer today. Lloyds Metals has received an initiation from Nomura. That too is up 5% in today's session. So good going for both of these names. Nalco is doing well for itself, as is SAIL. And every constituent on the Nifty Metals Index has done well for itself in today's trading session. Of course, you're seeing some earnings reactions as well. The last few names that are still popping up on the earnings screen for the quarter gone by. One such name is Schaeffler India. And that is one stock that is reacting to its results in today's trading session. The results were reported after market hours in yesterday's trade. So that's an earnings reaction. Sudarshan is here to tell us how were the numbers for Schaeffler India. Sudarshan.
It was a good set of numbers for Q4 CY25 that Schaeffler India has presented, and overall it has been a good quarter for majority of the auto ancillary companies, especially for Schaeffler India. It's a continued double-digit growth that company has been seeing, and this time the growth was led by two major segments. First one is automotive technology. That's the biggest contributor to the total revenue. And second one is the intercompany exports. So for automotive technologies, revenue was up almost 41%. For intercompany exports, revenue has grown by more than 50%. And that has helped company to report revenue growth of 27%. And also EBITDA has improved by almost 30%. And on the margin front also, company has seen an improvement of 30 to 40 basis points. Not only the EBITDA margin, even gross margin has seen a significant improvement. And for Q4 CY25, Q4 gross margin has come in at almost 40% versus 37% in the same quarter. In the same quarter last year.
All right, we take that point. Sudarshan, thanks a lot for that. Meanwhile, a bunch of stocks which are buzzing around. Bosch is one of them which has moved higher. That's spiked to the high point of trade. And alongside that, we have a couple of these, other auto ancillary names as well, which are picking pace right now. Let's talk about Vari Energies and Premier Energies. Both of them have plunged after the US has slapped a 126% initial solar import duty. What does that do to their business? How much of that gets affected for all of them? And is there a case where there is one company which is not affected at all? For this detailed impact, we do have Vinny joining in. That's the big story of today. Vinny.
Hi, Mangalam. Good morning. So yes, in terms of what's happened in the US market, now US has actually set some initial duties on Indian solar imports at 126%. The rates mainly were determined by based on some foreign subsidies that were allowed to exporters to undercut domestic solar products. Now, apart from India, there are other countries also. There are some where solar exports do come to US. They are also seeing some duties there, but 126% for India and Indian solar players is what has come in. U.S. Commerce Department specifically highlighted that solar imports from India to the US have jumped 9 times from 2022 to 2024. So a sharp increase in terms of exports from India to the US. Now, which companies actually get impacted? Bharti Energies, they have around 28.6% exposure to the export market. Vikram Solar, 16%. Premier Energies has 0% export exposure. They are mainly focusing on the domestic market. So they do not get impacted by this. And that is why we've seen that recovery also come in terms for the stock of Premier Energies. So keep in mind, Premier Energies does not get impacted. But will this increase competition in the domestic market now? That's something that we'll have to keep an eye on.
Exactly. And Vinay, thanks for speaking about this, because now we have with us Vinay Rustagi, who is the Chief Business Officer at Premier Energies, joining in as well. Vinay, Vinny did tell us that you have no export exposure, so this news per se does not impact you. If you could give us a couple of clarification points. One, were you at some point looking to increase your exposure to exports from zero right now? And does this put a bit of a spanner in the works for your plans out there? That's point number one. And secondly, with now these guys finding it difficult to export, will they put pressure on you in the domestic market? And could there be competitive intensity? Those are the two worries that the street has.
Sure. Good morning. Thank you for having me. So look, I think as a business, we are always looking for new growth opportunities, particularly exports to large markets like Europe, US, etc. Having said that, given the recent movements in tariffs and the policy intent from the US government, we decided a long time ago that it is best to base our entire business case on the Indian market, which, by the way, is growing very strongly and is providing us with a very attractive growth opportunity. So we have completely kind of, moved away from the export market. So as you said, we're not affected by it in the short, medium, or even the longer run. Coming to your second question about the impact on the overall market and the possibility of increasing competition domestically. Look, I think this is not new news. We've known this for a long time. In fact, this investigation itself was announced about 6 months ago. If you look at the overall exports from India to the US, they actually came down by more than 50% in 2025. And in fact, the total volume of exports was actually less than 3 gigawatts, which is, in my estimation, less than 10% of the total Indian module production. So, the US module exports were not, a material part of the entire Indian business. The industry has had a long time to adjust to this changing reality. And I think this is old news as far as we are concerned and the industry is concerned. So we don't see any material impact out of this announcement.
But Vinay, as Mangalam also mentioned about the fact that you may not have exposure to the export market, but does that mean that those who do, now that this happens, even if they may have begun to prepare for it long ago, does that mean that pressure increases for you in the domestic markets? And just to add to it, are you the largest player in the domestic market currently, considering you have a completely domestic focused business? What's your market share currently, and where do you see that going as we head into the next financial year as well?
Sure. Yeah. Okay. So look, there are obviously some players who were exposed to the US market, but like I said, the share of exports to the overall domestic production is very small, and all these players have had a long time to adjust and refine their business model and move away from the US market, as we can see from the reducing share of exports to the US. I mean, this news itself is more than 6 months old.
like I just said. So yes, there'll be some impact on the margins on these players, but I don't expect any material impact on them, on any of the existing players or the industry overall. In terms of our business alone, our market share, very roughly speaking, is about 10% in module production, and I would say about 15% in solar cell production. And we intend to stay at these levels, partly increasing from here on now, maintaining a share between 12 to 15% over the middle and the long run.
How big is the data center opportunity for you?
So, look, it is still quite nascent. The Indian data center market, cumulatively speaking, is only about 1 gigawatts. But the expectations are now that with all the renewed focus on AI and, the new tech, etc., the expectations are that the data center capacity will increase to between 10 and 15 gigawatts by 2030. And most of these data centers are expected to basically be green data centers, which means they're expected to run entirely on renewable energy. So overall, I see this opportunity at about, cumulatively speaking, at about 30 gigawatts over the next 5 years, which will provide demand growth of another 10 to 15% on the baseline numbers in India.
Right. What are, the quantum of imports of solar modules and solar-related panels that come into India versus what they go into the US? Because if it's this duty which has been, imposed on Indian exports to the US, I'm sure it would have been for some of the other countries as well. What if those countries then start to look at India as a market? Is there a possibility that increases competition not only from domestic players, but other country players as well who were earlier looking to export to the US and now looking at newer markets?
Yeah, sure. So the good news there is that the Indian government has been very emphatic in its Make in India stance. And today there's a very strong protection in India, a multi-layer protection in the form of duties and non-tariff barriers like ALMM, so that no more imports are allowed into the country. In fact, the share of imports has been coming down very, very sharply. Last year, the level of imports, if I look at the last quarter alone, October to December, was, in my estimation, less than 5% of the total domestic market. And I expect that to disappear almost completely in 2026. So I think the possibility of imports from China or other countries flooding the Indian market is really not there, as the government is really focusing on Make in India.
Vinay, before these concerns emerged, there was one lingering concern for the entire industry, and that is something that has kept the share prices also pretty subdued for both for your company as well as your peers, is that of overcapacity. And the last time you spoke to us, you also mentioned the fact that there are concerns on the utility scale side because there is some delay in transmission and there is a slowdown in the tendering process as well. Has that improved ever so slightly, if I can say that, over the last 30 days, or do you see that improving going forward, or things remain as they are?
No, I think, the solar industry, one thing we can be rest assured is very fast moving. There's a lot of action on a daily basis. In general, in terms of the overcapacity concerns, look, I think there are a number of announcements. A lot of people have announced plans to come into the sector. But we have always maintained that, this is an extremely challenging sector in terms of high capital intensity, lots of operational and execution challenges, etc. And on the other side, the customers, we sell our modules to these large producers who need the highest efficiency modules at the lowest cost. So the customers are extremely demanding as well, and they want to work only with the top tier suppliers. So I think, a lot of players have announced an entry, but we feel that the actual capacity that is going to come will be much, much less. And we already see signs of that on the ground in the form of people struggling to raise capital, lots of delays in execution. So the overall demand supply in the Indian market remains attractive. And on the demand side, your question was about transmission delays, etc. So look, yes, that is an ongoing concern. But the good thing there is that there is the non-utility scale market, which means the rooftop solar, the solar pumps, and the corporate market. These segments are growing very, very strongly, and today account for about 60% of the total demand. So I believe that the growth is very broad-based, and the market is able to tolerate some delays on the utility scale side.
So the sense that we get from everything that you're saying is that all is well. Is that so?
Well, all is not always well. The market is always moving, and it is always a case of adjusting business strategies and business plans, like I mentioned. But yes, I mean, if I look at, again, your transmission delays, ideally, they won't be there. We would see faster growth in India. I expect the growth in the solar market over the next 2 years, having grown very, very strongly over 24 and 25, to slightly taper down. But I think overall, the story of solar in India is extremely strong, given both the strong demand side as well as the government's very emphatic support for Make in India.
Vinay, thank you for sparing time and joining us today. You said that it's not always well. We'd hope that things get better, at least on the side that there are concerns. So thank you for joining us and clarifying on this very important issue. Premier Energies, there the stock still down 5%, but a significant recovery from the lows of the day. Take a short break, focus on the bond markets with Manisha Gupta on the other side.
Fly Emirates, fly better.
Welcome back. You're watching us here on Trading Hour. The market's doing well. The Nifty holding above that 25,600 mark. Coforge has bagged a $158 million contract with a UK-based client. What we need to know is whether it's a new contract or a renewal of an existing one. If it's the renewal of an existing one, is it done at a high price or not? But for the IT pack, the fact that they're getting orders right now amidst the sort of noise that AI has created is positive news. The sector is bouncing back from lower levels. And that's reflecting in the kind of up move that we've seen in Coforge from the lows as well. But banking, that's an institutional favorite, and that's also something that a lot of the market experts right now are fairly overweight on and positive on as well. What's the outlook for the sector stocks? What are the best bets here? We do have MB Mahesh, who joins in from the sidelines of the Kotak Institutional Equities Chasing Growth 2026 conference. MB Mahesh, it's always a pleasure speaking with you. The obvious question, if you look at financials and the banks, how does one put their money in the pecking order, whether it's large private banks, small private banks, or you look at the PSU banks, you look at NBFCs, you look at capital market plays. If one had 100 rupees, how would you distribute that among the various plays that there are in the financial space?
Okay. Hey, guy. Good morning. Okay, I may not be able to give you a full answer to this question because I primarily look at the bank side. But as you highlighted, there is a lot of options available on the table for investors. And we see actually across the board, whether it is banks or you look at the NBFCs, the insurance companies, or the capital markets, nearly all sides of the business are kind of doing well. So we kind of place our risks appropriately when we are kind of giving investors some ideas on this space. Right now, at least when we look at banks as a specific area, when we break down between the public sector banks as well as the private banks, at least in large caps, we do have strong ideas coming in from ICICI Bank and Axis Bank. In the public sector banks, we like players like a State Bank of India, a Bank of Baroda, and a Union Bank. We also have in the mid-tier banks players like Federal Bank and also in some of the players like in the small finance banks. You have enough opportunities on the table. Each of these opportunities presents different investment thesis on the ground. So depending on the risk appetite an investor has, you do have a variety of choices available on the table, at least at this particular point in time.
Mahesh, the other trade that is emerging right now is the outperformance of the PSU banks compared to its larger private peers. With private peers still being expensive on the valuation front, PSU banks, despite the outperformance, are still fairly okay. Would you still look at these smaller PSU banks as a segment, or would you choose to be with the largest lender of the country, which also happens to be the largest bank in the sector?
You do have a combination of all, right? At any given point of time, you're not going to place your bets on a single bank or just a few set of banks. And you do have options on the table wherein even the mid-tier public sector banks are doing reasonably well. So when you look at the return ratios that they are delivering today, you look at the growth rates that they are presenting on the balance sheet, it is almost at par with some of the frontline private sector banks. You're getting growth at about anywhere between 13 to 15%. You're still seeing credit cost hitting newer lows. The net NPL numbers still in extremely good condition. So we do offer investors ideas even in the public sector banks, despite a reasonably good outperformance that you have seen in recent times. But we are also mindful of the fact that when we look at the valuation multiples across the last, let's say, a year or so, there has been a significant convergence in the multiples than what it used to be about, let's say, about a year or 2 years back. And we kind of acknowledge the fact that there has been significant improvement from public sector banks, and to that extent, a higher multiple expected also is a desired outcome.
Right. Of the recent events that took place at Bandhan, and then because of that there was AU Small Finance Bank as well, or rather IDFC First Bank, and then there was AU Small Finance Bank as well. Would that cause a bit of a worry to your call if you cover the stock?
Okay. We do not cover IDFC at our place as yet, so we've not had a detailed conversation with the management, at least on this issue. But having said that, these kind of operational risks do emerge in banks from time to time. And if there is a lapse from a bank on this specific case or in such instances, you do expect the bank to kind of make good to the underlying customer, and you kind of take the subsequent course of actions and then see where the mistakes have happened out here. But having said that, is this causing a source of concern with investors? At least at this point of time, the answer is no. We do have seen instances in the past. So you kind of take this that the organizations kind of take corrective actions and move forward. So it is, if you ask us, is it a source of serious concern? At this point of time, we would want to kind of believe that the answer is no, at least on this issue.
Mahesh, thank you for sparing time and joining us today with your views on the banking sector there. Take a short break, focus on the bond markets on the other side with Manisha Gupta.
You want to talk business? Meet me in the on-board lounge.
TV18 and India Bonds presents Bond Street.
Welcome to Bond Street. Joining us are two very special guests. We have with us Himgauri Aher Adke, who's Mayor, Nasik Municipal Corporation. We're also joined by Manisha Khatri. She is IAS Commissioner, Nasik Municipal Corporation. Ladies, thank you so much for joining us here at CNBC TV18 studios. And ma'am, I want to start with you first. And for individual investors watching today, can you explain on what the green bond that is being issued by Nasik Corporation, what does it really mean, why now, and what are you going to achieve from this?
Definitely, Nashik municipal corporations have started or issued the green bonds specifically for the augmentation of Mukne Dam, and also we have got specific pipelines to be laid down for water works from Villori to Gandhinagar and the WTP works at Nilgiri, Bagh and others. So this is a specific bond issued for the construction of WTPs at various locations and the pipelines to be laid down basically for the Kumbh and the related works. So it is strengthening the water supplies in the city, and we are looking forward to this because it's a green bond.
Ms. Khatri, would you want to add with the maths on this, on what really is the face value of bonds, minimum investment that you are allowing in?
Yeah. So, because this is a green bond where we are issuing and raising funds of up to 200 crores for the purpose of water treatment plant at Mukne, as Madam said. The face value is around 1,000 rupees per unit, and the minimum investment that is allowed is 10,000 rupees. And we have bundled this project into 8 different kinds of types of products, wherein we allow the flexibility to the retail investor as well as other investors to choose which kind of investment they want to do, and they get a safe, secure and flexible investment option.
Ma'am, also when you look at this, how did you end up deciding between the borrowing versus government grants or bank borrowing for that matter?
When it comes to borrowing, I feel with the changing times, the municipal corporations must adopt to a changing financial structures of fundraising, and also the central government is incentivizing such green projects and bonds. So I think that's the perfect time when it is a Kumbh time at Nasik. And we also have a study which led to this conclusion. This is the 4th stage wherein we have got water leakages almost 47 to 49%, and we actually wanted to work over this. And since the government has already incentivized such green and fundraising projects, we took this opportunity and issued the green bonds.
And how are you looking at the various projects that are going to be funded, Mr. Khatri, and what changes will citizens actually see on ground from this?
Yeah. So this project brings in with it a long trail of other projects that are already under execution to reduce the water leakages from 47% to 15 to 20%, which is like global standard. So this ensures water sustainability, water availability for next 20 to 30 years in the city for the urban growing demand in the urban areas. So that is the major point. We do not want to become a water stressed city, which is why we are acting now and taking up this project of a water treatment plant augmentation in the city. And this will also help us provide clean drinking piped water supply during Kumbh as well as after that for the pilgrims and the citizens.
All right, this is two women, high-powered women, absolutely telling us, laying roads out on how to deal with the municipal bonds and coming out with the green bond therein. Thank you, ladies, so much for joining us here at CNBC TV18 studios. I appreciate your time.
Thank you.
Thank you.
CNBC TV18 and India Bonds presents Bond Street.
This is worth sharing. Faster Wi-Fi on the new Emirates A350.
Welcome back. You're watching us here on Trading Hour. Perfect time to bring you up to speed with all that's taking place in the F&O space, especially at the start of the March series. It's a healthy day of gains coming in for the market. You have the Nifty, which is doing well. The Nifty Bank, not so much, but that's not a problem. It's been doing the heavy lifting for the bulls over the last few trading sessions. Where the IT index was taking a bit of a backseat, but today the IT index is bouncing back. And understandably, the Nifty Bank holding above that 61,000 mark itself. The advanced decline would have your portfolios feel a lot better. We have two stocks advancing for every stock which is declining. And those lines, while they're coming closer, they have maintained a formidable distance between each other as well. And add to all of this, the India VIX is down about 8%. So that makes it a lot better as well. And, fear is perhaps maybe out of system as of now. The Nifty has crossed past that 20-day moving average, holding on to those levels. The question is whether we close above that or not. And then the next levels that we will track would be the 50 and the 100-day moving average, slightly above that 25,700 mark. So those are important levels that we need to track. And for that, both the Nifty Bank and the Nifty IT Index have to move forward. But today's up move has given bulls a lot of support and confidence to go ahead and write some of the options. So 25,600 put, 25,550 put, and the 25,500 put, all of them have been written. These are options that expire next Tuesday. So obviously there is support around that 25,400 to 25,500 mark. That's what these writers believe. But at higher levels, there is supply because of the 50 and the 100-day moving average and the overarching fear about the IT sector. So 25,600 call writers for a premium of 150 rupees are fairly active, telling you around 25,750 thereabouts. There could be some sort of resistance or supply that may come by. The other factor that could lead to that supply also is that if the market was to move towards that 25,700, 25,750 mark, the put call ratio, which has now seen a spike from 0.9 to 1.11, could get into 1.2, 1.3 sort of zones, which may again be a bit of an overheated zone for the put call ratio. Currently, it's absolutely fine. It's seen a bounce from 0.9 to 1.11. But it's the first day of the series, and the March series has a lot of triggers that we need to track. Over the last 10 or 11 March series, 9 of them have been on the positive side. Let's see whether this one also is that. We have the US Fed meet on March 17th, 18th. Then after any sort of clarity coming in on tariffs from the US, geopolitical developments, a lot is taking place in the world. And then we also monitor the AI trade as it unravels in the US and the impact that it has on other players. And finally, towards the end of March, you will have NAV propping from a lot of these institutional investors as the financial year comes to a close. So those would keep the mid and small cap space fairly active in trade. So we'll watch out for all these triggers as they play out in the March series.
Plenty of triggers in the March series to keep an eye out for. Mangalam, thank you for highlighting those for us. Take a short break. Shahzad Madan from TCG Asset Management joins in on the other side. Stay tuned. Welcome back. Continuing our conversation on the markets with Shehzad Madan from TCG Asset Management, who's joining in. Shehzad, good morning. Thank you for joining in. The big talking point of the last couple of days has been IDFC First Bank and the issues surrounding the lender. We've seen multiple such instances that have happened with a lot of these mid-sized private banks recently. But do you believe that this is just a one-off, it will pass and the business remains as usual, so therefore you would not want to make any changes to your stance on the bank?
Purvas, good morning. Thank you so much for having me on your show. Pleasure as always. Well, we've all seen and we all have the facts of the unfortunate incident which happened at IDFC First Bank. But in our opinion, based on whatever facts we have with us, which has been made known to us, whatever our study is, and based on the belief that it would generally be limited to whatever it is, we do not see any change whatsoever in our thesis on the bank, right? So as of things stand, our underlying rationale, our underlying thesis for buying the bank is the fact of holding the bank, is the fact that this has been a bank which has been scaled up very rapidly. Asset quality generally, notwithstanding what has happened now, and a little bit on the MFI side, which was, well, across the entire industry, cost to income ratio now coming down as the bank scales up, made a lot of investment in its infrastructure, which is probably behind us, and we've seen the incremental gains coming in. There's no change at this point in our thesis, and we continue to stay positive on the bank. Obviously, we are monitoring whatever developments come in, and based on how those play out, we would decide our position going forward. But with what we know, we currently continue to be, let us say, holders of the bank and continue to have repose our faith in what would happen in the bank.
Would you say the same of some of these IT names that you hold, Shehzad? Because, IT has taken a strong beating, and the smirk on your face tells you that it's not the first time that you've been asked this question. Intellect is your top holding. Again, you're laughing.
Okay, no, I guess, firstly, Mangalam, hello. And,
hi.
We've all had our fair dose, if not overdose, of what's happening on the IT side or the AI side, rather, over the last, let us say, month, especially in light of the AI summit. And of course, we've heard all sides of the story. But, there's stocks have also corrected. Now, in terms of Intellect, which is a significant holding for us, the way we believe, see, they are a product company. Okay, there is an issue of both let us call it the domain expertise, number one, which is something which they have and they've developed over the last very many years. And the other one is the context. Now, obviously, they are extremely experienced in this space. They know a lot about this space. This is really the bread and butter. This is what they've been doing. They've been only growing. They've been only increasing, right? To our mind, this doesn't change anything in terms of our holding. Obviously, as Nandan had mentioned, the question is not the fact that will there be changes. Of course, there will be. But the fact is that what is what is the company doing to address it? This company has already taken various steps. If you could see in the product, they've already incorporated AI, etc., and continue to do so. So from that perspective, to our mind, this is there. We have to live through whatever pain is there because at this point in time, but I don't think this changes again anything on our thesis for the bank and for the company, and we continue to hold the company with full confidence in the future.
Would you deploy more capital into this in the correction that is there? Because then, if your thesis is intact, then the valuations have just become a little more attractive.
So for new investors who do come in, we would obviously be increasing our position at that point in time. Yes, because we run our PMS, we run our AIF too. Depending upon flows, and for new investors, we continue to invest.
Well, Shehzad, there has been the other major talking point over the last couple of days, and that has been the resilience shown by a lot of these PSU banks, regardless of what has transpired with a lot of these private peers. What do you believe that PSU banks is a space worthy of being in simply for the fact that it offers a lot of extra valuation comfort compared to the larger private peers who have not done much but are still expensive on the valuation front?
Okay, I would put it in. Otherwise, in general, if you look at the overall market, to our mind, there is not too much which are, pockets of stark undervaluation. Yes, to that extent, of course, the PSU banks are, well, let us say, relatively cheaper to their private sector, call it peers. They've done splendidly, extremely clean balance sheets. Probably this is the first time in what is a credit upcycle you have PSU banks with very clean balance sheets. But I think we'll have to take it stock by stock. I mean, generically, yes, as a group, you could say they were cheap, but it would probably be more stock by stock. In fact, saying that we believe this bank is relatively better to the others. But generically, yes, they are cheap. There's no doubt on that. And selectively, one can certainly add to them.
All right, take that point. Shahzad, short but effective conversation. Thank you so much for joining in. Wish you a happy month of March as we start the March series, and wish you a happy end of the financial year as well, and the start of a new one. But that, we'll take a short break, and as we do that, here's a quick sneak peek into all the stocks that we will address on Your Stocks today. Don't forget to catch fundamental and technical experts give their views on all these stocks. I see Eris Life Sciences, I see Bata, Siat, Kalyan Jewellers, Aditya Birla Fashion, Zagil. All these queries sent by you to our team and will be addressed today at 2 p.m. with all the experts, both technical and fundamental, only on Your Stocks, which you can watch on CNBC TV 18.
Looking to hold that 25,600 mark is the index, still 180 points higher as we speak, so no complaint for the bulls as of now as we head into the second half of trade. Just a couple of stocks before we call time on the show. Concord Biotech is one of them, the top gainer on the Nifty 500 as of now, 13% higher on the stock at the highest point of the day, seen a big spike over the last 30 minutes. And the other one being Hero MotoCorp. Sudarshan was also highlighting about the auto sales numbers that are weighted at the start of the week, so 6% higher now on Hero MotoCorp, 5,800 there at the highest point of the day. Take your leave on this edition of Trading Hour from Manglam and me. Thank you for watching. Halftime report on the other side.
Nifty gains as tech stocks bounce up after a rebound in Nasdaq overnight. Metals and auto as well as realty also perk up, but FMCG and PSU banks drag.
US is imposing a hefty 126% initial tariff on imports of solar gear from India, Indonesia and Laos till it completes its anti-dumping probe. The levy is likely to hurt Indian exporters like Bharti Energies and Vikram Solar. The stock slump.
The government is offering up to 4% of IRFC's equity for sale to trim its stake towards meeting the minimum public holding norms. IRFC tells CNBC TV 18 it's on course to beat its guidance, but the stock slips on discounted offer price.
The Tata Sons board puts off a decision on N. Chandra's third term as chairman following Noel Tata's call for assurances on keeping Tata Sons private, curtailing losses in group companies and curbing high-risk capex. Governance experts hope the board will resolve issues on the matter. Hello and welcome to Halftime Report, live from the CNBC TV 18 Motilal Oswal studio. I'm Ekta Batra and with me is Vinny Motiwala. Well, it's turning out to be a session where we're seeing the markets rebound in today's trading session. We have IT stocks which are really leading from the front, but auto stocks are seeing buying in today's trading session as well. In terms of metals, what we are seeing is that the likes of BofA Securities has upgraded Vedanta to a buy from neutral with a target price of around 840 odd rupees versus 480. So as you can see, that stock is up and active today, so up around 5 odd %. And Polycab, Motilal has a buy on that stock. That stock has been buzzing for around 2 to 3 days, so up around 3 odd % for that particular counter with a target price of now 9,600 odd rupees. So a lot of stocks which are buzzing within the broader markets, a lot of sectors which are seeing buying, and we're going to cover all of that and more in the next 60 odd minutes.
Hi, Ekta, good afternoon. Yes, a lot of sectors, a lot of moves that are coming in on the broader end of the market. But yes, do not forget metals, ITs, that continues to shine. PSU banks, they did slip in the red. Let's look at where they have gone as well. Nifty PSU Bank seems like they've made a bit of a recovery for the Nifty PSU Bank. As of now, seems like it's managing to hold on to some bit of a green again. It's still continuing to trade in the red. So I'll refresh my screen, but PSU Banks continues to be in the red. So that's come off the day's highest point. Let's also look at the advance decline ratio, more in the favor today of advances versus decline. The gap between advances as well as decline still is there. We'll keep an eye on that. 1,700 stocks almost on the advance side versus the declines. A lot of individual names that are under pressure are IRFC, Hindustan Petro, then we have Chalet Hotels, Bharti Energy, Premier Energies, all of them continues to be under pressure as well, Ekta.
Okay, all right, but let's tell you what we have on the show today. We will be focusing on the solar stocks which are buzzing on the back of US imposing that hefty 126% tariff on imports from India. We will be joined by the management of Vikram Solar to break down the details of this. In our What's Trending segment, we will put the spotlight on weight loss drugs amidst Novo Nordisk cutting the prices of Wegovy and Ozempic, as well as Biocon's nod for a weight management drug. And in our Commodity Corner segment, Manisha will put the focus on metal prices firming up amid a weaker dollar. Stay tuned for all of that in the next 60 odd minutes.
Okay, let's move on and talk about the solar names that are in focus today as well. And obviously that duty that has come in of 126% on Indian solar imports. There was that investigation which was going on, so this was expected, but we're seeing the stocks under pressure. Vikram Solar has almost 16% exposure to the export market. Bharti Energies has around 28.6% exposure. So we'll understand from the management now of Vikram Solar what this means for them, what is the strategy going forward as well. And to talk to us about all of that, we have Gyanesh Chaudhary, who's the chairman as well as the managing director at Vikram Solar, joining us right now to speak to us on that. Mr. Chaudhary, good afternoon. Thank you so much for joining us on the show. So obviously this duty is something that was anticipated and expected because their investigation was going on. Now this 126% that is announced, could you tell us what is your export to the US market? You have 16% overall global exports that you have. US is specifically how much? And in terms of what would be the impact now in terms of revenue and margins for the company from here on because of this?
Thank you so much for having me. First of all, let me explain to you what's happening with this duty that has been announced. We all know that the US markets have been phenomenally turbulent and Obviously, this 126% duty on the face of it seems like it's going to bring Indian solar exports to a grinding halt, but that's absolutely not the case. The way the structure of the system is that the fine line is that the cells they have the duty, they're not the solar panels. So the effective rate of duty is applicable only cells, whether made as a module or on its own cell exports. So effectively, Indian solar manufacturers who are pivoting towards other sources of cell supply will not have this duty applicable, whereas Indian manufacturers with quality and reliable solar exports will be able to export solar panels made from India, but with cells sourced from other regions with lower rate of duty. Now, coming to your question, as far as Vikram Solar is concerned, our exports have been consciously pivoted towards the domestic market. The export capacity in the last year was quite low, considering the changes that are happening in the global scenario. We consciously pivoted towards the domestic market, and we have fairly secured a significant market share. And going forward, we continue to have those order books. As far as the export is concerned, we see how our supply chain strategy in the last year and the going forward years, we will be able to secure larger supply from non-tariff sources or lower tariff sources across the world, while catering to the US markets also.
Yeah, but Ganesh, what is the US exposure? If you look at your Q3 order book, what would be your US exposure to the one where you are seeing these duties coming in?
Nil. It's absolutely nil.
Okay, so for the cells which you are talking about and this 126% duty that you will have coming in, for those specific cells, you do not have any export exposure there?
Absolutely not.
Okay. Well, Ganesh, in that sense, how much do you think this 126% duty can possibly hurt the industry? I'm asking from an industry perspective as compared to just your company in specific.
Thank you so much for the question. I think manufacturers like us who have been in the international market for the last 10 years and also catering to the domestic market for over 2 decades, quality, reliability, and technology makes a very big difference. And what our go-to has been is to ensure that our US customers or any customer for that matter is getting the world-class, best-in-class solar panel. And for that, I think companies like us will be least affected because we have those pivots in place. Knowing supply chain, knowing the changes in the international tariff and geopolitical dynamics, we have pivoted significantly over the last years. And so would most of the other large players who are exporting, which are not so many, as so to speak, in India. And for those reasons, I think the impact on the exports overall would be quite limited. And if you see that the overall percentage of Indian exports in the overall US import of solar panel is not more than 4%. And that 4%, if you translate into actual product coming out of India, is a little over a gigawatt. That does not significantly impact our overall projections for the year, for the quarter, or for the next fiscal.
Okay, so just tell us, if we were to have this conversation same time next year, Ganesh, tell us what the breakup or the pie of your revenue share would look like. What are you trying to pivot into? Which are the markets that you're trying to pivot into? What is the market share right now? And how much do you expect it to possibly go up to in the next 12 months?
Absolutely. I think looking at the current US dynamics, our business has already pivoted into European markets and APAC markets. We look at taking significant positions in those markets in the next fiscal and the going forward fiscal, considering there has been significant changes in how Chinese exports are happening. Earlier, they were privy to a lot of fiscal and non-fiscal benefits exporting out of China, and that has significantly come down and almost vanished. So the parity, the cost parity and the pricing parity has significantly pivoted in the favor of Indian manufacturers like us. So we hope to see this pan out in the next quarter and the next few quarters.
Okay. Ganesh, while obviously today you have just announced a big order win also that's coming for the company. I believe it's around 378 megawatt of high efficiency modules, and this is going to be for some NTPC green energy. There's a JV there. You're planning to deliver it by FY26, I believe. Commence it. It's expected to commence in FY26. I beg your pardon. But given these order books, one, could you highlight us, what is your market share currently in the domestic front? You're having so many domestic order wins that come in. So domestic market share, as well as the opportunity now you see for data centers in the domestic front as well. Everyone's talking about those green data centers, right? So what does that mean for you?
Thank you so much. So as far as market share is concerned, we would be in the range of 10 to 12% currently, significantly increasing over the years, over the next fiscal and the fiscal after. As far as AI and data center is concerned, it's a huge opportunity. I think it's unprecedented how this is going to pan out for renewables. I was recently at the summit, as well as have been reading all the various posts that have been coming out. It's a huge opportunity for India. AI will not operate without renewables. That's a fact. And to be able to do that, India will need to deploy a huge amount of green energy. We have recently seen the government announce enhancement and augmentation of the national grid by supporting Power Grid Corporation and other things. So the government is also doubling down on green energy infrastructure, and this will change the dynamics from where we are today to what we want to achieve, which is 500 is what is the total, which is the said number, but it does not, mind you, incorporate AI deployment. So this is going to significantly increase going forward. Okay.
All right, we're going to leave it on that note. Thanks very much for joining in and speaking with us. So important clarification, in fact, coming in from Vikram Solar, that they do not have any kind of exposure to the US when it comes to this 126% duty subject. So important clarification which is coming in at this point in time.
Because the thing is that I think this 126% duty, what I understood, comes in for those modules which have maybe those cells which are made in India. So if that cell is included, those made in India cells, then they start charging the duty of 126%, so which they do not have exposure to.
Yes, so that obviously is a positive for Vikram Solar. Maybe the market will take some cognizance of that. We'll take a short break, but up next we'll connect with Rishi Vora, who's the analyst at Kotak Institutional Equities, to focus on the auto sector. Stay tuned.
Fly Emirates, fly better.
Welcome back. Well, just about higher by around 0.7% currently for the Nifty. We have the Bank Nifty, which is higher by around 100 points at this point in time. Good time then to discuss the entire auto space, which is just shining away and gaining in today's trading session. This is after the Vahan Feb registration data indicated, strong demand. But let's discuss this and more. We have Rishi Vora, who's the analyst at Kotak Institutional Equities, who joins in now. Rishi, hi. Thank you very much for taking the time out and speaking to us from the sidelines of your conference. Just wanted to start by asking you about this Vahan Feb registration data, where it says that, Feb 2026 is likely to be the best Feb in terms of a month, in terms of registration, at least since 22. So just wanted to ask you about whether you've looked at this data and what your reading is.
Yeah, hi team. Thank you for having me here. If you look at post the GST cut, the auto sector has been on an uptrend. Festive was bumper, and even beyond festive in the months of December, January, and including February so far, we are seeing very strong demand trends across all the categories. What we are expecting, at least in two-wheelers and passenger vehicle segment, looking at the current trends so far in the month of February, we'll see a healthy, let's say, double-digit growth, mid-teens, maybe can go closer to 20%. And even commercial vehicles and tractors are tracking even about 20% at this point in time, and tractors maybe even closer to 50%. So, it's just that post-GST cut, the demand momentum continues to sustain. It is quite broad-based. Obviously, some categories are growing faster, but everything right now is in a very strong double-digit zone, and which is kind of, we expect at least it to sustain over the coming months as well, at least till 1Q of FY27.
Okay, so you're expecting this strong momentum to continue for Q1 FY27 as well. Rishi, good afternoon. This is Vinny joining in the conversation. What is also interesting specifically is on the two-wheeler side. ICE retail volumes, that's seeing a growth. EV side, that's seeing a growth. Now, specifically, if you have to divide between two-wheelers, where do you see in terms of moves coming in from the company? Which company do you think will gain more market share? Because Ola Electric has been losing share in the last few quarters as well.
Sure. So maybe starting first with the electric vehicle segment. This year, full year FY26, we'll end at maybe around 20-25% growth, and we do expect that trend to continue going into FY27 as well. Now, obviously, Ola, because of multiple challenges which they had faced over the last couple of quarters, their market share from peak of about 40% has come down to mid-single digit. We do expect that at least majority of the tailwinds for other companies because of Ola's market share loss has now come through. So incrementally, the growth for each player will be more driven by, the first is obviously the industry growth, and second is the product interventions which they do. At least among the coverage which we have, we believe that TVS Motors, which is the leader at this point in time in EV two-wheeler segment, will continue to outpace the industry growth. And obviously then, Hero, Bajaj and Ather are also doing quite well. But I think TVS will continue to, maintain its dominant position in the electric two-wheeler segment. Talking about ICE two-wheeler, over there, at least our view is that the premium motorcycle, which is above 150cc, and the scooter segment, ICE scooter segment, will continue to do well and will continue to outpace the industry growth. And again, over there, at least we believe Eicher Motors and TVS do have a higher saliency within that portfolio, which should benefit. Bajaj has underperformed over the past 1 year, at least in an overall ICE two-wheeler category. Now they have a couple of product launches over the next couple of months. So we'll see how it goes for them. But overall, we do expect at least TVS Motors in this mass market category to continue to outpace the industry growth in both EV and internal combustion segment.
Okay, all right. That point is taken. In terms of what you're recommending to your clients right now, what are the top picks within the auto space?
We like Mahindra & Mahindra, Maruti, TVS Motors and Tata Motors commercial vehicle segment. Again, TVS, we did discuss that at least the company continues to do well in domestic market. Even in exports, they are doing better than the industry growth, and we do expect that trend to continue going into FY27 and beyond. Mahindra & Mahindra, again, they are doing well across all the categories. I did mention about tractor as a segment is growing quite well. Obviously, fourth quarter we might see closer to 40% and higher growth for the industry, and Mahindra clocking in similar growth in that segment. LCV post the GST cut after 2 years of muted demand environment, that category has also started seeing a strong rebound. And even in SUVs with the newer launches in the month of January, XUV7 XO and a 7-seater EV, I think at least in SUVs also we do expect healthy double-digit momentum to continue. And stocks valuations continues to remain quite attractive. So to that extent, we continue to like M&M and even Maruti for similar reasons, where today the demand is actually outpacing the production. So the constraint is on the production, and the newer capacity comes for them in first phase is coming in the month of April and then in July. But we do believe that the demand tailwind will well extend beyond first half as well for the company. And then next year there is also 8th pay commission, so we'll also do see that tailwind flowing through, especially in the passenger vehicle segment. So we kind of like both of these names on the passenger vehicle side, TVS on the two-wheeler side, and TMCV on the commercial vehicle side.
Okay, Rishi, thank you so much for joining us this afternoon, speaking with us about the outlook for the auto sector, individual names as well. Thank you so much for joining in. But on that note, we're going to step into a very short break. And here's some good news that's coming in for our viewers. India's business news leader is now a click away. Introducing CNBC TV 18's all-new app. Get instant access to breaking news, in-depth articles and financial world updates at your fingertips. Download the CNBC TV 18 app now from the Apple Store, Google Play Store, or you can just scan the QR code on your screens. Welcome back to Halftime Report on CNBC TV 18. While we're seeing metals continue to shine, the Nifty overall is managing to hold on to very strong gains as well. And IT Pack too is trending upwards today in the trading session. But on that note, let's bring on board Manish Hathiramani, proprietary trader and technical analyst at Deen Dayal Investments, joining us to speak to us about the technicals on the markets. Manish, good afternoon. Thank you so much for joining us on the show. Today, at least, we're seeing some bit of a respite coming in for the markets. Now, what are the key important levels that we're keeping an eye out on? Beginning of the new series started on a strong footing.
Good afternoon, Vinny. Thank you so much for having me on the show. Well, we have a very strong support at 25,350 to be precise. And if you notice the last few days, we have attempted that support thrice. On the 13th of February, 19th of February, and yesterday, 24th of February. We are currently in a sideways zone, which is between 25,350 and 26,000. We need to really get past either levels for a trend to emerge. If we break the levels of 25,350 on a closing basis, we should slide down to the next support of 25,000. If we can get past 26,000 on a closing basis, we should be targeting 26,400.
Okay. Well, just wanted to ask you about a couple of these stocks which are buzzing around. Concord Biotech, if you've seen that stock, it's up around 12.5% at this point. And we have a couple of others which are moving quite smartly as well on the upside. Something like an Aether Energy is showing a good amount of volume traction. Any call on these two?
Well, on Concord, while speaking to you, I just had a look at the chart. We are at a resistance level now, which has been achieved at about 1200. We really need to get past this, close above this, and then we'll be able to reevaluate on the charts.
Okay. And Manish, any individual names that you're looking at or one should look at from the mid and small cap side?
Well, I'm working with 3 large caps, a mix of buy and sell because we are currently sideways. There's a solitary sell call on State Bank of India, which is for a target of 1190, stop loss of 1230. After spending some time in this range of 1220 to 1235, we have broken the lower end of the range and volumes are supportive of this move. One buy call on Titan, which is for a target of 4440, stop loss 4220. 4190 to 4260 was a sideways range for this stock for quite a few sessions. 4130 was a strong support. That is where we have bounced from. And we are also breaking out on the back of good volumes. And the last buy call is on ONGC for a target of 290, stop loss of 264. Similar situation like Titan, where we have broken out of a sideways range.
Okay, all right. We're going to leave it on that note. Thanks very much for joining in and speaking with us. So that's Manish talking about the technicals of the market. Some news coming in from TCS where they've partnered to bring AI-powered orchestration to accelerate software innovation. They've partnered with GitLab. As you can see, the stock is up around 2.5%. But remember, there's been an IT pullback which has taken place. Some incrementally positive news for TCS. Time now for excerpts of our chat with ITC Chairman and MD Sanjeev Puri. Our colleague Shilpa Rani Petta caught up with him on the sidelines of the NASSCOM Technology and Leadership Conference on a whole host of things, consumer demand, cigarette prices, and more. Listen in.
Well, I'm not going to give you any guidance, which we don't do. But what I will just say is historically, whenever taxes have increased sharply, it has fueled illicit industry.
Yeah.
And the legal industry has suffered.
And that's something you've called out very regularly.
Yeah. And that's a trend that's always been there. Now, from the beginning of the last decade, 2011-12, almost towards the end of the decade, with progressive increase in taxation, legal volumes really declined. There was stability after that, which held legal industry claw back. But whenever there is an increase, what has happened in the past is likely to happen. So I think it will fuel illicit.
Right, but how do you then deal with the situation? Do you think that it calls for a portfolio play, any change in that strategy there? I'm just trying to understand how is ITC going to mitigate this?
Yeah, I'm not going to give you details like that, but it has to be a combination of portfolio pricing, all of these will unfold over a period of time. So beyond that, I'm not going to say
And how
anything.
much price hike have you already passed on?
Well, let it come to the market. You know, the old, there's always a trade pipelines are there. Let them get exhausted and the new prices will come to the market.
I mean, just some timeline, some color. Like, are you looking at a phased manner by when from your end?
It will be in steps.
Okay.
Given that it's a very sharp increase, it will be in steps.
Okay.
Welcome back. Joining us on the show now is Kunal Shah from Nirmal Bang Securities. Kunal, thank you so much for joining in. And it really seems to be metals for the last couple of days which continue to buzz on the higher side, whether it is about metal stocks, metal index and the underlying metals as well. Copper in the overnight markets has gained. Tin has been a big gainer. Zinc price is near its 3-year highs. What is it that you're looking at as a macro which is supporting all of these metals and then the individual fundamentals also?
Okay, so first, let us go to the macro. And the macro, the big thing is after the China started, you've seen the Trump tariff have been slashed. And if you look, now the effective rate, what China was tariffed earlier and now. So the difference is 8%. So I think China and Brazil remains two economies which are going to be significantly benefited by the new tariff. Okay, and I think that is clearly being visible in metals. So if you see what is being happening, there is a massive amount of restocking going on in metal space, and that's the reason why metals are behaving the way it is. So I believe that with the 15% tariff, we don't know if this gets changed going forward. What Mr. Trump does, we don't know. But as of now, I think China is in a win-win scenario where the tariffs have significantly lowered for them. And this is very positive if you look from the commodity demand point of view. Second, I think the way the AI theme is progressing right now, the demand from the data center. So we were just working on the number. So if you take a number of the demand growth from EV, clean energy, and the AI, I think in next 3 years, the demand for some of the metal like copper is going to rise by 3 to 3.5 million tons because of this new age demand. So if you look at a scenario where the concentrate supply is not moving up and the demand growth is significantly picking up, so the fundamental itself is very bullish right now for metals. So forget about what happens with the US, China, tariff, no tariff. So I believe the way precious metals outperformed last year, this is the year of base metals, and base metals are going to perform significantly well during the year 2026 and perhaps even more. So very bullish call for copper, number one, followed by aluminum, followed by zinc. So the outlook is very bullish, and I'm very bullish on copper. I have revised my target for copper for 2 years to $16,500, $17,000, which is currently trading at $13,000.
Kunal, copper, of course, you've been bullish on, and you've revised your target further on to higher in this sense. How are you also looking at aluminum, tin especially? There are various reports suggesting that barring solar, there are various other industries which seem to be moving towards these proxy metals, given the fact that the silver prices have surged so much.
Yes, there is a substitution taking place, especially from the solar panel producers. And that is clear. That is also supporting demand of these other metals. But I think the key message why the metals are doing well is we have not seen a sharp growth. But now the refined growth in all of these metals is getting curtailed. So the smelting capacity in China is getting curtailed. And that is at a time when the demand growth is picking up from the new age demand drivers. So China adopting the involution policy at a time when the demand growth is rising. So I think this is a clear scenario that even aluminum $3,000 looks to me bottom for me, and aluminum is heading towards $3,400, $3,500. So when you talk about a 10% upside in a metal, the size of it, which is 78 million tons, and that commodity is going to move up by 10% is quite hefty. So I'm very optimistic about the outlook on aluminum also, followed by zinc. And I believe that even tin likely to do well. So all of these industrial metals, the outlook is very bullish.
How are you also looking at silver in that in the same light? Because overnight has been strong gains. We are back above $90 an ounce onto this one. Further gains now on charts?
Okay, so silver, I think we need more catalyst. Okay, so I've been studying and I've been reading a lot of articles, and the only one reason, which makes me believe that silver is again going back to that 120, 130 level is the battery. I mean, if you study, the Samsung is working on the electric battery. So something of this invention takes place, the way solar took place 4 years back. And that drives the demand from here. Because I see the industrial demand at these levels remain quite muted. It is just the investment demand. And remember, unlike gold, no central banks are buying silver right now. So in gold's case, there are central banks who are buying gold, but that's not the case with silver. So if the industrial demand doesn't meet with the investment demand, okay, if the prices move up and industrial demand remain muted, then it's not possible for silver to perform. So I see a stiff resistance for silver, $95 to $100 maximum upside in near term. until we see a scenario that some new age demand. So I was reading an article where say that silver ion battery can give on a single charge, it can produce a 950 kilometers of range. So if this battery comes up with a commercial production, and that drives the silver demand, that is a different scenario. So that triggered the upside momentum in nickel a few years back. So something like that, if comes, then silver can go up to 120. Otherwise, $9,500 is the maximum upside for silver.
Okay, surely keeping an eye out on that number over there for silver. But Kunal as well as Manisha, thank you so much for joining in. Kunal and Manisha, thank you so much for taking us through that conversation as well. On that note, we're going to slip into a very short break. After the break, we're going to be focusing on weight loss drugs, and that's going to be our What's Trending segment for today. Stay tuned in. Welcome back to Halftime Report on CNBC TV 18. We have some news for coming in for Vedanta. At the bottom of the screens, the board has approved a fundraise of up to 3,000 crores, and this is going to be via NCDs. Vedanta today obviously is also in focus on the back of some brokerage reports that have come in as well. So keeping an eye out on Vedanta as well as the metals pack. But let's move on and talk about our What's Trending segment today, and we're going to be tracking the weight loss drug market as it is heating up. Global pharma company Novo Nordisk has taken sharp price cuts of its weight loss drug Wegovy as well as Ozempic in the US market, and this has made a few brokerages turn cautious on the generics like Dr. Reddy's. Meanwhile, Biocon has also bagged some US FDA approval for liraglutide. Now, what does this mean? Let's go across to Ekta, who's tracking all of this. Ekta, over to you.
Well, yes, weight loss drugs continue to be in focus. Now, we do have Novo Nordisk, which has slashed the prices of its key weight loss drugs, Wegovy as well as Ozempic, in the US markets by 50% as well as 35%. Remember that the market share has been rising for Novo Nordisk in the US, for rather Eli Lilly in the US. So it's risen to 58% for their weight loss drugs as compared to Novo Nordisk, which is at around 42%. Now, remember that these steep price cuts also come on the back of Novo Nordisk's next generation obesity candidate, CagriSema, actually failing to prove it was non-inferior to tirzepatide, which is basically Eli Lilly's drug Mounjaro, in trials. So there has been a lot of information with regards to Novo Nordisk, which was basically on their new obesity drug candidate, which did not meet expectations, as well as then followed by the steep price cuts that they've taken on Wegovy as well as Ozempic. Now, what does this mean for Indian companies? Citi, which has a sell and a target price of around 1,070 on Dr. Reddy's, has said that Novo Nordisk may opt for similar price cuts in markets such as Canada as well as Brazil. Citi says they are cautious on generic semaglutide potential for Dr. Reddy's and estimate 50 million for FY27, FY28 in Canada, which is lower than what the street is estimating at this point in time. So if in case they could take such steep price cuts in big markets such as the US, maybe they would possibly do that for Canada, and hence other generic companies such as Dr. Reddy's, which are looking to launch, could probably find it tougher in order to gain market share, because the innovator is anyway selling the drug at a lower price. Now, additionally, in terms of the entire weight loss market today, we have Biocon, which is in focus because they've received US FDA nod for liraglutide injection. This particular drug is used in the treatment of chronic weight management, and the market size is around $127 million. Remember that this liraglutide molecule is not as popular as tirzepatide, which is Mounjaro, or semaglutide, which is Wegovy as well as Ozempic, but nonetheless, it is an important drug development or a drug approval that they've received. They have indicated that they've received approval in the UK, they have launched the drug, and it has picked up pace for Biocon. So the street will wait and see what exactly the pace of drug launches or the pace of this particular drug would be in the US markets. Let's in fact listen to Dr. Reddy's GV Prasad. I did interview him from the sidelines of the BioAsia Summit last week. We did speak extensively on the entire semaglutide opportunity. Listen in.
As things stand, there is very little outstanding information that the regulator wants from us, and we will, give them whatever they ask for. And if everything goes well, May should be a timeline for which we think will happen.
Okay, so we are still working.
We are just waiting for approval. Once approved, we'll launch.
So
nothing stopping us from launching.
The outstanding issues you would say are resolved at this point?
More or less, yeah.
Okay. Any kind of site inspection?
Usually they may want some information, things like that. There's no inspection outstanding. It is just more information. Information requests we get, and then we submit the information.
Welcome back to a halftime report from CNBC TV 18. If you look at the Nifty chart, from where we started the show, we've seen a beat-to-fit decline coming in for the Nifty, specifically in the last 1 hour. Now, the Nifty is managing to hold on to just 0.2% of gain. It's below the 25,500 level now. 25,480 is what the Nifty is at, 56-point uptick there. Though the broader end of the market, that is still continuing to where it was in the last 1 hour. Not much of a change there. Still holding on to 0.2% of gain. And IT index, that continues to be in terms of the top sectoral gainer along with metals. Keep an eye on that. But with that, we're absolutely out of time on this edition of Business Lunch. Thank you so much for tuning in. Up next, I'm begging your pardon. Time up for halftime report. Up next, your Business Lunch to take you through all that market action.
The Nifty is off the day's high despite a bounce in tech stocks. That is courtesy of a rebound in the Nasdaq overnight. The metals and auto and along with realty names are some of the other gainers, but the Nifty Bank is turning out to be a bit of a drag led by the PSU lenders.
US is imposing a hefty 126% initial tariff on imports of solar gear from India, Indonesia and Laos till it completes its anti-dumping probe. The levy is likely to hurt Indian exporters like Bharti Energies and Vikram Solar. The stocks slump.
The government is offering up to 4% of IRFC's equity for sale to trim its stake towards meeting the minimum public holding norms. IRFC tells CNBC TV 18 that it is on course to beat its guidance, but the stock slips on the discounted offer price.
Auto sales are racing away according to Vahan data, and it could make this February's numbers the best since 2022. The sales this month are not just strong year on year, but are clocking higher growth than in January and December.
And the Tata Sons board has put off a decision on N. Chandrasekaran's third term as chairman following Noel Tata's call for assurances on keeping Tata Sons private, curtailing losses in group companies and curbing high-risk capex. Governance experts hope that the board will resolve the issues on this matter. Good afternoon. You're with us here on Business Lunch. We are coming to you live from the CNBC TV 18 Motilal Oswal studios. I'm Hormuz Fatakia. With me as always, Arundhati Ramanan. Arundhati, good afternoon.
Good afternoon, Hormaz. You know, it's a good afternoon for us, but for the markets, not so much. What started off as a good day for the market, seeing some rebound. Now we're seeing red across most of the sectors.
Taking a bit of a lunch break, as you just said, before we began the show. But it's taken a bit of a nosedive. The Nifty, at just a few minutes earlier, the index was holding on to gains of close to 180, 200 points. That is not the case. All of the gains have now been wiped out almost. And the principal culprit of that is the Nifty Bank. You can see that on the left of your screens, the Nifty Bank, 500 points off the highs of the day. And that has had an impact on the Nifty as well. And that has come off the highs of the day. If you could pull those charts back up on your screens, you would see the impact that the Nifty has had. 200 points off the highs, now below the mark of 25,500, back towards the levels at which it had closed in yesterday's trading session. And it is the Nifty Bank that is leading the index lower. The broader markets, well, they were the ones that were slightly better in comparison to what the benchmarks did in yesterday's trading session. But the broader markets are no different. The mid-cap index has also almost slipped into the red now. The small-cap index is still holding on to gains of around 0.4%. But otherwise, it was what was promising to be a good start to the March series has suddenly turned choppy in the last few minutes.
Absolutely. And you know, most of the sectoral indices were in the green, but now it's half and half, right? Half of them are in the red, half of them in the green. But leading the Nifty higher, that metal pack, we've got Nalco, Vedanta, SAIL, all of them gaining in trade today between 3 and 5%. IT stocks, which saw a massive meltdown in yesterday's session, and you know, honestly, since the start of this month, are finally seeing some green. We've got HCLTech, L&T Tech Services, and Persistent Systems, all of them between over 2% in the green. The auto pack also doing well. The index is up nearly 2%, 1.5% at this point in time. But on the downside, as you know, Hormaz was pointing out, it is those banking stocks, right? We've got PSU banks in the red. We've got that FMCG pack that's in the red. So if you take a look at those stocks, SBI, Union Bank and Indian Bank, all of them lower in trade today. But first up on the show today, Waaree Premier Energies plunge after US slaps 126% initial solar import duty. Vinny Motiwala is here with all of those details. Vinny?
Hi, afternoon. So yes, this is a 126% duty that's coming on Indian solar imports. There was an investigation going on, and now after the investigation has been completed, this duty has come in. It was expected by the industry as well. But we saw a sharp fall coming in on most of these stocks. What is the exposure now these companies have? Premier Energy, export exposure 0%. We have Waaree, which has 28.6% exposure. We have Vikram Solar, which has 16% exposure. Now, you know, the main concern for US was that the solar imports by India to the US have jumped up significantly, 9 times from 2022 to 2024. 9 times jump there. So it came in at around $792 million. So obviously, we expected some bit of an impact. When we spoke to Vikram Solar, there was an interesting fact that was pointed out by Vikram Solar. They said that, you know, this duty is actually coming in for those solar panels or solar modules, which actually have the cells which are made in India. The modules are made of cells that are made in India. So that is where the duty comes in. So Vikram Solar highlighted to CNBC TV 18 that their exposure to those solar modules is very insignificant, almost 0% for the company. So let's keep an eye out on that. But today we are clearly seeing pressure on the stocks, sentimentally also weak, and Premier Energy already has 0% exposure. So that shouldn't be seeing much of an impact there as well.
And despite that, the stock is down almost 6%. That too after recovering from the lows of the day, during which it was down almost 12. So Winnie, thank you for summarizing that for us. Both Vari, Premier and Vikram Solar, all of them under pressure in today's session. In fact, we did speak to the managements of both Premier Energies and Vikram Solar, listening to what they had to say.
Given the recent movements in tariffs and the policy intent from the US government, we decided a long time ago that it is best to base our entire business case on the Indian market. We are not affected by it in the short, medium, or even the longer run. If you look at the overall exports from India to the US, they actually came down by more than 50% in 2025. And in fact, the total volume of exports was actually less than 3 gigawatts, which is, in my estimation, less than 10% of the total Indian module production.
The US markets have been phenomenally turbulent, and obviously this 126% duty on the face of it seems like it's going to bring Indian solar exports to a grinding halt. Our exports have been consciously pivoted towards the domestic market. The export capacity in the last year was quite low, considering the changes that are happening in the global scenario. Knowing supply chain, knowing the changes in the international tariff and geopolitical dynamics, we have pivoted significantly over the last years. And so would most of the other large players who are exporting, which are not so many, as so to speak, in India. And for those reasons, I think the impact on the exports overall would be quite limited.
The auto sector is surging in trade today. That sector is about 1.5% in the green, and Vahan retail sales data is indicating stellar sales for the month of February. Sudarshan Kumar is here with all of those details. Sudarshan, big positive for the sector there.
That's correct. So if there is one sector which has celebrated the GST rate cut the most, that's the auto sector for you. And the registration data so far for the month of February 2026 is indicating a continued strong demand that we had started seeing in the month of October 2025. And if the current trend holds, February 2026 is going to be the best February at least since 2022. And the registration so far indicates that majority of the segments are seeing registration growth, and that is higher than 20%. And most of the companies have already crossed the registration numbers that they had seen in February 2025. So now talking about the registration growth in the month of February 2026 so far, total sales are up 21%. Two-wheelers are seeing registration growth of almost 21%. Passenger vehicles, 20%. Commercial vehicles, 23%. Even three-wheelers are seeing growth of 19%. Now, if you compare February 2026 registration growth against the month of January 2026 and December 2025, you'll get to see the continued strong demand. Total is up 21% against 18% in January, 16% in December 2025. Similar trend can be seen for two-wheelers. Even for PVs, in Feb, we are expecting to see 20% growth against 11% in January, much better than the last month. And commercial vehicle is continually seeing a strong demand. Last month, 18% growth. This month, doing much better at 23%. And similar trend can be seen for three-wheelers. Last month, 19%. In December 2025, 36%. And even this month, it's expected to see 19% growth. Now coming to the company-wise. First talking about two-wheelers. Two major companies, Bajaj Auto and Hero Moto, are just 3% away from the total registration numbers that they had seen in the month of February 2025. But for Bajaj Auto, one more positive is its export numbers. It's extremely doing much better in the last 3 to 4 months. Every month they are doing 2 lakh units. And now yesterday only Rajiv Bajaj Auto has said from the month of April they are expected to do of 2.5 lakh units on export front. Now next two companies, TVS Motor and Eicher Motors. Both these companies have been outperforming the industry, and similar trend can be seen even for the month of February 2026. These two companies have already crossed the registration numbers of February 2025. Coming to electric two-wheeler space, similar story continues. Ola is underperforming, Ather is outperforming. Ather's registration numbers in February 2026 is already 40% higher than the registration that they had seen for the entire month in February 2025. Coming to passenger vehicle, all three major companies, Mahindra & Mahindra Auto, Tata Motors passenger vehicle, and Maruti, registration for all these companies is higher than what they had seen in the entire month of February 2025. And surprise part is, the company which is doing the best is Tata Motors passenger vehicle. Now coming to commercial vehicle. This segment has been seeing a strong demand for the last few months, and similar trend can be seen even in the month of February 2026 with both Tata Motors commercial vehicle and Ashok Leyland's February 2026 registrations are already higher than the registration for the entire month of February 2025. So what next? We still have 4 days to go in the month of February 2026, and if similar trend holds, February 2026 is going to be a bumper month for the auto sector.
Indeed, and some very, very glaring observations there from Sudarshan. Tata Motors passenger vehicles emerging as the dark horse, but things don't seem to be improving whatsoever for Ola Electric. We'll keep an eye out next week when the sales numbers are released. Now, just before we take that break, just pull up India VIX, and that will give you an idea of why the markets have turned so choppy. At one point, the VIX was down almost 9.5%, and that has cut down its losses by half. It's now down only 4.5% is India VIX, back above the levels of 13.5. So that's one big reason reflecting the volatility in the markets as of now. Take a short break, but just before we do that, here's a sneak peek into the stocks that we'll be addressing in your stocks just a few minutes from now. And the screen is screaming retail shareholder interest. Ireda, Suzlon, Bharat Dynamics, Kalyan Jewelers, all of them, and in fact TCS as well. So our fundamental and technical experts give you their views on all of these stocks and a lot more in just a few minutes from now, right here on CNBC TV 18.
Fly Emirates, fly better.
Welcome back. You're still with us on Business Lunch. The government's Ministry of Statistics will unveil a new GDP series on Friday with FY23 as the base year versus the current base year, which is 2011 to 2012. Lata has done a poll of economists who are forecasting as per the old series. Lata?
Well, the new series, which will be unveiled on February 27th, that changes the base year. Basically, you are always comparing GDP versus a base year. That base year used to be 2011-12. Now, obviously, people's consumption patterns have changed so much, so the base year has to be changed by all countries. The new base year will be 22-23. And that, along with the base year, they're changing other things. Now they have greater access to informal data because of an annual survey of unincorporated services and enterprises. They also have more real-time GST and a public finance network of the government, which gives them real-time access to up to village level consumption. Also, there is what you call double deflation. You know, until now, the GDP collection authorities just took the final results of, say, a corporate and brought it down by the year's inflation to get the real growth and not just the real plus the price growth. Now they're going to, deflate the input prices and the output prices separately so that you get genuinely what is the value add in a particular year. Okay, now let me come to the poll, which is the most important thing. People are doing it according to the old GDP series because we don't exactly know how the new one will look. Per the old series, the real GDP is expected to have grown by 7.6%, quite a decent number. Nothing like the 8.1 we did in the second quarter, but still 7.6, good third quarter number. And nominal GDP is going to be the disappointment with only 7.85 coming as the average. That's because there was hardly any price increase. The overall inflation in the full quarter was about 0.8%. And hence, nominal GDP is not much higher than real GDP. Let's come to the full year. The poll says the full year GDP will again look like 7.6%. But the nominal will be better at 8.4%. You have to compare it with the first advance estimates, which the MOSPI itself gave us. They said the advance estimates that the full year will be 7.4. Now people have gone to 7.6. But looking at what Sudarshan told you about auto sales numbers, I think it can even be close to 8. Anyway, the poll says 7.6 and nominal 8.4, which is a bit under the weather. We would like a double-digit nominal GDP. I would just want to quickly tell you 2 or 3 things. Although I did the poll, this poll is not going to be very useful because the MOSPI is going to give us the new GDP series for current year, FY26, for FY25 and FY24. So now imagine if the base changes. Instead of, say, 300 trillion rupees, it comes to 310 in a previous year. Then your rate of growth for the current year also changes. So all these numbers are, just for us to get a feel of how good the economy is compared to last year. We are going to be, faced with a whole lot of new numbers when the 3 years of new series is presented on February 27th.
Oh, we'll keep an eye out on that as well. Lata, thank you for summarizing that for us. Take a short break. More news and updates follow on the other side. Welcome back. Tata Sons has deferred the decision on Group Chairman N. Chandra's term extension till the next board meeting in June after Noel Tata asked for certain conditions be linked to Chandra's reappointment while raising questions about losses in certain group companies. Yusuf is here with how the group companies have performed under N. Chandra.
Well, Tata Group's revenue has nearly doubled and profits have tripled with N. Chandrasekaran at the helm of the $300 billion conglomerate. In FY 2017, the group's revenue was just over 6 lakh crore rupees. By FY 25, revenue had risen to more than 11.5 lakh crore rupees. The group's profit were around 35,000 crore rupees 9 years ago. As of FY 25, profits had nearly touched 1 lakh crore rupees. When Chandra took over in 2017, Tata Steel was reported an annual loss of over 4,400 crore rupees. But since then, the company has turned things around, posting a profit of 3,400 crore rupees in FY 25. Similarly, Indian Hotels Company has sunk from a 63 crore loss in FY 17 to a profit of more than 1,900 crore rupees in FY 25, reflecting a revival in the hospitality cycle. However, not all bets have paid off. In 2021, Tata Digital acquired a majority stake in Big Basket for about 9,500 crore rupees, strengthening its e-commerce push. But intensifying competition from quick commerce players and others has eroded Big Basket's market share from nearly 50% to under 10% in the last 5 years. TCS contributed nearly 75% of the group's valuations by 2020. But since then, the valuation has diversified, with TCS now accounting for 36% of the overall valuation. Despite the challenging situations in the IT sector, TCS remains the crown jewel with the valuations of over 9 lakh crore rupees. Tata Group's total valuation now stands at 26 lakh crore rupees. FY 26 has been a challenging year for TCS. In the first 9 months of this financial year, TCS has seen its revenue grow by nearly 3% and profit decline by more than 2%. Tata Motors is also struggling after a major cyber attack at JLR and the tariff tensions hurting automobiles business across the globe.
All right, Yusuf, many thanks for those details. But with that, it is a wrap on this edition of Business Lunch. From Hormaz and me, goodbye and many thanks for watching. Midcap Radar will take all the market action forward.
Good afternoon, you're watching us here on Midcap Radar. I'm Mangalam Malu, with me Ekta Batra. We come to you live from the CNBC TV 18 Motilal Oswal studio. The markets off highs. The Nifty actually at some point was above that 25,650 mark as well, and currently it's a fair distance from that. It's below the 25,500 mark as well, and a large part of that weakness has been caused by the Nifty Bank and also a decline that we saw from the highs on tech stocks after surging in early part of trade. Ekta.
Well, yes, absolutely, Mangalam. You know, we have the Bank Nifty, which has slipped into the red as well. So just about lower by around 0.2% at this point in time. But let's take you through all of the top stories that we're tracking at this hour. A sharp fall in the markets, with the Nifty now down over 150 points from the day's high as tech stocks correct after surging in the early part of trade, weighing on the benchmark indices. Nifty Bank slips into the red while the mid-cap index trades largely flat.
United States sets preliminary levy of 126% on Indian solar imports. Rates determined basis on foreign subsidies that allowed exporters to undercut domestic solar producers. Shares of Bharti Energy's Vikram Solar bleed. Management of Vikram Solar, however, tells CNBC TV 18 there's no export exposure subject to 126% duty, and the duty will not hurt India's solar story.
Auto sales are racing away according to Vahan data that it could make this Feb's numbers the best since 2022. The sales this month are not just strong year on year but are clocking higher growth than in January and December as well.
Shares of Vedanta trade 4% higher as Bank of America upgrades the stock to a buy rating, raising its target to 840 rupees from an earlier sub 500 rupees. Brokerages cite supportive silver prices and healthy dividend yield as key triggers. Well, while we spoke about the markets actually coming off significantly from the highs, just as we were speaking, the Sensex has now moved into the red, and that's an important part because the Sensex is now down about 2 points off its highs, and a large part of this decline can be attributed to PSU banks. A large part of them can be attributed to the Nifty Bank. But look at a couple of these other non-banking heavyweights on the index as well. Reliance, the intraday chart of Reliance comes up for you. There's a big gash that we're seeing on that stock at the low point of trade. Another index heavyweight, a fair weight on the index is Bharti Airtel. That too has moved lower. And finally, we have ITC, which too has moved to the low point of trade. We had some commentary coming in from Sanjeev Puri, who did say that going forward, pricing would be determined by volume and value equation for the companies. So that's about it. In the mid-cap end of things, though, the red line has now gone above the green line. So we have 1,500 stocks which are declining for about 1,400 stocks which are advancing. And at one point, we had twice the number of stocks which were advancing as against the number of stocks which were declining. So there you have it. The lines have intersected with the red one above that. So let's get you some mid-cap movers. Gaurav joins in to take us through some of those stocks which are moving around in trade. Gaurav.
Well, as market is seeing some kind of pullback, but if you look at gainers, we have got some companies who are still gaining in trade. So first, let's talk about Concord Biotech. Now, remember, the company is attending IIFL Capital's conference, and after 11 o'clock, we are seeing a sharp move there. Apart from that, let's also not forget about Jindal Poly. Now, this company is not only up in trade, but if you look at volumes are 4 times higher than its 10-day average. Aditya Infotech is another company that we are tracking. Now, there was a news flow which suggests that promoter is likely to offload its stake, around 5.8% stake. But why the stock is up is that the floor price suggests that the discount to yesterday's closing price is not as much. And lastly, let's also not forget about Jindal Store. Here also we are seeing sharp move, and at the same time volumes are 4 to 5 times higher than its 10-day average. When we look at the volume led gainers, we have got also companies like TVS Holding, Usha Martin, KRN Heat and D Developments. All of these stocks are not only up in trade, but we are seeing sharp volumes as well. On the losing side, first, let's talk about Bharti Energy, Vikram Solar, Premier Energies and companies like that. And the reason being that US have imposed tariffs, and sentimentally we are seeing some negative impact because in fact the companies like Premier Energies, where the export is not as much, we are still seeing some fall here. Apart from that, let's also not forget about IRFC. Government is going to offload around 4% stake in the company, and the discount price was around 5% to its yesterday's closing. And after that, we are seeing some fall here. And Afcons, if you look at the company, recently, the client actually terminated a contract where the company had completed almost 93% of the project, and after that we are seeing some fall here. And we have also got some companies who actually hit its 52-week low, and we have got companies like Suzlon Energy and First Source who are still in descent, but at the same time Ola Electric and Aavas Financiers, although they have recovered from its 52-week low level, but still near the 52-week low level. So definitely let's watch out on all these companies and see how they perform in coming days as well.
Okay, all right, Gaurav. Thanks very much for that. So, a lot of stocks which have, in fact, hit that fresh 52-week low. And it's a choppy market, you'd have to say. So, good time then to get in a technical check. We have Ajit Mishra from Redigare Broking joining in for that. Ajit, hi, welcome to the show. We are off the day's high. The bank Nifty is in the red. How would you approach the technicals at this point?
Yeah, good afternoon, Ekta. So, Ekta, yes, means the most important pillar as of now. Banking, the day when we see that bit of a profit taking, it completely derails the overall, positivity in the market. So, while the other sectors, apart from banking, energy, metals, auto, they are holding strong. But yeah, the underperformance of the IT and a bit of a profit taking in the banking, that is currently weighing on the sentiments. But Ekta, if you see that it's gone almost 3 weeks now that we are seeing that index has been hovering in this band 25,400, 26,000 mark. Yesterday we breezed that mark briefly. Eventually we could manage to hold that area, but largely if you see that we are making lower highs, lower low structure, so possibility of further dent in the coming sessions is much higher. When it comes to the benchmark, but the pace of decline is going to be gradual considering the banking is still holding strong.
All right, individual stocks, quick 2 ones, if you could tell us.
Yeah, so Mangalam, considering the auto tone means we are seeing fresh breakouts. TVS is one such name. Almost 2 month long consolidation range has ended. The stock is at the record highs. So we anticipate this overall momentum to continue. 3,800 should be a stop, and 4,100 will be something that we are eyeing as a target. At the same time, Bharti Airtel is a sell candidate, almost long-term moving average breakdown with strong volumes. The profit taking is likely to continue. 1820 should be your target area with stop at 1960.
Okay, all right, Ajit.
A quick one, Ajit. The IT pack, at every bounce, it is seeing sell-off. Do you think at current levels, there is still more room for shorting, or today's high and the subsequent decline from there has taken the juice away?
So Mangalam, I feel that we should wait for some bit of a consolidation, because yesterday we breached April month of 2025 lows around 30,900 mark in the Nifty IT index, and that's why we are seeing a bit of a relief or a rebound. But in case if we fail to recover and reclaim those areas, I doubt that we are going to sustain these levels, and probably around 28,000 something that the Nifty IT might test in the coming days. So sell on rise is something that you should maintain in IT.
Okay, sell on rise is what you should maintain in IT, so no conviction there at this point in time. Thanks very much for joining in and taking us through the technicals of the market and the setup at this point. We'll take a short break, but we'll get you a lot more in terms of specific stocks on the other side. Stay tuned.
Fly Emirates, fly better.
Welcome back. Well, we're tracking the entire weight loss drug market as it is definitely heating up at this point in time. So there are some interesting statistics which have taken place. For example, the reason why we're tracking it today is because Novo Nordisk, which is basically the innovator of the drug Wegovy as well as Ozempic, has cut prices in the US. So they've cut prices by 50% for Wegovy and 35% for Ozempic starting Jan 2027. Remember that this is because Eli Lilly's market share has been creeping up. So prescription market share is up around to 58% in the US, whereas Novo Nordisk stands at around 42%. Now remember that Novo's next-gen obesity candidate, which is CagriSema, also failed to prove it was non-inferior to tirzepatide in trials. So that was one of the other things that took place. And, now the market believes that it could possibly get competitive for other emerging markets where Novo Nordisk is going to see competition. The US is still a patented drug, but the reason why they cut prices is because Eli Lilly's Mounjaro and Zepbound seem to be grabbing much more market share much faster than anticipated, and hence that is possibly affecting Novo Nordisk in terms of resulting in this kind of a price cut. Now, Citi has said they have a sell and a target price of 1,070 on Dr. Reddy's. They've said that that Novo Nordisk may opt for similar price cuts in markets such as Canada and Brazil. They stay cautious on the generic semaglutide potential for Dr. Reddy's. Remember, Dr. Reddy's is expected to be one of the front runners to launch semaglutide in the Canadian market, and could possibly be one of the sole players or one of the limited competitors in that market for some time. But if Novo Nordisk, which is the innovator of the drug, which has cut prices in the US aggressively, does the same in the Canadian market, then the opportunity for a company such as Dr. Reddy's then shrinks. And hence, that is what the street is worried about. So they are estimating around $50 million for FY27, FY28 in Canada, which is lower than street estimates at this point in time. So it's an interesting dynamic which is taking place. Novo Nordisk has been in focus because they've cut the prices in the US, plus they had their recent obesity candidate or a new drug candidate in the obesity space, which did not meet their expectations. Now, separately, Biocon is in focus because they've received US FDA nod for another GLP-1 drug. So that is called liraglutide. It is not semaglutide. It is not tirzepatide. It's a different molecule called liraglutide. And that drug is also used in the treatment of chronic weight management. But the market size is smaller because the efficacy or the results that you get from this particular drug are not as great as you get from semaglutide as well as tirzepatide. So Biocon has already been selling this drug in the UK. They've received approval back in 2024. Now they've received US approval. So yes, it's a positive, but the extent in terms of market share won't be as much as these other popular weight loss drugs.
All right, Ekta, thanks a lot for that. In fact, speaking to us from the sidelines of the Bio Asia Summit, G.V. Prasad, who's the co-chairman and MD of Dr. Reddy's, said that they're going to launch semaglutide in Canada soon, and there is little outstanding information that the Canadian regulator wants. Listen in.
As things stand, there is very little outstanding information that the regulator wants from us, and we will, give them whatever they ask for. And if everything goes well, May should be a timeline for which we think will happen.
Okay, so we are still working.
We are just waiting for approval. Once approved, we'll launch.
So all of
stopping us
sort
from
of the outstanding issues you would say are resolved at this point.
More or less, yeah.
Okay. Any kind of site inspection?
Usually they may want some information, things like that. There's no inspection outstanding. It is just more information. Information requests we get, and then we submit the information.
Okay, well, sticking to the pharmaceutical space, let's listen into some interesting insights from Mr. Dilip Sanghvi of Sun Pharma on the pharma industry and AI use in Indian pharma from the sidelines of the 11th Global Pharma Quality Summit, which was held in Mumbai earlier this week.
I think we need to not only talk of cost when we are talking of quality, we also need to focus on compliance. And let's say my own experience is that when you talk of aseptic processes, every time human being get involved, there is a potential risk of contamination and what you call breaking of aseptic processes. So I think rather than looking at automation and using technology across, I think higher risk areas is where you need to focus on using technology. And it may possibly increase your cost. How can you use AI for, let's say, identifying root causes? How can you use AI for identifying the right CAPAs? Ensure that whatever CAPAs that you come up with are valid so that they don't have to be redone again and again. So I think there is enormous opportunity to look at AI for finding parameters where your batch is the most, what you call, efficiently produced. You have the highest yield, you have the best quality. So all of those things, I think, we can immediately embrace. And it will help us make our product more consistently and also possibly at much better cost.
All right, with that, we'll take a short break, come back on the other side, more from the markets. Stay tuned. Welcome back. A couple of these metal names are doing extremely well, but we were speaking about weight loss drugs, the impact of semaglutide and the impact of artificial intelligence. The second order impact of that could be on consumption discretionary. Why is that? Because IT jobs on the line, and will semaglutide have an impact on prepared dishes? We spoke with the management of Jubilant Foodworks. The MD Sameer Khetarwal joined us yesterday. Let's listen into a slice of that conversation.
So I think it's hard for me to say right now, but I'll tell you how I see this. Firstly, it is not playing out in Domino's in US, right? So they grew 3%. The results came out yesterday, I think plus 3% last quarter and plus 5% a quarter before.
Got it.
So I think that's one good indicator for me. Second, the number one reason why customers want to order Domino's is they crave for cheese. Second is they crave, this is a celebration. For both the reasons, they want to indulge themselves on these two occasions. And if there was something like this to happen, we'll obviously customize our menu in terms of portion sizes, bring in either protein or lesser carb. Very easy based upon our supply chain capabilities and consumer research we do to kind of change our menu.
All right. And what about the impact of the weakness in the IT space? Because a lot of people are saying that because of lesser jobs in the IT space or the general slowdown that IT sector or IT stocks are going through right now, the impact of that could be on some of these consumption discretionary items.
Yeah, I think to me that's a bigger threat than weight loss drugs in my opinion. Right? We are a brand where, so whenever you have a startup funding, you'll typically order a Domino's. Or whenever you get a promotion or a job in a good IT services company, you'll typically end up ordering and treating your friends with Domino's. I think those are occasions where I would worry more. I genuinely hope, and I've worked in this sector for 15 years before I joined Amazon. I think this sector is also very resilient. They have seen multiple such waves, and at the moment I would say there are more questions about AI than answers. And IT services companies, and hopefully they will pivot to answer some of those questions for clients like us, and therefore will be able to grow their base. In the short term, I do sense, Mangalam, that there is a lot more fear, and hence it can impact consumption.
Okay, all right. Interesting takeaways there, but it is definitely an evolving story. But that's all the time that we have on Mid Cap Radar. Your stocks once we're back. Stay tuned.
Hello, good afternoon. You've tuned into Your Stocks, coming live from the CNBC TV 18 Motilal Oswal studios. I'm Vinny Motiwala. With me is my colleague Arundhati as well. Arundhati, good afternoon, but not a good afternoon coming in for the markets. That's how you started Business Lunch. That's how we are starting our show. Same thing, same story. We've seen a fall coming in from the top for the Nifty. Now, Nifty is trading below the 25,500 levels. It is at 25,460, just managing to hold on to gains of 0.1% in the trading session. So clearly, the significant fall we've seen coming in the market, especially post 12:30 when we've seen this fall for the market. Let's look at the contributors. What is contributing to this drag in the markets? Now, on the positive side, you have ICICI Bank, Tata Steel, L&T, which is managing to hold on to gains. On the flip side, Reliance, that's seeing a fall. We're seeing SBI as well as HDFC Bank and Bharti and Airtel among the top drags that are coming in for the Nifty.
Absolutely, you summarized it perfectly, right, Vinny? We've got those metal packs that are leading from the front. We've got Nalco, Vedanta, SAIL, all of them doing well. We've got that IT pack that's also seeing some sort of a recovery today, right, versus the meltdown that we saw yesterday. And on the downside, on the flip side, we've got those realty stocks, we've got FMCG names, and we've got those PSU bank names that are not doing well in trade today.
Okay. Important flashes that are there at the bottom of the screen for us. Bharti Energies is a stock that was under pressure. We were talking about that 126% countervailing duty that has come in on these solar products. That won't apply to Bharti Energies. This is what they are saying, and this is coming in from their call. So 126% for modules which will be using Indian-based cells, again, which again will have non-Chinese source. And in Bharti's case, they don't use such cells. So we had a similar commentary that came in when we spoke to Vikram Solar as well. They also said, because of these cells have to be made in India, then those cells will be used in that solar module. If that is a solar module that they are exporting to the US, that's when that 126% comes in. And that is what even Bharti is talking about. So they are saying that they do not see any impact of this. So 126% is not applicable to Bharti Energies at a given point of time. And their supply chains are tied to around 10% jurisdiction. What they're meaning that they can be open in terms of, not getting impacted to this situation because the cells are not made in the in India, what they are exporting to the US. So no impact coming in there. Slight bit of a recovery. The stock's still down 8%, but we have seen, at one point of time it was down more than 10%. So that recovery is something that is interesting that we'll keep an eye out on. Most of these players have indicated that if the cells used made in India in that solar module, you're exporting that, then the impact comes and that 126% will come in. But as of now, none of these companies are saying that they have that exposure there.
Absolutely. So some clarity coming in over there on that front. But, let's move on to the stock queries. Joining us today are Sneha Podar, the VP Research Wealth Management at Motilal Oswal Financial Services, and Vaishali Parekh, the Vice President Technical Research at Prabhudas Leeladhar. Ladies, thank you so much for taking time out and being here with us on the show today. Let's dive straight into it. The first query coming in from Radha Krishnan, who writes to us from Kerala. He holds 775 shares of AB Fashion and Retail at an average of 75.18 rupees. He is a long-term investor and wants to know the outlook and prospects of his investments. He is currently making a loss on that stock at this point in time, as we can see on the screen. But, let's go across to our guest. Sneha, let's start with you. What's your long-term view on this stock?
Hi, good afternoon. So with regards to Aditya Birla Fashion, the company's long-term narrative is changing. That's definitely they are moving towards more premium brands. So their focus is more on portfolio diversification towards the luxury brands where the margins are much better, and towards the ethnic brands. So this format is resulting in their overall revenue trajectory improving. But then because of the continuous investments that goes into the maturing of these businesses, the profitability still continues to be in losses, and we don't see any respite in losses at least for next 2 to 3 years. So the numbers would continue to remain under pressure. So while it's the investor is looking from a long-term perspective, but we really don't have a clear roadmap as to when the company will turn profitable. So he might have to hold on for a really long time. So my advice would be to sell on rise, in fact, sell on any bounce that he sees, unless and until he's ready to hold on from 5-year perspective.
Okay, sell on a bounce. That's a word coming in on the fundamentals, not seeing a good trajectory, at least as of now. But your view, Vaishali, on this one as well, in terms of technicals also, when you look at the stock performance in the last 1 year, not done pretty much anything, right? It's down 27, 28% odd. What should the viewer do? Are you expecting to see any bounce in the recent time where they could sell off? Or would you suggest maybe hold on to this one?
Hi, very good afternoon, all of you. So first of all, yes, overall, the long-term trend is very weak. But what I see from the recent data, after making a low at around 60 levels, it's showing an attempt to give a good bounce back. So now that this person wants to hold with a long-term perspective, I would say keep a stop loss of 60. And the way I'm looking at it chartically, I think the worst is behind. This can show a bounce up to 70 to 80 levels. Actually, confirmation of strength is only about 80. So right now you take it as a trading strategy. 80 would be a tough resistance. So one can exit thereon. And if it bounces and goes beyond, you can again consider it.
Okay. Let's move on then to the next query. We have Rajashekhar, who's writing to us from Andhra Pradesh. He holds some shares of Eris Life Sciences. The price is 1,458 rupees. Also holding shares of Zaggle Prepaid, and this is at a price of 290 rupees per share. So Eris Life Sciences, he's making a loss. Zaggle Prepaid also, he's making a loss on this one. Wants to know whether to hold or sell. Sneha, what's your view for both these names on the fundamental front? Eris Life Sciences, obviously, the play also comes in, so much happening on GLP, CDMO side. So what are you keeping an eye out on here?
So see, in case of Eris Life Science, we have a positive view. Actually, the company is moving way ahead with regards to its diabetes portfolio. Even it's expanding its insulin portfolio and is likely to benefit from the GLP launches in India. If you look at the CDMO side, there it's scaling up very fast, and for biosimilars also, they have a good plans in place. So overall, the business transition is quite visible. The only concern with the stock is its valuation, which is currently at a premium it's trading. And we don't see in fact, we see very limited upside from here. So our target price for the stock is 1520. But if he's ready to hold on from a long-term perspective, then definitely he can recoup the losses, because the fundamentals for the company remains quite strong. With regards to Zaggle, we are a little concerned, though the company is transitioning from a gift card business to a spend management company. But then, the cash flow, the visibility towards the cash flow remains a concern. Though the management has guided that the cash flow will turn positive in FY27, but still the numbers doesn't really show that confidence. So we'll be more in a wait and watch scenario for Zaggle. So Zaggle probably he can exit, but Eris he can hold on to from the medium to long term perspective.
Sure. So hold on to Eris and maybe exit Zaggle. But Vaishali, any key technicals that he needs to watch out for both these stocks? You can start with Eris.
Definitely. So Eris, actually, the long-term trend is very much intact. Currently, after showing a good rise, it is at a very good support level. So since this person has bought it at higher levels, I would say you can average out probably with 1200 as support levels, because technically also I see a first bounce coming at least up to 1550 to 1600. So this way he can get his price better and perhaps get into a profit mode. So this is my view for Eris. But Zaggle, I would say exit, because there is no confirmation, there is no sign of reversal also. So I would say it's a weak stock right now. I would say exit.
All right, so weak stock for Zaggle Prepaid, and Eris you can hold on or average out, as you pointed out. The next query coming in from Lokesh, who writes to us from Hyderabad. He holds 25 shares of Bata at 925 rupees. He wants to know the short-term view on the stock. He's also making a loss on this. But, on the fundamental front, Sneha, what do you make of this stock? What are the long-term prospects? What's the short-term prospect for the stock as well?
So Bata, post GST-led formalization, Bata is witnessing some sort of recovery in the overall volume. Their premium portfolio is quite resilient, but it's the mass portfolio where the recovery is very slow. And even going ahead, the kind of the confirmation that we got from the Q3 numbers and the recent Jan and Feb data, it points that the recovery is very, very gradual, and it's not a sharp acceleration which we are witnessing with the stock. So probably and the valuation still continues to be a concern for the stock. So my view is that probably Bata will take a lot of time to show that positive reaction in its stock price. Especially with a short to medium term point of view, the investor can actually exit Bata India.
Okay, you would say exit Bata India in the short term. On the technical front, what's your view coming in, Vaishali?
Well, this stock continues to make lower lows and it's in deep oversold. So at the most, one can expect a bounce, but there is no strength seen. So my view would be to exit.
Okay, your view is also to exit Bata. That's the word there on the technicals as well. But on that note, we're going to slip into a very short break. After the break, we'll come back. We'll be answering more of your stock-related queries. Stay tuned in.
Welcome back. You're still with us on Your Stocks. And with us on the show are Sneha Podar of Motilal Oswal Financial Services and Vaishali Parekh of Prabhudas Leeladhar to answer all of your questions. The next query is coming in from Rajendra, who writes to us from Bengaluru. He holds 600 shares of CEAT at 4,017 rupees. He is a short-term investor and wants to know whether to hold or sell at current levels. He adds, what other stocks can he invest in if he were to exit CEAT? He is currently making a loss. So Vaishali, Sneha, if I can come to you, what are the fundamentals on this stock? Do you think he should stay with it, or do you see prospects in other stocks if he were to exit CEAT?
Okay, my suggestion would be to stay put with CEAT because the overall tire industry is witnessing a turnaround. If we look at the overall replacement demand, that is picking up quite well, and the company is moving towards more and more premium products, which is resulting in market share gain for them. With the new demand coming from the OEMs, as the auto sales are doing good, and along with the pickup in the replacement demand, so tire industry should do well in the near future. And moreover, the raw material prices are quite stable, so that will further help them to improve their profitability. So my suggestion would be to hold on to it, as we are expecting about 27% earnings growth over the next 2 years, and for us the target price is 4580 from 1 year perspective.
Okay. That's the view there on CEAT on the fundamentals. Also, last time when we spoke to CEAT at CNBC TV 18, they also said that they're looking for a double-digit growth going forward as well. And US forms less than 3% of their total turnover as well. So no concern on that front as well. But on the technical front, Vaishali, for CEAT, what should the view be doing?
Well, I do concur with what Sneha just said, because we are also of the same opinion as far as the technicals is also concerned. And as a disclaimer, we have just today recommended JK tires to all our clients. And I see overall whole tire industry, whether it is CEAT, Apollo Tires, MRF, they all are showing new round of momentum to set in. So I think continue holding and look for higher targets.
Okay, continue holding and look for higher targets. That's the word even on the technical front. Let's move on then to the next query. We have Raj Agarwal, who's writing to us from Bangalore. He's holding 450 shares of Suzlon, and this is at a price of 62 rupees per share. Right now, they're making a loss on this one. Long-term investor wants to know the prospects of his investment. Sneha, Suzlon Energy just a day or two back, they'd announced that restructuring in terms of their top management as well, new MD coming in. What are you keeping an eye out on for Suzlon Energy as well? Especially this is focused on wind power, right?
So see, I mean, Suzlon from the long-term perspective looks definitely good, because overall, the company is well positioned to as a play on the wind power side. They have a long-term growth platform. Currently, they are struggling with a lot of concerns with regards to. I mean, there's a lag between when the wind equipments gets delivered and when they get commissioned. So that is creating some sort of pressure on the working capital. Moreover, there was a lot of anxiety with regards to the leadership transition. So now with that over, at least the overhang from the stock goes away. But having said that, there are a lot of regulatory headwinds with regards to the renewable energy side, though the government is pushing a lot on the renewable energy front. But there are a few regulatory uncertainties which continues to hover. So Suzlon in near term might not really perform. It might continue to consolidate, because even the recent results were not that encouraging. But from the long term perspective, once the dust settles down, probably the stock can do well.
All right, once the dust settles, the stock could do well. But Vaishali, any key levels he needs to watch out for?
Well, technically, I think the stock is quite beaten down and likely to correct furthermore. 36 is a good level. That is a level which is really a make or break level, and that is a level to watch for to get an entry into this stock. So one needs to take the strategy accordingly, either add more or hold on, for keeping in mind that this should be the support level.
All right. The next query coming in from Sudhakar, who's writing to us from Chennai. He holds 800 shares of IREDA at 260 rupees. He wants to know if he should continue to hold or sell. Sneha, what are the prospects for this stock?
See, IREDA is a good play on the renewable energy front. What I see as a major concern for this stock is they are trading at a high premium compared to the PFC RSE. And moreover, this is completely concentrated on just renewable energy lending, whereas PFC and RSE are more diversified in terms of lending. So they lend both to renewable energy and thermal energy. So the premium valuation, which is currently about 3x or so is very much high, and that is what is resulting in the underperformance of the stock. Though the stock has corrected recently, but still the valuation gap continues to be pretty high. I mean, the stock is nowhere we can say that it has become cheap in terms of valuation. So probably some more correction can be seen, and before it turns lucrative for the investor.
Vaishali, what's your view coming in for IRERA?
No, I would say, of course, the stock has been corrected to quite an extent, but it's pretty much close to 120 levels. So I would say not in a hurry, continue holding. Watch at these levels. If 120 levels break, then exit. Otherwise, just continue holding. You will see a good bounce coming in from here. And the first target to look at would be around 135.
Okay. Let's move on then to the next query for today. We have Sachin, who's writing to us from Hyderabad, holding 200 shares of Bandhan Bank. This is at a price of 295 rupees per share. They're making a loss on this one as of now. Should they continue to hold or book their losses? Bandhan Bank, Sneha, your view?
We are very positive on Bandhan Bank. I mean, if you look, the bank has been, it was struggling with regards to the asset quality downturn, which it witnessed over last many years. But now, the overall balance sheet has been ramped up. Their asset quality has started improving, and they have done a lot of cleanup in their overall MFI asset. So we believe that it is at a good inflection point, and from here, the numbers can start improving. In fact, the Q3 numbers were very encouraging, and with the interest rate cycle in a downturn, that will help them to revive their overall profitability. And the MFI segment is also seeing green shoots. One can actually hold on, and the losses can be recouped in the near future.
So the losses can be recouped in the near future. All right, Sneha and Vaishali, thank you so much for taking time out and answering all of our viewers' queries. And with that, it is a wrap on this edition of Your Stocks. But do remember to email us your queries and we will address them with our experts. Stay tuned for Closing Bell to take you through the last hour of trade.
go beyond market headlines to understand the reasons for the day's movers and shakers, and get your portfolio ready for tomorrow. Beaming live from the CNBC TV 18 Motilal Oswal studio.
That's the final close. S&P 500 up 3/4, Nasdaq up 1%. So basically recovering from the fall that we had the prior day.
But I think the bias will be on the upside from there on. Just a near-term technical bounce. The trend is still very much low, but otherwise I don't think you should rule out a technical bounce on the Nifty IT index.
And as time goes by, I believe the tariffs paid for by foreign countries will, like in the past, substantially replace the modern-day system of income tax.
Structural themes like data centers and AI, they're expected to significantly boost demand for aluminium as well as copper going forward.
The first rates come through. It's a bit of a bounce, 0.5% higher, 25,540.
Today, the government of India has come out with their offer for sale.
The Tata Sons itself is an unlisted company, so nothing that happens in Tata Sons directly impact the investor.
More importantly, the conditions are very surprising. One is not listing of Tata Sons.
Considering the sell-off that we saw yesterday, it's a pretty good day for the markets. We've recovered most of what we lost in yesterday's session.
We decided a long time ago that it is best to base our entire business case on the Indian market, which, by the way, is growing very strongly.
The fine line is that the cells are they have the duty, they're not the solar panels. So the effective rate of duty is applicable only cells.
Whenever taxes have increased sharply, it has fueled illicit industry.
Yeah. The registration data so far for the month of February 2026 is indicating a continued strong demand that we had started seeing in the month of October 2025.
We were speaking, the Sensex has now moved into the red, and that's an important part because the Sensex is now down about 2 points off its highs.
Okay, 30 points higher on the Nifty, but it's a disappointing kind of last hour coming up, essentially because we were up, 200 points, right? It won early on in the day, and it's all disappeared. And it's not as if there's a new blog post which is doing the damage or anything of that sort. It's just, a climb down from the day's high. IT index has also climbed off. It's still in the green, but everywhere else there is profit booking, which is happening. 25,450 is where we find ourselves at. This is Closing Bell. We're coming to you from the CNBC TV 18 Motilal Oswal studios. I'm Prashant, Rima and Nigel with me. Guys, afternoon.
Hi, afternoon. Many sectors are those still holding up in the green. You've got metals with a gain of over 2%, 2.25%. Auto index surging 1.5%. That Vahan data is out. Pharma is resilient 1.5%. And IT index was up 3% at one point of time, but now up only 1.5%, but still some green. PSU banks are seeing some amount of profit booking. So if you pull up the SBI chart, you will see weakness there. FMCG is soft, and Reliance Industries is one heavyweight, which is dragging the market slower.
Well, that's right, Rima. And I'll be interested to see the institutional flows today because the FIs, they've turned buyers. But the volumes are quite decent today, actually. So let's see whether or not this fall from the top is because of any kind of institutional selling. That's point number one. Point number two is, I think the next 8 to around 10 trading sessions, you'll get these periodic drawdowns from broader markets because you'll get into, the first 15 days of March is normally where you see a big churn with taxation in mind. So some kind of hiccups for the next 10 trading sessions. Remember, next week you have Holi as well. So you have 4 trading sessions there. This you have a couple of trading sessions and maybe post that. So next 2 weeks will be a little tricky from the broader market perspective. But going by what we're seeing on the economy front as well as earnings expected to pick up, I think the broader markets will outperform from here on. Small cap index still close to 12% away from its 52-week high, while on the headline index, we're just around 3% away from those highs. So let's see how that goes. At BEL, winning multiple orders, 733 crores. That's good news, but it's all the way since February 6th. So it's a cumulative order win that we're seeing.
No, absolutely. And BEL, of course, as a management, we'll try and get on the program here as we kind of go along. But let's just quickly run you through what's lined up here on the over the next 60 minutes or so. So banks, of course, it's a sharp fall from the day's highest level. Then if the PSU banks index, of course, is taking it hard. FMCG index is down 0.18, and the other levels all up there on the screen. Metals is something we'll focus on in a positive way in a bit. Now, lack of broad-based conviction, right? I think that's showing up everywhere. Market breadth, by the way, is about 1:1 now. It was 2.5, 3:1 in the morning as we started. So that is that. Well, let's just look at the auto space in some, we will look at the auto space in some detail. Registration data from Vahan is signaled continued demand strength. February likely to be the best month, best Feb in terms of registration since 2022. So that's interesting. And the stocks are higher. They were up more still earlier on, but they're still up at this stage. And of course, solar stocks, Vari, Premier, etc., taking a bit of a knock. And we have two management bites from Solar and Premier, so we'll play those out as well. How do you position yourself as we kick off the last hour? Mitesh is with us. Mitesh, good afternoon. What do you recommend?
Good afternoon, Prashant. I think, very clearly the market is not showing willingness to go higher. And at the lower levels, there's 25,400. Actually, there's a big budget day gap, starting from 25,1. So not the budget day, the day the treaty was announced, trade pact between India and US. I think that big gap from 25,100 till about 25,330, 350. I think that zone will keep providing you bounce backs. So I think this is a market which, to me, it's a contracting market while there's intraday choppiness, volatility. But it's a market which is not going much below 25,400 to about 25,350, and on the upside is very clearly failing to get past 25,800. So for the time being, I think on the index, maybe trading may not be a good idea. But on a stock-specific basis, I have a sell on Lodha Developers with a stop at 1,041 for target of 990, and ICICI Pru, that's a buy with a stop at 654 for targets of 682.
Okay, thank you very much for that. Let's talk about the metal stocks. That's the top sectoral index. Nigel is moved over to the big wall to put it all into perspective.
Well, let's explain why metals are outperforming. The dollar index, well, that remains weak, which is supportive for global commodities. Then there are growing hopes that we may avoid a large-scale demand destruction, despite all the global uncertainties. And thirdly, structural themes like data centers, AI, they're expected to significantly boost demand for base metals. Steel companies, on the other hand, they are likely to witness margin expansion in Q4 FY26. Reasons are that there have been price hikes which are supported by the implementation of safeguard duty. Flat product prices, well, they're up by close to 5 to around 6,000 rupees per ton at least, while long product prices, they're up by close to around 10,000 rupees. Additionally, strong seasonal demand, that will result in operating leverage as well playing out. So Q4 should see a big bounce back for ferrous names. In fact, we had a couple of experts on our channel today, and Sumangal of Kotak, well, he says that he's positive on aluminium. He believes that fundamentals remain intact with structurally growing demand while supply lags. He adds that when copper as well as copper-aluminium ratio, that moves to around 3.2 plus, there is a gradual shift towards aluminium, and believes that aluminium substituting copper can just aid demand from here on. Aditya Bilekar of Axis Securities says that he prefers ferrous over the non-ferrous names. Let's run you through a few brokerage notes that we got in today. Macquarie maintains an outperform on JSW Steel. Reasons are that domestic demand remains strong, up nearly around 7 to around 8% year to date. They also say that despite the 9% price hike since mid-December, domestic prices are just at around 1 to around 2% premium to import parity, which compares with the historical premium of around 5 to around 7%. That's leaving hope for another price increase. Boffa Securities has upgraded Vedanta Limited to buy from neutral. The target price has got raised to around 840 rupees. The upgrade is driven by their bullish outlook on aluminium, supportive silver prices, and they estimate around a 6% dividend yield. They also highlight that there's significant deleveraging done at the parent level, and that reduces risk around the higher brand fees as well as intercompany loans as well. And finally, Nomura, they've initiated coverage on Lloyd's Metal as well as energy. The target price they have is at around 1,600 rupees. The rationale, low-cost iron ore assets acquired all the way till, that which are secured all the way till 2057. There's backward steel integration, predictable MDO earnings, as well as copper diversification. They believe that the company is transforming from a pure play miner to a more stable, less cyclical business model. Nomura estimates that the EBITDA can scale around 10,900 crore rupees by FY28. That compares with around 1,900 crores in FY25.
Thank you very much for that. Siddharth Khemka, Head of Research, Wealth Management, Motilal Oswal Financials, is now joining in. Siddharth, you want to weigh in with what Nigel had to share?
Yeah, good afternoon. I think, yes, metals are something that we are very positive on. There are two reasons clearly that helps. Yes, the dollar index that is becoming, the weakening dollar is definitely supportive. But the bigger risk that the market is looking at is the AI-led disruption. And metal, on the other hand, is a key beneficiary of the huge capex that is going to happen, or that is continuously happening because of the AI data centers. So power demand is something that will see exponential growth. And for that, there is a requirement of metals across, be it in the transmission, distribution, the towers that will be set up, the wires and cables that will be required. In the renewable energy space, there is a lot of industrial metals that will be required. So net, what we are seeing is that the demand environment for metals looks good for the next few years, and the supply isn't catching up or isn't keeping up the pace with the improvement in the demand expectation. Hence, realizations are likely to go up, margins are likely to be pretty strong. Within metals, what we like, industrial metals, copper, zinc, aluminium, that is something that we like, we prefer. That's, I think, better off compared to the ferrous, but still ferrous also would do well. Within the base industrials, Hindustan Copper is something that you can look at from a copper perspective. But I think Vedanta, which is a kind of a commodity conglomerate, that benefits from the entire cycle. They have copper, zinc, silver, aluminium, and the restructuring that is happening, value unlocking that will happen throughout over the next few months. That is also value accretive. Plus the cash flows that they are generating is being paid off. So debt is coming down at the parentage level. So our preferred pick there in the metal space would be Vedanta, where we have a target price of 810. Some of the other stocks in the ferrous side that we like, Jindal Steel is something that is doing pretty well, and we believe that that could be a pick from the ferrous side as well. So pretty positive on the entire metal space, the value chain.
Thank you. That's one pillar of the market, metals, and the other one is the auto sector. That's also surging, and the Vahan retail sales data is indicating that the month of February has been good. Sudarshan joins in with the numbers.
So it's a cricket fever across the country. While things have become difficult for our men in blue, but if I can use the cricket analogy, in T20 World Cup, normally you have three phases: power play, middle over, and the last when you accelerate. In power play, if you lose 2 to 3 wickets, then in the middle over, you play with the caution, then you accelerate in the last 2 to 3. It's the same kind of the story that we have seen for the auto sector in FY26. Ahead of GST rate cut, when GST rate cut was done, and after once we have started seeing the impact of GST rate cut. Till the month of September, registration was down, auto industry was facing the lower sales, and after that, from the month of October, November, we have started seeing an increase in the registration, and it has seen a big increase from the month of December 2025. Now, if you take a look at the data of February 2026, majority of the company, we still have 4 days to go in the month of February, but majority of the companies have already crossed the registration numbers that they had seen in the entire month of Feb 2025, and the growth can be more than 20%. And also, if the current trend holds, Feb 2026 is going to be the best February that we have seen at least since 2022 that we have the data from Vahan website. Now coming to the growth number. Total registration so far in Feb 2026 is up 21%. Similar trend can be seen for two-wheelers, up 22%, passenger vehicles 20%, commercial vehicle 23%, and three-wheelers too are seeing growth of 19%. And if you compare current month's growth rate versus the last 2 month data, you'll see the demand has continued. For total, against 18% of last month and 16% of December 2025, we are seeing 21% growth. Two-wheelers, 22% against 21% of last month and 10% of December 2025. Similar trend can be seen for passenger vehicles, commercial vehicles, and three-wheelers. Now coming to the company-wise. Starting with two-wheelers, two major companies. Bajaj Auto and Hero Moto, their registration for the month of Feb 2026 is just 3% away from the entire registration numbers that they had seen in Feb 2025. Other two major companies, TVS Motor and Eicher Motors. These two companies have been outperforming the industry and they will continue to do so in the month of Feb also. For Bajaj Auto, one more positive, export, which contributes almost 50% to total volumes. In the last 3 to 4 months, they have been doing 2 lakh units per month. Rajiv Bajaj believes that from the month of April, it can go up to 2.5 lakh units. Coming to electric two-wheelers, similar story that we have seen in the last few months will continue in Feb also. Ola will underperform and Ather will outperform. Ather's registration in Feb 2026 is already 40% higher than what they had seen in Feb 2025, while Ola is expected to see a decline once again. Coming to passenger vehicles, 3 major companies, Mahindra & Mahindra Auto, Tata Motors PV and Maruti. Registration of these 3 companies has already crossed the registration of the entire month of Feb 2025. And surprising part, the outperformer is Tata Motors PV. Commercial vehicle space. 2 major companies, Ashok Leyland and Tata Motors Commercial Vehicle. Their registration too is already higher than Feb 2025. So in a nutshell, if the current trend holds, it could be a bumper month for the auto sector.
And so when we get this data, right, when we get on the first, we get the retail number. That is basically out of the factory gate, right? Those that number, that's not retail sales. This is more indicative of the retail sales.
Correct. So,
but it gives you the trend, the directional trend of what the numbers can hold, right? So
exactly. So this is the retail, and what companies report on the first or second of each month, those are the wholesales. But this is the actual number that you can get the indication from majority of the companies.
Okay, and it's a good February as you're pointing out. Thanks very much for that. So, yeah, I mean, it's pretty comprehensive numbers which Sudarshan has put out there. Siddharth, I don't know if you have any thoughts here, and it looks good, but it's, of course, going to be about what stocks you pick in the space. You know, I remember speaking with Ramdev Agarwal earlier on in the year, and he said the dark horse is going to be autos this year, the big one, where money will be made, and he's very bullish on Maruti and things like that. But how would you connect that, what the data Suresh presented, and where stocks are?
So yeah, I think, Prashad, if you look at the demand and outlook for the auto sector, that has materially improved, especially after the GST rate cuts. And we believe that the demand continues to be pretty strong. Even if there is some potential risk from the rising input costs, we are seeing that commodity prices are rising. We expect the industry to pass on these price hike through the price hikes, given the healthy demand environment. Across segments, if you look at passenger vehicles, two-wheelers, they are reporting pretty strong numbers. Tractors are pretty steady. We are also looking at an upcycle in the CV cycle, and that should be that could be another potential trigger within the auto space this year. Further, if you look at the auto anchs, while the OEM growth is strong, the key trigger for this year again could be the free trade agreement with European Union. A lot of these auto ancillary companies are exporting in the European region, and that brings in a lot of clarity. So our preferred picks, as you rightly said, the stocks would make a lot of difference. M&M is our preferred pick, where they're pretty strong in the SUV market, in the CVs market also. They're pretty strong. Tractors, there remains a key stronghold that we are seeing. Within the two-wheeler space, TVS is our preferred pick, pretty strong in the EV segment, continuously becoming market leader there and a strong growth drivers. And within the auto ancillary space, we like Endurance as well as Motherson Samvardhan.
Thank you very much for that. Let's put the spotlight on the solar companies. Waaree Energy still down 10%, Premier Energy 6% lower, Vikram Solar has slid close to about 6%. Now this follows the imposition of 126% duty by the US on solar imports from US. Now we had a chat with the management of both Premier Energies and Vikram Solar, and they seem to indicate that the impact on them is nil or very limited. Yet there hasn't been a recovery in the stocks. Stocks are still down close to about 6 to 7%. So let's just hear out what the management had to say, and then we'll get Siddharth's view in.
Given the recent movements in tariffs and the policy intent from the US government, we decided a long time ago that it is best to base our entire business case on the Indian market. You know, we're not affected by it. in the short, medium, or even the longer run. If you look at the overall exports from India to the US, they actually came down by more than 50% in 2025. And in fact, the total volume of exports was actually less than 3 gigawatts, which is, in my estimation, less than 10% of the total Indian module production.
The US markets have been phenomenally turbulent, and obviously this 126% duty on the face of it seems like it's going to bring Indian solar exports to a grinding halt. Our exports have been consciously pivoted towards the domestic market. The export capacity in the last year was quite low, considering the changes that are happening in the global scenario. Knowing supply chain, knowing the changes in the international tariff and geopolitical dynamics, we have pivoted significantly over the last years. And so would most of the other large players who are exporting, which are not so many, as so to speak, in India. And for those reasons, I think the impact on the exports overall would be quite limited.
Siddharth, the companies seem to say that the impact on account of these duties will be limited because companies have consciously brought down their exports and they're focusing on the domestic market. But even in the domestic market, there is that fear about a medium-term supply glut because Adani, Reliance, they're all setting up large capacities. Tell us your view on these stocks, Vari, Vikram Solar, Premier Energies, and how the stock price today are reacting to this particular news flow.
I think the biggest challenge has been the uncertain global markets, especially from the US, where the administration is not in favor of some of these renewable energy sources, and hence we have seen that last couple of months, last couple of quarters, there has been a sharp de-rating in the renewable energy stocks. Nonetheless, if you see some of these companies, Vari, Premier Energies, both of them, which are among our covered stocks, there has been a stronghold in the domestic market where the government focus has been pretty strong to improve or increase the market share of renewables in the power generation. Order books is pretty strong, but I think right now, if you look at purely in terms of price movement, the sentiment for the near term will remain a little bit of overhang given the uncertain global environment and how they execute in the near term. Last quarter, the December quarter, we saw a glut not only for the manufacturers but for the generators as well in the terms of the renewable energy production that they did, and a lot of which could not be utilized because of your grid constraints and supply distribution constraints. So I think a lot of investments is going to happen. We need to look at this segment not from a near term but more from a longish term perspective, given that a lot of regulatory changes and a lot of newer entrants are coming in. Nonetheless, Vari, Premier both have secured their stronghold in the domestic markets. For Vari, they have about 20% market share in the cell and 13% in the module market share. They have kind of integrated in the value chain across EPC, the BESS, as well as the green hydrogen segment, and positioning as a leading you can say solar bellwether. So I think again near term could be pressure, but one needs to look at it from a longer term perspective. It could be an opportunity to add gradually, accumulate gradually over the next few days in this pressure.
Thank you, Siddharth, for joining in. The Sensex, by the way, has now dipped into the red, so it's lost more than 700 points, almost 800 points from the top of the trading session. All gains have evaporated, and there are a few IT companies which are still down today, despite the broader recovery in tech names. Hexaware is one, 2.5% down on that, so it's hit a fresh 52-week low. The other one is First Source, 4% lower, Signed, 1.5%, 2% lower. And then you've got names like an eClerx, Nazara, Latent View. These stocks too are not participating in the tech up move. Get into a break. On the other side, Vaibhav Sangvi of ASK Hedge Solutions joins in on the other side. Welcome back. Let's find out what the big movers are in today's trading session. Hormus joins in, as always, with the top buzzers.
You know, for a change today, the PSU banks are on the other side of the spectrum, and leading the fall today, State Bank of India. The fall that has come only very recently is a 3% fall from the highs of the day now. It's only in the last couple of hours that the stock has begun to collapse from the highs of the day. It's the second day of losses now for the stock. It had ended lower in yesterday's session as well, and it is only at over the last 1 hour that the volumes on SBI moved above its 20-day average. Until today, for a better part of today's trading session, the volumes were subdued on SBI, and you can look at the volumes as well. 1.5 crore shares have been traded so far. The 20-day average is almost 1.2 crore anyway, so at parity with the 20-day average, nothing significant here. 70% of the shares traded so far have been marked for delivery on SBI, and the stock closed to its record highs as well. Yesterday hit a record high of 1234. Of course, the big newsmaker of the day has been Vari, the biggest single day fall that the stock has seen since November of 24, 10% lower. There's a slight recovery after the management clarification on those duties. It has snapped a 3-day gaining streak. The premiums on the F&O side of the 2500 put option have gone up over 400% already in today's session. The volumes today are the highest in nearly 6 months. That close to 1.4 crore shares have been traded today. The 20-day average is only 12.5 lakh shares on Vari Energies, but only 20% of the shares that have been traded so far have been marked for delivery, but significant trading volumes, becoming the most traded stock on the Nifty 500 in today's trading session. The top gainer today on the Nifty 500 has been Concord Biotech, as the stock is up 13% in today's session. It had gained a similar quantum on the 6th of February as well, and volumes today are the highest since its listing, which is back in August of 2023. The turnover today has crossed 1,000 crore, which is almost 25% of its free float market cap, which is close to 4,000 crore rupees. Close to 90 lakh shares have been traded today on Concord Biotech. The 20-day average is only 2 lakh shares. However, out of those 90 lakh shares, only 13% so far have been marked for delivery. And despite this move that you have seen today, the stock is still down close to 30% over the last 12 months.
All right. Thanks very much, Hormus, for that. There's lots of interesting moves with regards to individual names here and there. I mean, not very much to show for all of it as far as the Nifty goes, which is still up just 40-odd points, significantly off. And it's almost like to the last stock, 1:1 advance decline ratio. But I have to say that it's a pretty short list of big volume-led losers, but it's a relatively much longer list of volume-led gainers that we have in that sense. So that's good to see. Vaibhav Sanghvi is with our CEO, ASK Hedge Solutions. Vaibhav, good to have you here. Let's just start with the metals complex, which Nigel was highlighting earlier. Stocks that sold off, they're back. Vedanta is a top volume-led gainer. Is it just a tactical kind of a move, or what's your sense? Or this is, look, the bigger top-down view from the beginning of the year actually has been, this view has been there for 2 years now, is that hard assets perhaps will do well. And what's gotten thrown into the mix in the last 2-3 weeks is AI. Now, AI, unlikely it'll do anything to directly to copper or aluminum or steel, etc. So there is that perhaps at the margin as well. But what's your sense here? And anything you own, anything you've done here? Metals.
No, Prashant, I think the metals have been the story for the last 6 to 9 months, in fact, and partly because of the China involution. And at the same time, from a domestic standpoint, we've seen the anti-dumping duty also. In addition to that, I think what we are also seeing is because of the way the monetary policies are from a global context, along with the liquidity available, we have seen some good action from an overall metal space, including your precious metals. While base metals have a direct correlation with how the economy does, but this time around, it is more to do with the supply side rather than on the demand side. Which is where we are seeing that the price being pretty firm, from metal perspective. My sense is basically the valuations are getting in a fair zone to rich zone, and maybe I think this can continue till the metal prices remain robust.
Vaibhav, hi, afternoon. You want to tell us about the positions that you're taking largely, where you're long, where you're short, how you're hedging, and what's the view?
See, I think it's a pretty volatile time. I mean, if you ask me from January to February, we've seen numerous amount of binary events kind of coming about. And to be very honest, that's happening post-market close. Now, in this kind of environment, when our market movement is largely dependent on the events which are happening either in US, probably in Middle East, or China, Taiwan, Korea, those time it's not good to be adventurous and probably carry a very big net exposure. So at this point in time, as we speak, we are pretty much neutralish from a market standpoint in terms of the exposures. However, from a sectoral standpoint, I think we have our preferences. We do like, continue to like from a financial perspective, industrial, which has an exposure to data centers, and some consumption stories as well. So that has been our pick on the positive side, of late.
Hi, Vaibhav. Good to see you in. Vaibhav, this big AI fear, what about the second, the second level impact? People say that discretionary spends get hit, economies get hit, the entire, setting up of GCCs get hit as well, because if it is just cheaper labor and cheaper way of getting things done, people say we have AI, we don't do that as well. Could impact real estate, could impact discretionary spend. What is your view on that?
See, I think, Nigel, the evidence of that already is something which we are seeing on the market performance in terms of those respective sectors as well. We've seen real estate kind of correct over the last few weeks, especially post-Anthropic event kind of happened. Of course, the resultant effect in terms of the consumer spending may probably take time, purely because it's not that overnight the employment is going to get vanished. Now, if that has to happen for some reason, then it's a different story. But my sense is basically if there is a panic, if there is correction probably in the consumer names on back of these fears, then I think that may be a good opportunity to probably add up to our portfolios as well. So in some respect, yes, possibly impact on the real estate segment, but on consumption is not very, we are not very worried about it.
And on tech, sorry, I missed it. Are you long or short?
On tech, we are neutralish. Too many things moving around at this point in time. Having said that, the service industry, software as a service, I think will have to undergo a lot of changes in terms of the business model and how they kind of function. In our view, from a medium-term perspective, I think with a much lower employee base, you may probably retain your revenue, thereby probably increasing the efficiency per employee as well. So interesting times ahead, and probably we'll have to wait where kind of things move on from here.
Yeah, Weber, we leave it there. Thank you very much for joining us. Quick conversation, but in the time that we were talking, the Nifty's added about 40-50 points, right? So there's a bit of a spike which has come through, and yeah, I mean it's showing up now. And what do we have? We were at 250 or so. We were at 25,440. And we're up about 60 odd points from there. So in the last 11 minutes or so, there's a 60 odd point pop which is materialized. Let's just look at the Nifty Bank as well. There is a pop here as well. So not as sharp as the Nifty, but the Nifty Bank is now in the green, slightly in the green, marginally in the green, and maybe the IT index as well. IT index is still up about 1.7% or so. That remains off the high. The high was made early on at about 9:20, 5 minutes post-market open. So that's the picture. Market breadth is swung a little bit to the green. It was exactly 1:1 at about 250. It's 100 stock difference now. 1,600 up and about 1,500 lower. So things moving slightly for the better. You can see that on your screens right now.
Just one more stock, Prashant, SpiceJet, the bombed out name. There were, I think, 10-20 crore shares that got traded earlier today. 10 crore, I think, was the large block. The stock was down at lower circuit, bombed out name. From those lows, I think suddenly there's a large trade that again has taken place. And the stock has recovered from the day's low just $1 or so. But there is some recovery that's been seen. So I'll be watching out for the block deals today to understand what's going on in that big recovery from the day's low. And talking about the Nifty stocks that have gained, Interglobe actually is a stock that has moved to the day's high. One of those names. It has not too much weight on the index, but Interglobe is another stock that's moving up as we speak.
All right, let's take a break. We are back in just a bit. We tell you some trading ideas. There's 25 minutes to close. And you know those solar companies, Vari, Premier will put out some of those sound bites as well. I mean, what they said is, of course, at the bottom of the screen. So coming up in just a bit.
Welcome back. Nigel's now walked over to the big wall to fill us in with the F&O trends.
Well, I don't think that the trend has really changed. I think the trend continues to remain up till the 25,000 odd mark does hold out. And the reason I say that is because even when we're seeing a bit of a dip on the Nifty, that it appears there is unwinding of long positions on the Nifty itself. On the Nifty bank, after the kind of run that we're seeing, there was some element of shorts that were getting added. But that may not be such a bad thing because, you know, those shorts in the system actually could be a bit of a cushion, as now the FIs have turned buys as well, and their highest exposure is on the banking names. Reliance Industries, that's like an index by itself. In the last 1 hour or so, it's done a little bit of a swing. So currently at the day's low, and that big boy needs to get its act together to help the Nifty to move up, because otherwise it's been holding one end up. Moving to the options data, the PCR is holding around 0.85 or thereabouts, so no big direction on that one. But the markets are up, right? 50, 60 points, even 70 points. But if you bought some calls, you're still not making any money. That's giving you a sense that actually there is writing at higher levels. So the 25,600 call premiums down to around 100 rupees. It started today at 120 rupees. 25,700 call as well. The last I checked, the premium is around 65 rupees. At the start of today, it was 81 rupees. So you've got the direction right, but still you're not making money. Telling you there is writing at higher levels. The reference point on the downside is around the 200 EMA on the Nifty. That's a couple of 100 points away from these levels. So just keep an eye out on that. Individual stocks that are calling for attention. TCS, a bit of a short squeeze is what you're seeing on that stock. Shorts were heavily stacked in the system. I made this point earlier today as well, irrespective of the news flow. when you have an index falling 20% and the open interest on individual stocks going up by around 30 to around 40%, and any kind of element of buying could create a bit of a short squeeze. That's taken place, some part of short covering out there. Nalco as well, the stock had seen more than a 10% correction from the top. That's coming for a short squeeze as well today. And SAIL is seeing a bit of fresh buying in today's trading session. I'll keep an eye out on Sammaan Capital. It appears that one could be bracing itself to come out of the F&O ban. So, that one will be an important stock to track. It's moving with good momentum as well. Keep an eye out on that.
Okay, all right, Nigel, thanks very much for that. That's the F&O stats. Mitesh is here with what to do in terms of short-term trading ideas. I just saw 0.00 change on the Sensex, so that's the kind of mood we are in. Nothing very much, but look at the mid-cap index, right? I mean, if you can pull that up, the intraday, sharp spike. I pointed out that 60-point bump on the Nifty, but I think it's true for the broader market as well. Let me just pull this up. Nifty mid-cap index. Yeah, it's a very sharp spike, which has come through here as well. Starting about 250, it started. So this is not bad. And I think maybe something on the small cap index as well. Something similar at about 250 or so. Nifty, by the way, is up about 50 still. So it's not running away after that initial surge. Market breadth, I think that's the reason why it's kind of flipped. Now some 150, 200 stocks more higher as compared to stocks which are lower. Mitesh, what would you suggest in terms of trades?
Prashant, I think, again, there's some bounce back from levels close to 25,474. So IOC looks good to me. I think it's been a buy a couple of days back as well. It's moved up very nicely from 170 to about 182. Still looks like having more momentum. So BTST here with the stop below 181 for targets of 186. A couple of pharma names are buzzing, Lupin Labs, Doris Labs, etc. So Lupin is something which would recommend as a BTST call. Buy here with the stop at about 22.77 and a target of around 2315 can be looked at.
Thank you very much for that. Those were some calls just for the near term. Let's shift our attention now to an exclusive conversation that Shriram Finance had with Ather Energy's co-founder and CEO, Tarun Mehta. He spoke about the company's product profile, the path to profitability. Listen to what he had to say.
The expectation is, do you go sub 1 lakh? Is that going to possibly be possible given everything that you just spoke about and the many innovations that you're experimenting with?
There is a market of products below 1 lakh in our industry. Our estimate is that maybe about 20% of the industry is below 1 lakh. Again, it's our estimate today. We believe that we've got to focus. We can't go after every single segment, every single price point, particularly when we don't have PLI. We don't have PLI, so we have this huge 15% disadvantage compared to people who don't even want to probably build electric.
Yeah.
So as people who want to probably push the envelope on electric, we are balancing a very difficult task that we are starting off with a 15% disadvantage here. So we've got to be very careful, not get into segments where there could be a there could be a lot of bloodletting that happens, a lot of cost pressures that come in. So for us, the Lakshman Rekha is 1 lakh. We will not go below that. But I think it still leaves a lot of gap. Today, our entry-level model, including the software Pro Pack, is more than 120K. So I think there is an obvious gap that we can bridge here, which is where EL can fit in quite nicely.
Tarun, let's talk about financials now. And you're a newly listed entity,
Yeah.
so you're going to be asked that question quarter after quarter, and we've just
Absolutely.
seen you deliver some numbers that the street has liked. But how important is it for you to ensure that you're not just keeping costs down, but you're also moving the needle as far as profitability is concerned? And how do you believe that picture is likely to change? What we've seen in the last few years is everyone's been burning through cash. How does that picture change in the next few years?
I think one big responsibility that we have is to actually help the street understand the underlying dynamics of our business, because it's very easy to think of cash burn here as cash burn, because that's what a lot of internet businesses do. You have to literally throw hundreds of millions of dollars to capture consumers, to market your way into it. But a lot of the spend that we actually do is actually investments. Like these are either physical investments in actual capex or IP investments in products and platforms, which won't be lost, once you do your annual revenues, right? A good product can last you 15, 20 years.
Yeah.
A good architecture can last you even longer. So I think one big responsibility for us is to actually help the street understand, educate. So we've been trying to do that, help people understand, where we are investing, what kind of, we are investing in motorcycles, but that's, for example, platform. On scooters, we are investing in products. In charging infrastructure, we are investing in physical infrastructure. And what kind of returns we can see on it. Once you get to a certain kind of minimum gross margin, let's say north of 20%, most of the journey of profitability is operating leverage, which is volumes. So the more volumes you do, most of the journey, I would say 80-90% of the journey, profitability journey, is just operating leverage beyond that point.
That is Tarun Mehta explaining how the company can get profitable. Well, it's all about operating leverage. Shilpa Ranipeta also caught up with ITC's chairman, managing director Sanjeev Puri. This was on the sidelines of the NASSCOM Technology Leadership Conference, which is underway. But she spoke to him about the multiple issues, including the tax hike on cigarettes. Listen in.
Well, I'm not going to give you any guidance, which we don't do. But what I will just say is historically, whenever taxes have increased sharply, it has fueled illicit industry.
Yeah.
And the legal industry has suffered.
And that's something you've called out very regularly.
Yeah. And that's a trend that's always been there. Now, from the beginning of the last decade, 2011-12, almost towards the end of the decade, with progressive increase in taxation, legal volumes really declined. There was stability after that, which helped legal industry claw back. But whenever there is an increase, what has happened in the past is likely to happen. So I think it will fuel illicit.
Right, but how do you then deal with the situation? Do you think that it calls for a portfolio play, any change in that strategy there? I'm just trying to understand, how is ITC going to mitigate this?
Yeah, I'm not going to give you details like that, but it has to be a combination of portfolio, pricing, all of these will unfold over a period of time. So beyond that, I'm not going to say.
And how much price hike have you already passed on?
Well, let it come to the market. The old, there's always a trade pipelines are there. Let them get exhausted and the new prices will come to the market.
I mean, just some timeline, some color. Like, are you looking at a phased manner by when from your end?
It will be in steps.
Okay.
Given that it's a very sharp increase, it will be in steps.
Okay.
Mayuresh Joshi, Director Research, Market Smith India, joins us on the show. Hi, Mayuresh. Good afternoon. Good to see you in. What do you make of ITC? Shilpa tried really hard, yeah, but he didn't give too many details. Quantum he's not giving, but he's saying the hikes are there. $320, interested or not?
Afternoon, Nigel. No, our take at Markets with India is that the stock might go through a long period of consolidation. Obviously, I think the price hikes that have been taken by ITC were mandated because of what we've probably seen in terms of duty rises that have probably happened. There obviously is an element of demand inelasticity, and therefore I think volumes might come off a tad bit. But overall, I think with the price increases, the overall revenues and cash flows should remain constant. However, our other worry, Nigel, with ITC is their foray into the other businesses or other product categories that they're probably getting into, which might mean that a lot of the free cash flow will get utilized in terms of developing these new businesses over the next few months and quarters, which might also keep the return ratios, specifically ROEs and ROCs, in check. Valuations are reasonable, but within the pack, I think CCL Products and Nestle India is something where our belief is that the numbers have been exceptional, and these two stocks form part and parcel of our swing portfolios.
Mayuresh, hi, afternoon. Ather Energy. Ola's loss has pretty much been Ather's gain. We got the Vahan retail data. Numbers seem to be looking good. And the stock has more than doubled from its issue price in less than a year. The issue price was 328. The stock has now crossed 700. What is the view that you all have on Ather Energy?
Afternoon, Rima. Again, I think the price performance has been pretty stellar as far as Ather Energy is concerned. However, as far as the financials are concerned, I think there is still that expectation on when they'll start clawing back, both in terms of the margin performance as far as absolute and relative EBITDA, both in terms of number and margins are concerned, as well as a part to profitable growth. Obviously, I think what you've probably seen in terms of Ola's disadvantages, Ather probably has stood the test of time, both in terms of how their brands are getting perceived, the volume growth that they've probably seen, which is steady state, as well as no complaints on the service issues. And therefore, I think the kind of shift that one expects might actually continue. However, I think competition still remains very, very intense, Rima, in this entire space. I think the larger players have done a few launches. There are expectations of a few more launches coming through as far as EV platforms and products are concerned. And therefore, I think our bias is a tad bit towards the larger players. I think the leadership stocks within this space is stocks like Hero MotoCorp as an example, through its Vida platform, which is clearly expanding its reach as we speak. As well as stocks like an Eicher Motors as well, though not directly involved in the categories that Ather and Ola are. But our take again is that we've kept it pretty simple. I think the large leadership stocks is something that we prefer at OD.
Okay, Mayuresh, stay with us. We're going to slip in a short break. Before we do that, I just want to highlight a couple of names. SpiceJet, the volumes are humongous actually now. From lower circuit, the stock has recovered. We'll have to keep an eye out on that one. Whether or not there's a name, it's a bombed out stock, but we'll keep an eye out on that. And Rain Industries is another stock. It went, I think, to around 170 rupees odd. And then the management came out and said that our fourth quarter is actually a seasonally soft quarter. So the stock is pulled back from around 170 to around 150. Numbers in the next 2 days, they follow calendar year. So interesting to see what numbers they deliver, because Hindalco told us CPC prices are up, which is what they produce. Vedanta as well mentioned on the call, and they produce that. So interesting to see how soft can the seasonally soft numbers be actually, though the debt is going to be the big point. Can they refinance the big debt that they have in their books? For the time being, volumes are extremely large. Slip in a short break, come back. Mayuresh continues to chat with us.
Welcome back. Once again, just pull up SpiceJet and that intraday chart. There's been a 11-12% swing in a matter of moments for SpiceJet. And that stock is now up nearly 4-5%. It was in lower circuit in the morning, and now it's opened up in the last few minutes. Mayuresh, Bharti Airtel, it's sulking. This came after the company announced its NBFC push 20,000 crore of a commitment. But is it such a big deal to drag the stock down yesterday and today?
I think it's more a sentimental reaction, in my opinion. Obviously, I think it might have a tad bit of an impact. But I think there are two conditions here. One, I think in terms of the core business itself, whether you're talking about the India wireless business, the fixed connectivity broadband business as well, and the Africa business, all three probably seem to be on track as far as core parameters are concerned. There is every hope and expectation that there might be a price hike coming through over the next few months, which will mean accelerated cash flow improvement and deleveraging on the balance sheet. So in my opinion, I think the standalone core telecom business probably is on a sound footing and expected to continue having a good show. I think it should probably now just state the news related to the foray that they're probably doing in the NBFC business. Anybody holding should continue holding. We continue holding Airtel in our global portfolios.
Mayuresh, what do you think will lift this cloud of this AI cloud, if I can put it? You think it'll be, once there is enough pain in the system, it'll just automatically get easier in that sense? I thought we were, at every level you thought you're already there, right? Or you think it'll be something else? I mean, I'm just, will there be a kind of a clean signal in that sense, or it's going to be muddled through for the foreseeable future?
Afternoon, Prashant. I think it's going to be a tough call to probably make on the sector. Obviously, I think if it falls further, I think valuations will become even more dearer as we speak and very, very attractive compared to their own standard deviation average over the last 5 to 10 years. However, I think looking at the disruptions and the transitions that are probably happening at a global scale, and a lot of product companies probably investing a hell lot of money into creating these platforms, into creating these systems and the ecosystem and the substack system, I have to put that. I think there is going to be competition in a significant manner. I think I was reading through a few tweets and a few messages where the entire sector has largely been written off, where I think coders' jobs will go off, out processors, where our majority of our IT companies are, they might not get work. But I think they need clean data to work with. And therefore, I think our companies are probably doing a good job, but they need to transition, and they need to transition fast. Otherwise, they will fall back in terms of orders, margins over the next few quarters. So I think it's a serious challenge, and therefore I think companies will probably live up to this challenge and make investments faster, organically or inorganically.
Okay.
By next few companies.
All right, thanks a lot for that, Mayuresh. Well, keep an eye out on a few stocks. Sammaan Capital, that's probably a stock that is going to go into the F&O ban. So just keep an eye out on that particular name. We'll wait by. As of now, it appears it's one of the stocks that gets into the F&O ban. But to wrap up the trading action, we go on with half a century gains. You'd want to go on with a double 100. That didn't happen. Individual stocks that did do well. Some of those metal names, well, they were outperformers in today's trading session. Nalco, Vedanta, Hindalco, all of them go home with green. Sale from the fairest names as well was a relative outperformer. Metals continues to shine. While Nifty IT index, well, that found its form yet again. So you had HCLTech, TCS, as well as a couple of other names from the metals pack like Infosys, all of them ended in the green. The problem was a couple of those outperformers, they actually underperformed today, the ones that have been holding one end up. Reliance Industries, SBI, both of them came for profit taking, and ITC as well was down in trade. The solar-related names got pounded. Clarifications came in there. Our colleague Vinny as well was covering it all through the trading session. Vare as well as Premier and Vikram Solar, all of them got clonked back 5 to around 10%. They clarified, not much impact. The street bought into the stocks on the lows of the day, but they still went home with hefty cuts. The stocks that did do well, though, you had D Development, stock continues to run along. In this month, the stock is up, hold your breath, 50% odd. Nalco, that one goes on with gains. Vedanta higher, Rain Industries, and Bank of Maharashtra as well was higher in today's trading session. Net, a new series started with a 50-point gain. The bulls would have wanted more. We'll wrap up on this edition of Closing Bell, but up next, Markets Forward comes up.
The last street comes off the highs but ends largely in the green. The Nifty closes above 25,450. The IT index snaps a 5-day losing streak. The index ends nearly 2% higher. Metals also shine, but the big drags turn out to be FMCG and PSU banks.
Stocks of Indian solar exporters slump in trade, and this after Trump's administration imposes 126% duty on solar gear imports. This was something that was expected from Indian exporters to the US. What has been initiated from India is a probe to determine if the government subsidies are making American products uncompetitive.
Auto stocks have rallied after the February vehicle registrations look set for its best showing in the last 4 years. Registrations show an average 21% yearly uptick across segments. Commercial vehicles lead the pack as always. You're with us here on Markets Forward, your go-to show where we aim to get you all the key data points to gear up for the next trading day. I'm Hormuz Fatakia, with me Vinny Motiwala. Vinny, it could have been a session of what ifs. It could have been a much better start to the March series, but you would take the fact that the indices have ended in the green.
Absolutely. Take the fact that they've ended in the green, 50 points gain for the Nifty 50. So no complaining there. We wanted better. We always want better. Everyone always wants better returns. But yes, this is at least a 50-point gain is what the Nifty is closed with. 25,450 above that levels. Banks, that's where the pressure came in at, right? Look at the Nifty PSU Bank Index. Sharp cuts coming in on that one. Closing Nifty Bank closing with a decline of almost 0.01%. PSU Banks, 0.4% of decline. That has come in for the PSU Banks as well. IT, that continues to shine. Metals continues to shine as well. So that continues to do well in the trading session.
If you're an optimist, you would say you ended higher. If you're a pessimist, you would say you still ended 180 points off the highs of the day. So it goes both ways. Take your pick. But here's a lineup of what we have in store for you today. We start off with the top movers and shakers of the day. With Sudarshan, we tell you why solar stocks tanked in today's session. We also put the spotlight on auto stocks, and Sudarshan will tell you why. And of course, decode the metal rally. And last but not the least, we tell you some of the important things that you need to keep an eye out for going into tomorrow's trading session. On to our first segment. Sudarshan's here. The big wall, top movers and shakers of the day. Sudarshan, over to you.
So on top of the list, the sector, auto sector, majority of the stocks have seen buying. Bajaj Auto up more than 2%. Similar up move was seen for Hero MotoCorp. That too closed with a gain of 4%. And another two-wheeler name, TVS Motor 2, closed 3% higher. We have seen, say, buying or short covering. Nevertheless, whatever it was, but some of the IT stocks did close in the green. On top of the list were HCLTech up 3%. TCS also closed with a gain of 2%. Infosys came off highs, but at the end it was 1% higher too. And KPI Tech, LTI, Mindtree too closed with a gain in the range of 1 to 4%. Another sector that was in the focus today, on the back of positive brokerage note and also improvement in the global prices, that was metal sector. Nalco up 4%, Vedanta 2 closed with a gain of almost 5%, Hindustan Zinc 2 closed higher almost 4%, and SAIL and Tata Steel 2 closed with a gain of almost 3% each. And lastly, some of the stocks that have reacted to news flow, and those were solar stocks and Vari Energies, Prima Energy, despite both these companies saying that US duty of 126% solar products would not have that much impact on their financials. These two stocks closed with a cut of 6 to 10%. SpiceJet, at one point, that stock was down 10%, but has seen a sharp recovery in the last hour of trade and closed with a gain of almost 7%. And that came after block deal of almost 8% equity that we have seen taking place on BSE. And last one was Aditya Infotech 2, so a block deal in which promoter and Dixon Tech likely were the sellers. And this stock too closed with a gain of 7%.
Okay, Sudarshan, thank you so much for that important list of movers in today's trading session. A few names that Sudarshan mentioned, I'll pick on that. That's Vari Energies, Premier Energies, Vikram Solar. All of them tanked into the trading session today. And this came in after US had announced that 126% duty, which is expected now to take place on all these solar imports, Indian solar imports, will face this, 126% CVDs. Now, there was an investigation that was going on. Companies, everyone was expecting this. 126% is the number that it came in at this morning. Exposures, what do these companies have? Premier Energies, 0% export exposure. They've reduced it over the years and now it's 0% completely for the company. Vari, export exposure 28.6%, Vikram Solar 16%. Now, when we spoke to the management of Vikram Solar as well as Premier Energies obviously wouldn't see impact of this. They said that this wouldn't even hurt the industry as much as one is anticipating. Vikram Solar, what did they say? There was an important clarification that came in. They said that the US duty is imposed only on the place of origin of the cell that is used in solar modules. So if that cell is based in India, Indian-made cell is used in making those solar modules, and then that is exported to the US, then that would be charged with 126% duty. Vikram Solar said that, they do not have exposure to these modules which they're exporting to the US are not with those Indian-made cells. So that is why they'll not see that impact of 126% duty. They said this wouldn't also impact the Indian solar industry story or halt or cause any bit of a blip for that story as well. Vari Energies too in the con call said that they do not export US to the US from the cells made in India, and hence they will also not face the impact of the duty. Despite this clarification, we didn't see much of a gain coming in or an up move or recovery from the lows for these stocks. All of them ended with cuts even in today's trading session.
Such has been the sentiment surrounding the sector that Premier Energies, no exposure, still down 6%. You could say that it was down 12 at one point, still ended 6% lower. But Vinny, thank you for summarizing that for us. I'll ask this question to Mayuresh Joshi of William O'Neill and also go across to Shrikant Chauhan of Kotak Securities for the view on the index today. Gentlemen, good afternoon. Thank you for joining in. Mayuresh, the sentiments across this sector are already subdued with these Varis and the Premiers of the likes. There were concerns surrounding overcapacity and going too fast too soon. The stocks were already down 30-40% from the peak, and even now, despite companies coming out and saying that there is no significant impact, the stocks were still smashed. Though you prefer staying away from a sector like this simply because there are multiple concerns right now surrounding it.
To normalize. I think, yes, I think there are quite a few headwinds as we speak for the overall sector as a whole. Secondly, I think in terms of the dominance that China has for this sector, both in terms of solar module and the cell manufacturing capacities, where more than 2/3 of the capacities probably stay with China as we speak. I think it has a lot of saying in terms of global pricing as far as these elements are concerned. Second, I think in terms of what might come through in terms of a regulatory overhang. I think that always is an if and but situation, which is never helpful for the sector or any stocks under consideration thereon. And third, in terms of your point, Hormaz, in terms of expectations of capacities or overcapacities expected to come through, that seems to be a base case scenario over the next few quarters. And if that probably happens, as it seems to be the case, the expectations in terms of end realizations as far as pricing is concerned might actually be on the lower side as we see our forecast going forward as well. So I think multiple headwinds for the sectors, and therefore I think we would probably refrain from probably investing very, very aggressively into these stocks.
Shrikant, do you have a view on any of these names as well on the technical front, given that if they are beaten down, would this interest you or anything in the renewable energy space?
Yeah, afternoon. So if we just go through with this particular sector, then in that space, if anything is like really worth tracking, then it is Vari Energy. And there what we are seeing is consistent distribution at higher levels. So whenever there is a pullback in the market and pullback in this sector and in the stock, we see some selling pressure. So while looking at the entire structure of this particular company, I am of the view that we need to be careful at higher levels. Yes, of course, in case if it falls to 2400 levels, 2300 levels, then certainly it's a buy because there the stock is building some base. But at these levels, around 2800 levels, we need to be careful. We should in fact look for reducing some long positions.
It says a lot to be careful at 2700 when the record highs were at 3700, 3750 for Waaree Energy. So that is the view on the sector as a whole. Shrikant, we'll get to you with your views on the Nifty in just a bit. But the sector in focus today, other than these, have been the auto sector. The stocks did well today. Most of them were in top gear. The Vahan retail sales data indicating stellar sales and turning out to be the best one since 4 years. Sudarshan is still with us to tell us more on this. Sudarshan.
So if you want to see the real impact of GST rate cut, you have to look at the registration numbers of the auto sector. And after outperforming the industry for the last few months, Feb registration data is indicating a continued strong demand. And if the current trend holds, February 2026 is going to be the best February that we have seen at least since Feb 2022. Most of the companies have seen registration in Feb 2026. Those are already higher than what they had seen in Feb 2025, and total vehicle registration so far in Feb 2026 is higher by almost 20%. Now take a look at the sector-wise. So total registration so far in this month is higher by 20%. Two-wheelers up almost 21%, passenger vehicle up almost 20%, and similar trend can be seen for commercial vehicles and three-wheelers. Now, if you compare Feb 2026 data with the last 2 months, you can see continued demand. Total up this month 21% against 18% last month and 16% December 2025. Similar trend can be seen for two-wheelers. Even PV this month 20% against 11% last month, and CV and three-wheelers too are seeing a strong demand with registration growing in the range of 19 to 23%. Now talking about the company specific, starting with two-wheelers. Two major companies, Bajaj Auto and Hero Moto, their registration numbers for this month, they are just 3% away from what they have done in Feb 2025. Especially for Bajaj Auto, export contributes almost 50% to their total volumes. And in the last 3 to 4 months, they have been doing 2 lakh units per month, and from the month of April, they are expecting to hit the level of 2.5 lakh units. Another two companies, TVS Motor and Royal Enfield, their registration numbers this month are already higher than the number they had seen in Feb 2025, and they continue to outperform the industry. Amongst electric two-wheelers, similar story that we have been seeing for the last few months will play out this month too. Ather will outperform and Ola Electric will underperform, and Ather's registration so far is already 40% higher than what they had seen in Feb 2025. In passenger vehicle, all the three major companies, M&M Auto, Maruti and Tata Motors PV, their registration numbers this month are already higher than what they had seen in Feb 2025. And surprisingly, the one which is outperforming the industry is Tata Motors passenger vehicle. Amongst commercial vehicle names, both the major companies, Tata Motors commercial vehicle and Ashok Leyland, their registration numbers for this month are already higher than what they had seen in Feb 2025. So in nutshell, if current trend holds, it's going to be a bumper February for the auto sector.
Okay, bumper February for the auto sector, at least there. Thanks so much for that, Sudarshan. But Mayuresh, coming to you, for the auto sector, numbers seem good. And, especially post that GST, you're seeing that good demand or good numbers coming in here. Do you think this is going to continue for a while? Anything that you are liking here in the sector, four-wheelers or two-wheelers?
Good afternoon. No, so we own a few two-wheeler names in the space itself, and we like the leadership stocks like a Hero or Eicher, which you hold in both our local and global portfolios very well. Our thesis is that GST cuts is an enabler, and that has acted as a structural tailwind for the sector as a whole, where the demand, which was probably languishing, has come back very, very strongly, and you can probably see the effect in terms of the numbers that have probably come through. And this might continue because I think the new launches that are also expected to happen, even from the EV portfolio for a whole host of these players, might actually keep them in good stead. And pricing now has become far more reasonable compared to what it probably was post GST cut. So I think very, very interesting space. But on top of that, I think let's not forget auto ancillaries as a space shall also do. So I think we are also very, very optimistic on a few auto anchor names. We are probably foraying into both the EV agnostic play, whether it's powertrain or otherwise, and are continuing their good show in terms of the existing product portfolio as well, without carrying too much leverage onto the books. So yeah, I think remain optimistic on two-wheelers as a space and selective auto ancillaries, where our opinion is numbers might actually hold up over the next few.
Two-wheelers and auto ancillaries, they were actually the ones leading the charge. Hero MotoCorp at one point was up almost 5-6% in today's session. So autos heading for a bumper February month. Just before we go to Nigel for the metals, a quick view on the Nifty as well from Shrikant. Shrikant, we were well comfortably placed. From a gain of 200 points, we have come down and finished with a 50-point move. Where does the index now stay? Is there still no conviction at higher levels?
Yeah, I think, the market it's consolidating, it is correcting, it is into corrective mode. Since the announcement of the trade deal, if you see the overall pattern of the Nifty, then it is finding difficulties to sustain at higher levels. But at the same time, it is forming a base close to 24,350, 25,350, 25,300 levels. So I am of the view that today the market has shown some extreme activity, and it is close at crucial levels. So tomorrow I am of the view that it is going to break the range. Either it will grow back to the levels of 25,000, 25,200, or it may even hit the levels of 25,800 or 900. So today's closing is quite crucial. And tomorrow I am expecting some big upside or downside in the market. But while looking at the overall structure of the market and the way there is a weakness in IT companies, if tomorrow also we see some weakness in IT, then we can expect downward activity. Otherwise, more chances of heading higher.
Okay, we'll keep an eye out on those important levels. Tomorrow also will be key. But let's talk about those metal names, right? They were seen and outperforming in today's trading session. The index overall also was up almost 2% in today's trading session. What's the reason behind this rally? Let's go across to Nigel to give us those details. Nigel, over to you.
Well, let's explain why metals are outperforming. The dollar index remains weak. That's positive for global commodities. Then there are growing hopes that we may avoid a large-scale demand destruction, despite all the global uncertainties. And thirdly, there appear structural themes like data centers, AI, they're expected to significantly boost demand for base metals. Steel companies, well, they are likely to witness margin expansion in the fourth quarter. Reasons are that there has been a hike of prices post the implementation of safeguard duty. Flats are up by around 5 to around 6,000 rupees per ton. Long product prices are up by close to 10,000 bucks. Additionally, it's a seasonally strong quarter, so you'll have operating leverage that will play out as well. Well, we had a couple of experts on our channel today, and Sumangal of Kotak has been positive on aluminium. He believes the fundamentals remain intact, and there is a structurally growing demand, which in fact, outpaces any kind of supply that's coming in. He also adds that when copper-aluminium ratio moves to around 3.2 to around 3.3 times, there's a gradual shift towards aluminium, and believes that aluminium substituting copper, that can only aid demand in the coming years. Aditya Velikar of Axis Securities says that he prefers the ferrous over the non-ferrous names. But there are a few brokerage notes as well that did come out today, so let's run you through a few. Macquarie, they maintain an outperform rating on JSW Steel. Reasons are that domestic demand remains strong at around 7 to around 8% growth year to date. They also say that despite the 9% price hike that we've seen since the middle of December, domestic prices are just a 1 to 2% premium in comparison to import parity pricing. That compares with historical premium of around 5 to around 7%. So they believe that could be another price hike that could be pushed through. Boffa Securities, they have upgraded Vedanta to buy from neutral. They've increased their target price as well to around 840 rupees. They say that the upgrade is driven by the bullish outlook on aluminium, support of silver prices, and they estimate a 6% dividend yield. They also highlight that significant deleveraging at the parent level, that's reducing risk around higher brand fees or intercompany loans as well. Finally, Nomura goes ahead. They've initiated coverage on Lloyd's metal target price at around 1,600 rupees. They are eyeing that they have their mines that will be valid till around 2057, backward steel integration, predictable MDO earnings, as well as copper diversification. They believe that the EBITDA can move all the way to around 10,000 crores odd, which compares with around 1,900 crores just in FY25.
Nigel, thank you for that. Metals shining bright in today's trading session. We take a moment to thank both Mayuresh and Shrikant as well for joining us on the show and sharing with us their views on everything that concerned the market today. Take a short break, all the top corporate voices and the key events to watch on the other side.
Welcome back to Markets Forward on CNBC TV 18. Now, let's go across to some big corporate voices of the day. The government is looking to offload 2% stake in IRFC through an offer for sale with an option to divest additional 2%. Speaking to CNBC TV 18, the IRFC chairman, MD Manoj Kumar Dubey, said that if investors' demand remains strong, DIPAM may exercise the green shoe option to dilute a further 2% stake. Listen in.
As the norms goes, 2% is the minimum that has to be given out. And if there is a good demand for the shares, it is for the government to take a call. DIPAM is already there on the job. And let us see how the response comes for the buying of the shares. Our diversification mode and 2.0 is already on the platter, and we have spoken a lot on your channel also about the way we are doing things. So we as a company believe that our business plan and the model for next 5 to 7 years are rightly in place, and we are working our talk.
Now, the MD and CEO of Jubilant FoodWorks said that the company is targeting revenue growth of 15%, led by higher like-for-like growth, store additions, and 1 to 2% growth from Popeyes as well. He added that he was targeting a 200 basis point improvement in profit after tax over FY25, and also added that the competition that came in post-COVID is now consolidating.
We want to build a 5 to 7% LFL business, add 8 to 9% of organic store growth. Together, it is about 13%, and Popeyes adds about 1 to 2 percentage points. So we are building a 15% revenue and 15% EBITDA business. That's kind of the business that we are building. 1 quarter here and there, I think we are lapping a very high basis. I think was the last quarter we grew 5% on a 12% base, which was, I think, very high number. January was very good, and I think the momentum will wait for the March to end around the Holi.
Now, ITC's Managing Director Sanjeev Puri said that cigarette price hikes will be done in phases given the sharp increase. Now, speaking to Shilpa Ranipeta, Puri added that the new cigarette prices will come into effect only once trade pipelines are exhausted. Listen in.
What I will just say is historically, whenever taxes have increased sharply, it has fueled illicit industry.
Yeah.
And the legal industry has suffered.
And how much price hike have you already passed on?
Well, let it come to the market. You know, the old, there's always a trade pipelines are there. Let them get exhausted and the new prices will come to the market.
I mean, just some timeline, some color. Like, are you looking at a phased manner by when from your end?
It will be in steps.
Okay.
Given that it's a very sharp increase, it will be in steps.
Over to Upasana. She is here with all the key events that you need to watch out for going into tomorrow's session. Upasana.
Well, first up, let us look at the global economic cues coming to US. Initial jobless claim data will be out tomorrow, so we'll be keeping an eye out on that. Now, let us look at the key stocks that will be in focus on the back of corporate action. Angel One stock split takes place, and from 10 rupees to 1 rupee per share. Engineers India also will be in focus as the board meeting is scheduled for tomorrow to consider second interim dividend. Now, on the IPO front, IPO PNGS Reva Diamond Jewelry closes for subscription tomorrow. And now let us look at some of the important global earnings. Mind you, Nvidia Q4 results will be out tonight, so we'll be keeping an eye out on that as well. And lastly, coming to the other events, PM Modi is in Israel right now on a 2-day visit, that is today and tomorrow. And tomorrow he will be meeting some of the important business leaders. So we'll be tracking any important update on that as well. So all in all, looks like quite an eventful day tomorrow.
Okay, thank you so much for that, Upasana. But with that, we're absolutely out of time on this edition of Markets Forward. Thank you so much for tuning in. Up next, we'll come back with more on markets and other updates.
Hello and welcome to Business 360. I'm Arundhati Ramanan and here are the headlines that we're tracking for you this evening. Sensex and Nifty and marginally in the green after a volatile session. IT stocks snap a 5-day losing streak. Mid-caps outperform the blue chips. The Trump administration imposes a 126% tariff on solar gear imports from India, initiates a probe to determine if government subsidies are making American products uncompetitive. Stocks of Indian solar exporters slump in trade.
No one has ever seen before, and a turnaround for the ages. It is indeed a turnaround for the ages.
U.S. President Trump claims an economic turnaround in his State of the Union address, doubles down on tariffs with Supreme Court judges watching from the front row, attacks the Democrats repeatedly in what was the longest speech in U.S. history. Tata Group stocks rise in trade a day after Tata Sons board defers decision on extending the tenure of Chairman N. Chandrasekhar until the next board meeting in June. Under Chandra, Tata Group has seen its revenues double and profits triple in 9 years. February vehicle registrations look set for its best showing in the last 4 years. Registrations show an average 21% yearly uptick across segments. Commercial vehicles lead the pack. Ather Energy CEO Tarun Mehta says the electric two-wheeler maker has the capacity to achieve volume growth of 40 to 50%, which can help the company turn EBITDA profitable. Adds no product will be priced below 1 lakh rupees, even as he admits there is a market for such products. That's an exclusive. Mumbai Civic Body announces an 81,000 crore rupee budget for the next fiscal, allocates 60% of the outlay for capital expenditure, proposes 2,100 crore rupees for the Versova to Dahisar Coastal Road project. U.S. Defense Secretary Pete Hegseth issues an ultimatum to Anthropic, sets a Friday deadline for the company to comply with Pentagon's demands on the use of AI. Anthropic CEO Dario Amodei told CNBC TV 18 he does not want his AI models to be used for autonomous weapons and mass surveillance of Americans. Bill Gates apologizes to the staff at his foundation over his ties with convicted sex offender Jeffrey Epstein, admits he had 2 affairs with Russian women and claims he did nothing illicit, calls his association with Epstein a huge mistake. We'll come to all of that and more in just a bit, but let's start with the day's market action. Dalal Street closed in the green with Nifty ending above the 25,450 mark. The Nifty mid-cap index rose 340 points, while the Nifty Bank underperformed. Nifty IT snapped its 5-day losing streak. The top story this evening, the Trump administration has imposed countervailing duties on solar cells and panels imported from India, Indonesia and Laos. A duty of 126% will be imposed on certain solar good imports from India. Imports from Indonesia and Laos have been hit with 105% and 81% tariffs respectively. US will probe if government subsidies in India and other countries is hurting the competitiveness of US companies. Shares of top Indian solar companies declined in trade. U.S. President Donald Trump claimed that the first year of his second presidency achieved a turnaround for the ages during what was the longest State of the Union address in the country's history. Trump's 1 hour, 48-minute long speech was laden with repeated jibes at the Democrats. His address comes months before the pivotal U.S. midterm elections, with reports suggesting that the Republicans could lose control of the Congress. In his trademark style, Trump claimed credit for the economy, which he said was roaring like never before. The U.S. president also doubled down on tariffs, with 4 Supreme Court judges watching from the front row. 3 of them had ruled against Trump's tariffs. Surprisingly, he did not launch personal attacks against the judiciary, but called the court ruling unfortunate. Trump even shook hands with the judges before making his way to the podium ahead of his speech.
Just 4 days ago, an unfortunate ruling from the United States Supreme Court. It just came down. It came down. Very unfortunate ruling. But the good news is that almost all countries and corporations want to keep the deal that they already made, right, Scott? Knowing that the legal power that I, as president, have to make a new deal could be far worse for them and therefore they will continue to work along the same successful path that we had negotiated before the Supreme Court's unfortunate involvement. Congressional action will not be necessary. It's already time-tested and approved. And as time goes by, I believe the tariffs paid for by foreign countries will, like in the past, substantially replace the modern-day system of income tax, taking a great financial burden off the people that I love. We are in negotiations with them. They want to make a deal, but we haven't heard those secret words. We will never have a nuclear weapon. My preference is to solve this problem through diplomacy. But one thing is certain, I will never allow the world's #1 sponsor of terror, which they are by far, to have a nuclear weapon. Can't let that happen.
And staying with US, speaking at a Business Standard event last night, Commerce Minister Piyush Goyal has said that the trade talks between India and US will resume as soon as there is more clarity on the tariff situation.
How soon do you think you will be resuming your trade talks with the US?
Well, as soon as there's more clarity in the situation.
Okay.
The Ministry of Statistics is set to release a new GDP series on Friday using FY23 as the news base year. Lata Venkatesh is here with more on the new GDP formula. Lata, what can we expect?
Well, the base years are regularly changed. The current base year we have to calculate GDP was 2011-12. Our consumption patterns have changed, and therefore the Ministry of Statistics is changing the base year to the year 22-23. That is what is going to be released on February 27th. We will get even more additional information. The new series will incorporate more informal sector data. It will also incorporate more real-time data from the GST and the public finance management system. These are real-time data systems of the government. As well, it will have something which statisticians want, double deflation. That is, you don't just bring down the income of companies by the amount that prices have increased to count the volume of goods added. You deflate the input prices and the output prices separately, which is a more sophisticated way of counting the value add. That's the main contribution of the new series. Okay, as to our poll says that the Q3 GDP, which will be announced on February 27th, will come in at 7.7%, much better than the 6.4% in the previous Q3, but not as good as the second quarter growth of 8.1%. Nominal GDP is where it will be not so impressive, expected to come in at about 7.8, 7.9% compared to 10.3% year ago. Remember, these are forecasts made on the basis of the old series, which ends on Feb 27, but then you obviously can't make forecasts on a series we don't know. Also, the full year GDP number is expected to come in at 7.6%. We will get the second advanced estimate from the MOSPI. Again, this is based on the old series. This compares with the first advanced estimate of 7.4. Last year, the country grew by 6.5. So 7.6 is anyway a very good performance. Again, nominal GDP will be the disappointment. It's expected to grow by about 8.4%. Last year, we grew by 9.8, and everyone wants a double-digit number. Just one more word. The new series will give us comparable numbers for this year, FY26, FY25, FY24. So if the FY24 numbers change because of the new data available, then by nature, 25 and 26 will be different. So the poll that way is of limited value because a whole host of things are about to change with the new series.
So lots of changes to look forward to. All right, Lata, many thanks for those details. Now, Tata Group stocks digested the news of Tata Sons board deferring the decision on Chairman N. Chandra's extension till the next board meet in June. Sources tell CNBC TV 18 that Tata Trust Chairman Noel Tata asked for certain conditions to be linked to Chandra's reappointment. The group stocks were largely in the green today. A CNBC TV 18 analysis shows the group's financial performance has significantly improved during Chandra's 9 years at the helm, barring a blip in the last few months. Yusuf is here with the analysis. Yusuf?
Well, Tata Group's revenue has nearly doubled and profits have tripled with N. Chandrasekaran at the helm of the $300 billion conglomerate. In FY 2017, the group's revenue was just over 6 lakh crore rupees. By FY25, revenue had risen to more than 11.5 lakh crore rupees. The group's profit were around 35,000 crore rupees 9 years ago. As of FY 25, profits had nearly touched 1 lakh crore rupees. When Chandra took over in 2017, Tata Steel was reported an annual loss of over 4,400 crore rupees. But since then, the company has turned things around, posting a profit of 3,400 crore rupees in FY 25. Similarly, Indian Hotels Company has shrunk from a 63 crore loss in FY 17 to a profit of more than 1,900 crore rupees in FY 25, reflecting a revival in the hospitality cycle. However, not all bets have paid off. In 2021, Tata Digital acquired a majority stake in Big Basket for about 9,500 crore rupees, strengthening its e-commerce push. But intensifying competition from quick commerce players and others has eroded Big Basket's market share from nearly 50% to under 10% in the last 5 years. TCS contributed nearly 75% of the group's valuations by 2020. But since then, the valuation has diversified, with TCS now accounting for 36% of the overall valuation. Despite the challenging situations in the IT sector, TCS remains the crown jewel with the valuations of over 9 lakh crore rupees. Tata Group's total valuation now stands at 26 lakh crore rupees. FY26 has been a challenging year for TCS. In the first 9 months of this financial year, TCS has seen its revenue grow by nearly 3% and profit decline by more than 2%. Tata Motors is also struggling after a major cyber attack at JLR and the tariff tensions hurting automobiles business across the globe.
All right, Yusuf, many thanks for those details. Now, February vehicle registrations are on track for its best showing in the last 4 years. Registrations grew at an average rate of 21% yearly across segments, with commercial vehicles leading the pack. Sudarshan Kumar is here with all of those details. Sudarshan, a stellar month for the auto sector.
So if you want to see the real impact of GST rate cut, you have to look at the registration numbers of the auto sector. And after outperforming the industry for the last few months, Feb registration data is indicating a continued strong demand. And if the current trend holds, February 2026 is going to be the best February that we have seen at least since Feb 2022. Most of the companies have seen registration in Feb 2026. Those are already higher than what they had seen in Feb 2025, and total vehicle registration so far in Feb 2026 is higher by almost 20%. Now take a look at the sector-wise. So total registration so far in this month is higher by 20%. Two-wheelers up almost 21%, passenger vehicle up almost 20%, and similar trend can be seen for commercial vehicles and three-wheelers. Now, if you compare Feb 2026 data with the last 2 months, you can see continued demand. Total up this month 21% against 18% last month and 16% December 2025. Similar trend can be seen for two-wheelers. Even PV this month 20% against 11% last month, and CV and three-wheelers too are seeing a strong demand, with registration growing in the range of 19 to 23%. Now talking about the company specific, starting with two-wheelers. Two major companies, Bajaj Auto and Hero Moto, their registration numbers for this month, they are just 3% away from what they have done in Feb 2025. Especially for Bajaj Auto, export contributes almost 50% to their total volumes. And in the last 3 to 4 months, they have been doing 2 lakh units per month, and from the month of April, they are expecting to hit the level of 2.5 lakh units. Another two companies, TVS Motor and Royal Enfield, their registration numbers this month are already higher than the number they had seen in Feb 2025, and they continue to outperform the industry. Amongst electric two-wheelers, similar story that we have been seeing for the last few months will play out this month too. Ather will outperform and Ola Electric will underperform, and Ather's registration so far is already 40% higher than what they had seen in Feb 2025. In passenger vehicle, all the three major companies, M&M Auto, Maruti and Tata Motors PV, their registration numbers this month are already higher than what they had seen in Feb 2025, and surprisingly, the one which is outperforming the industry is Tata Motors passenger vehicle. Amongst commercial vehicle names, both the major companies, Tata Motors commercial vehicle and Ashok Leyland, their registration numbers for this month are already higher than what they had seen in Feb 2025. So in nutshell, if current trend holds, it's going to be a bumper February for the auto sector.
Sudarshan there with the details on those auto stocks. Now, Ather Energy's co-founder and CEO Tarun Mehta has said that the electric two-wheeler maker has the capacity to achieve volume growth of 40 to 50%, which can help it turn EBITDA positive. Speaking exclusively to CNBC TV 18 Shireen Bhan, he said that the company will not price its products below 1 lakh rupees. Take a look.
There is a market of products below 1 lakh in our industry. Our estimate is that maybe about 20% of the industry is below a lakh. Again, it's our estimate today. we believe that we've got to focus. We can't go after every single segment, every single price point. Particularly when we don't have PLI. We don't have PLI, so we have this huge 15% disadvantage compared to people who don't even want to probably build electric.
Yeah.
So as people who want to probably push the envelope on electric, we are balancing a very difficult task that we are starting off with a 15% disadvantage here. So we've got to be very careful, not get into segments where there could be a there could be a lot of bloodletting that happens, a lot of cost pressures that come in. So for us, the Lakshman Rekha is 1 lakh. We will not go below that. But I think it still leaves a lot of gap. Today, our entry-level model, including the software pro pack, is more than 120K. So I think there is an obvious gap that we can bridge here, which is where EL can fit in quite nicely.
Given the fact that you've sort of got your plan in place, you're building on the infrastructure and the investments that you've already made, by when do you believe you could start to see a return on these investments?
So our gross margins improved. That took us from minus 36% EBITDA to maybe minus 20% EBITDA. But then our volumes went up 50-60%. And that's taken us from minus 20% EBITDA to whatever, minus 5% EBITDA. The current capacities can further grow our volumes by almost, I would say, almost 50%, 40-50%, 30-40%. And I believe that should be good enough, barring like some global commodity crisis. That should be good enough to turn profitable, at least at an EBITDA level, if not a PAT level.
On that note, it is time for us to head into a short break. But coming up next, U.S. Defense Secretary Pete Hegseth has given Anthropic until Friday to allow the Pentagon to use its AI technology across military applications. That and more when we come back. Stay tuned. Welcome back. You're still with us on Business 360. U.S. Defense Secretary Pete Hegseth has given Anthropic until Friday to allow the Pentagon to use its AI technology across military applications. Hegseth has vowed to remove Anthropic will lose its government contract if it fails to do so. Anthropic CEO Dario Amodei told CNBC TV 18 just days ago that he does not want his AI models to be used for autonomous weapons and mass surveillance of Americans.
The possibility of Anthropic being blacklisted by the Pentagon. Have you been in conversation with the authorities there? Is there an update on that you can share with us?
So we've been deploying our models for U.S. national security for quite a while. And, I think our basic position on it is, we've offered the models in kind of a very wide range of, for a very wide range of use cases. And, I think the main areas of concern that we have are, fully autonomous weapons where there isn't a human in the loop, and domestic mass surveillance of Americans. So those are the two areas where we have some concern, and we want to make sure the models are not used in that way. And we continue to have productive discussions about how to use our models for almost every use case.
And staying with AI, from inking deals to calming investor fears over SaaSpocalypse, AI companies have had a very busy week. Rachna Dhanrajani joins us now with the details. Rachna, what's brewing in the AI world?
Well, a massive week in AI. And it's only Wednesday. Anthropic is, of course, caught in a storm with the Pentagon, but the headlines just keep coming from the maker of Claude. The company, founded on AI safety, has now quietly rolled back a core pledge. It now says it will not pause development even if a system appears risky, as long as competitors are moving ahead. Simply put, competitive pressure is now starting to outweigh precautions for Claude. There's also a deepening geopolitical flashpoint here. Anthropic says 3 Chinese AI firms, DeepSeek, Moonshot AI and Minimax, ran what it calls industrial-scale distillation campaigns. The company detected about 24,000 fraudulent accounts, generating more than 16 million Claude interactions. Anthropic says the goal was to extract its most advanced capabilities, especially reasoning, coding, and agentic tool use, so rival models could be trained faster and more cheaply. The company is also warning that the models built this way may lose critical safety guardrails and could ultimately feed into military surveillance or cyber systems. Markets, meanwhile, are still absorbing the aftershocks of what Wall Street is calling the SaaSpocalypse that we saw roll out a couple of weeks ago after Anthropic's Cowork plugin released, triggering a sharp sell-off across software names that wiped out almost $285 billion in market value in just one session. But yesterday brought some relief after Anthropic pivoted toward partnerships and integrations. But the broader message from investors is quite clear now. The AI platform shift is definitely underway, and the software hierarchy is now being reshaped. Coming to the hardware front, AMD has now landed a $60 billion AI chip agreement with Meta to deploy roughly 6 gigawatts of AMD GPU capacity, with Meta also receiving stock warrants of up to 10% in the company. The deal runs over 5 years, and more importantly, it positions AMD as the most credible challenger yet to NVIDIA's dominance, and sharply emerging as the number 2 now. Speaking of NVIDIA, all eyes are now turning to its earnings tonight. Street expectations are for roughly 72% profit growth on revenue of about $65 billion. Investors will be watching closely for signals on the Blackwell cycle, China exposure, and next-gen chip guidance. Back to you.
So lots of things to watch out in the AI world for. Thank you so much for those details, Rachna. But with that, it is a wrap on this edition of Business 360. More news and updates coming up on the other side. Stay tuned.
Hello and welcome to the CNBC TV 18 exclusive. I'm Shriram Finance, and we've got probably one of the biggest headliners here at the India AI Impact Summit, OpenAI Sam Altman. Sam, great to have you join us on CNBC TV 18. It's wonderful to see you here back in India. You were sharing the stage with the Prime Minister just a few moments ago, talking about how important India is. But how significant is India for OpenAI specifically? It is your second largest market today.
It is our second largest market, and the energy here that people are what people are building with the technology is just amazing to watch. We have more than 100 million weekly active users of ChatGPT. This is the fastest growing market for codecs. And it's amazing to see the energy here. Every time I come, it feels like it's gone up another level.
You know, Sam, you've also shared the stage with Pratyush Kumar of Sarvam. The last time you were here, there were questions being asked on whether India can do an LLM. Have you had a look at what Sarvam has been able to put out?
India's, yes, but more generally, India is just building incredible AI, the entire AI stack. From like data centers to models to applications, and I think there's no country in the world quite matches India for total AI energy.
Sam, can you give me a sense of what we can expect now from OpenAI for India? How much can you customize OpenAI and ChatGPT for India? What should we expect?
The number one request we get is better support of local languages and dialects, which is something we're hard at work on, and we're open to taking any other requests if you have some.
Is that something they're going to double down on?
Yeah, we're hard at work on that already now.
Okay. You've just announced a partnership with TCS, and
Yes.
of course, you're going to be one of the first clients as far as TCS's data center is concerned. What do you envisage as far as that relationship and that partnership is concerned? And do you believe you're likely to ink more partnerships here in India, especially on the enterprise side?
Totally. Hard to overstate, as I mentioned earlier, how much energy there is for building AI and building with AI in India. And I think you should expect to see more partnerships and much more activity here as we try to work with the Indian people to bring AI to the rest of the world in all of these amazing ways.
You know, you talked about democratizing AI. You also talked about AI and the need for regulation, or at least a watchdog, akin to the nuclear watchdog. You talked about the IEA. That's an interesting comparison or an interesting analogy that you made.
Well, I think all historical analogies are imperfect because every technology is new, every moment is new. But the thing that I like about the nuclear analogy is it was something that the world really did come together on, even countries that normally don't like each other very much, and figured out how we could address the serious concerns of misuse of the technology, but also figuring out how to share the benefits and get nuclear energy out into the world. So IEA has been imperfect. Nuclear technology is an imperfect analogy for AI, but it was a moment of real global cooperation.
Well, you know, you're expecting countries to cooperate, but companies are unwilling to cooperate at this point in time. It's a war out there in the valley, isn't it?
In some ways, yes, but around AI safety and AI alignment, I find the companies to be pretty collaborative.
Mm-hmm.
Same way for countries. I think countries will economically compete, but when it comes to safety and stability, I expect they'll collaborate.
You know, those are big issues, but the number one issue being asked of leaders like you, how sustainable is this business model? The gargantuan spends that companies like yours are making, is it code red at this point in time?
I think, I may be wrong, but if AI stays on the trajectory that it appears to be on, I think we will say, man, we wish that people had invested more earlier and built out more infrastructure earlier. Clearly, the industry is making a very big bet, but when we look at the economic utility of these models, as these models start to be able to create such value on their own, we are again kind of running out of capacity, and I expect that to happen many more quarters into the future.
But, you know, what kind of investments do you believe are going to require? You're saying that this is not enough. What we're already seeing is not enough, and that's trillions of dollars being poured in at this point in time.
In some markets, you can say, what's the total market? What's the total market? What would be enough? And then there's some other markets where demand is very correlated to price. If we can make intelligence very cheap and very abundant, I think there will be huge amounts of demand. If intelligence is limited and very expensive, there will be less demand. So I think you can talk about how much would be enough at a certain level of capability relative to a certain price, but in the abstract sense, it's hard. On this mission of democratizing AI, that's part of why we think we need to invest so much, and we need to make AI so inexpensive, so abundant, so good, such that people can use a ton of it for whatever they'd like.
But what is it going to eventually mean as far as your own bottom line is concerned and monetization? I mean, you've brought in ChatGPT ads with the purpose of being able to monetize and make the business model more sustainable. I know you had a comment to make on the ads that Anthropic put out, calling them crazy dystopic, but that is a fear that people have with what OpenAI can potentially do on that front.
Yeah, if we were, well, there's two parts of the question. There's sort of ads and then business models. I'll do ads first. I think if we were doing what those ads said of, having the AI response and give you a different piece of advice based off of who was paying, that would feel really bad. So our first principle of ads is we won't do that. But like a lot of other, most of the rest of the consumer internet, I think ads in a certain way, in a certain place can make sense as a model and helps democratize it to people that otherwise wouldn't pay for the subscription but still want to use a lot of AI. On the business model question more broadly, I think we're really starting to see enterprises realize how much they should be willing to pay for AI agents that can help do part of their workload. And my sense is we will see phenomenally huge growth there pretty quickly.
So do you feel comfortable where you find yourself financially today?
I wish we had more compute. But yes, I feel...
Will you have more compute, and what's the latest as far as the deal with NVIDIA is concerned?
We are building compute as fast as we can. Yes, we'll have more compute over time, for sure.
OpenClaw and the pivot towards more agentic future for you specifically, are we likely to, A, how do you use that? B, are we likely to see more acqui-hires from you?
So the models are getting good enough. We still have a lot of issues around safety and sort of security to solve with an OpenClaw-like approach, but I think OpenClaw is the most exciting thing to happen in the AI space in quite some time. And this vision of the models getting good enough that you can have a local agent running for you on your computer or a different computer and do all of these amazing things is really quite remarkable. It feels to me like one of these moments where we unequivocally get to see the future. In terms of will we do more deals like that? Yeah, probably. I mean, not a lot, but I would expect there'd be some more in our future.
IPO in 2026?
I don't know.
The visibility for that?
Presumably, OpenAI will be a public company someday. In terms of timing, there's like a lot of factors at play, and obviously this is a super dynamic world.
GPT-6?
Presumably that will happen at some point too. I don't have a date to share with you yet.
In the first half of the year?
I don't know when we're going to call something GPT-6, but the model improvement trajectory remains extremely steep. If you look at the progress from 5 to 5.1 to 5.2 to 5.3 in Codex, what I would say is, names aside, you can expect a trajectory like that to continue.
You know, you said in your speech that there's a lot that we know, but there's a lot that we don't know.
Yeah.
What worries you about the stuff that we don't know?
Well, I'll stick with OpenClaw as an example because, again, I just transfixed with how exciting it is. There was a really interesting example of emergent behavior there where you would see people's agents interacting and doing things together in a way that many people didn't predict or didn't have good intuitions for. And I think there will be a broad set of emergent behavior around very complex multi-agent systems in the economy, in society, in new kinds of social networks. And I don't know if I'd say worried about that, but I feel like the fog of uncertainty there is very thick.
Jobs, and I think that's what regular people are worried about, and that's the number one anxiety at this point in time. And every day you pick up the newspapers, and there's tech CEOs like you saying that it's going to be the end of jobs, at least in some sectors as we know it today. How much of this is, AI washing of jobs at this point in time? How much of it is real displacement or on account of AI?
Yeah. I mean, obviously it's both. I don't know what the exact percentage is, but there's some AI washing where people are blaming AI for layoffs they would otherwise do, and then there's some real displacement by AI of different kinds of jobs. I expect we'll see more of the latter over time. Of course, we'll find new kinds of jobs, as we do with every tech revolution, but I would expect the real impact of AI doing jobs in the next few years to begin to be palpable.
Let me end by asking you, Sam, as a CEO running OpenAI today, you're obviously excited about the potential of this technology. As a parent, are you equally excited or are you also more concerned?
Well, I'm more excited to be a parent than run OpenAI, but those are the two great joys of my life in that order. But I think you meant, like, am I more excited or concerned about the AI impact on my kids?
And humanity in general.
Yeah. My kids will never grow up in a world without AI. They will never know that there was a time, I mean, they'll know about it, but only because of reading history books, that there was a time where every computer, every system they used wasn't smarter than them. And So I think it's going to seem very normal to them. I think it'll feel stranger to those of us that lived through the transition. I expect the future to get far better. There are real downsides. You can imagine things going wrong. We'll have to mitigate those like we have with lots of challenges throughout history. But the trajectory of human progress and the world getting better requires each generation to keep inventing new technology, to keep strengthening society. And then people can do more and build more stuff. And I'm excited for my kids to live in that world.
Sam Altman, a pleasure. Thanks very much for joining
you.
us here in India, and we wish you the very best of luck with the rest of your trip and your plans for OpenAI. Appreciate you joining us here.
Thank you very much.
Well, we are going to take a break. The headliners will continue here on CNBC TV 18. We're back in a moment with plenty more. Stay tuned. Welcome back. The headliners continue here in the CNBC TV 18 studios at the India AI Impact Summit. It is my pleasure to welcome into our studios Dario Modi of Anthropic. Dario, many thanks for joining us here on CNBC TV 18. It's great to have you here in India. You know, you've been talking about the energy, the palpable energy that you've been soaking in here in India. Let me start by asking you about the significance of the India market for a company like Anthropic.
Yeah, well, thanks for having me. I mean, I think the way we think about it is, Anthropic is a company that tries to work with other companies, right? We're not primarily a consumer company, we're primarily an enterprise company. And so we succeed when our customers succeed. And those customers can be individual developers, they can be startups, they can be large enterprises. And all of those exist to a really great degree in India. I've gone to events for individual builders. I've gone to events for startups who are just starting out, and of course we've met with both here and on my previous trip some of the biggest companies in India. And in all the cases, our philosophy here is how can we work together in a way that not just benefits Anthropic but also benefits the companies we're working with. Right? Many of the companies don't have as much AI expertise, but they have a network in India. They have distribution. They know the Indian market. They have expertise that's complementary to us.
Dario, what we've seen starting the 6th of February in the Indian stock market is a bloodbath. The Indian IT services companies have taken a large knock, really on account of what Anthropic is doing with Claude. Now, are you a bad dream or a nightmare for the IT services companies?
We certainly don't want to be. I mean, the stock market can move for all sorts of reasons, but I think our intent is that if companies work together with us in like a positive way, they can gain a lot and we can gain a lot as well, right? We're not trying to like replace replace existing industries. Like,
but can you? Hope, you're not trying to, but can you?
I mean, again, there's different ways things can go. And our hope is that we can work with these companies. We build models, we build products on top of those models, but also companies can further build on top of those products. They can distribute those products. They can, I think of it as Lego building blocks, right? Like, we're not saying like, okay, we put together a few Lego blocks and that replaces everything. We're saying, okay, here are a few Lego blocks and you can continue to build. You can continue to extend on them and, build things that make sense for a particular industry or for the Indian market in particular. And, I think that's the vision we're going for. Now, inevitably, I think there's going to be some disruption, not related to any particular company or particular industry, but related to the technology in general because it's moving so fast. But what we aspire to, what we try to make happen is for there to be more examples of us working together with companies and enhancing the joint value than we produce together. Then there is disruption, although inevitably there will be some disruption.
Inevitably there will be some disruption, but more partnerships. You've announced one with Infosys. Would you believe that more partnerships in India with enterprise customers like Infosys on the cards?
Yeah, we want to work with essentially, we want to work with essentially, all the companies in India. So, we're going to aim to get partnerships with, all the household names that you could think of. They're in different stages of discussion, and Infosys was the one that was announced just yesterday. We're very, very, very excited for the partnership. I visited Infosys the last time I came to India in October, and of course I was I just did a fireside chat at the Impact Summit with Nandan, chairman of Infosys. But we're excited to work with all the companies to again to work with them in a way that allows them to grow with us.
Dario, you've been calling out the risks related to AI, not just the disruption for the jobs market, but issues related to security and so on and so forth. But let's address the jobs question, because you believe that 50% of the entry-level jobs may no longer exist over the next 3 years. But there are others like Meredith Whittaker at Signal who believes that it's not so much elimination of jobs as much as it is displacement or an invisibilization almost of jobs at this point in time. How much do you believe that we're likely to see an elimination? How much of it is going to be displacement? And how much of AI washing are we really seeing when we talk about job losses today?
Yeah, so, I think it's really hard to predict. The economy and economics is hard to predict. So it's hard to say, will jobs go away, or will they be downskilled, or will they be moved in kind of a different direction? So the exact form that it takes, I don't know. What I do know is there will be potentially a lot of disruption because the technology is moving so fast. What is different about AI than previous technologies, it's not any different in that, there's some things humans could do before that, this new technology is now able to do, that's able to replace parts of it or all of it. What's different is it's moving quickly and it's broad because AI is a general technology. And And so what we need to do, I think more so than trying to figure out exactly what form the disruption will take, is help people to adapt. I will give an example. I can see the day when, even within, say, Anthropic, we need less software engineers than we have today, because the models are better at automating software engineering end to end. But we've been thinking hard about, what are jobs that those people could do? And, one thing is, there's this notion of the forward deployed engineer.
Yeah.
Someone who has technical skills, but who works with customers to enable technical systems and technical solutions with those customers. And as Anthropic grows and has more customers, there's going to be a need for a lot of them because the number of customers we need to talk to is large. And so that's one possible example where one thing goes away, but another door opens to take its place. And, I can't guarantee that more jobs will be created than are destroyed. We have to make that true. We have to figure out how to make that true, and it's going to be a challenge. But the earlier we see it, the more we're honest about it, the better the chance we can address it.
I want to talk about the agentic revolution that everyone's sort of all in on at this point in time. And again, you call out the risks, and you believe that it's probably inevitable that we will start to see selfhood as far as these agents are concerned. Now, are we prepared for that future? You're stress testing agents at this point in time, and there are some pretty concerning things that have come up. Are we prepared to deal with that?
Yeah, so I would say things are going too fast and we are not yet prepared. And we need to ramp up, for all that. Every time we release a model, we have, 200 pages of analysis of these various stress tests that you mentioned, where we put the model in extreme situations, and see if it lies, if it blackmails, if it tries to gain power. It does that if you push it enough. I would think of it more as like, you're developing a car and you do a crash test of the car and you say, okay, well, let's make the car go really fast and let's put it on an icy road and let's make it turn a lot. And then, then you kind of see these horrific crashes. So these are not things that are happening in the real world, but there are things that could happen as the models get stronger and as they're put in extreme situations. And so we do everything we can to test for and to steer the models to not display these behaviors. But because progress is going so fast, I think we actually need to up our efforts even more than we have before to make sure that we are able to characterize and reduce these behaviors, and it is an area of concern to me.
Well, let's talk about the real world. IPO in 2026, working towards that?
I would say, our focus is on trying to serve our customers as best we can, build our models as best we can. As we've seen, financing in this field, requires a large amount of money, and there's different directions to get that money, but we don't have any definite plans for exactly when we will do or not do
You've
something.
just raised a significant amount of money, $30 billion. Is that enough runway at this point in time for the kind of growth plans that you have?
I mean, the technology is really, because the revenue is growing so fast, the needs for building data centers a year or two ahead of time are really great. And so, I would say, strange as it sounds, 30 billion helps with that, but the capital needs of this industry are actually, even in excess of that.
Making money. When are we going to companies start to make money?
Yeah, so, the economics of this field are interesting. What I would say is actually that every model we build, so, you imagine the company builds different AI models, right? Different versions of it. Every model that we build, if we take the amount that it costs to train the model and the amount that it costs to serve the model to customers, and subtract all of that from the revenue that the model gets, every model that we've made is actually profitable. The issue is that we're spending more money to train the next model. And so I think companies, including ours, will be profitable at the moment when we're no longer scaling up, the next model so much. So at some point, things will reach some kind of equilibration. And then I think us and perhaps the other companies in the space will be profitable.
I want to end by asking you about something that's in the news, the possibility of Anthropic being blacklisted by the Pentagon. Have you been in conversation with the authorities there? Is there an update on that you can share with us?
So we've been deploying our models for U.S. national security for quite a while. And, I think our basic position on it is, we've offered the models in kind of a very wide range of, for a very wide range of use cases. And, I think the main areas of concern that we have are, fully autonomous weapons where there isn't a human in the loop, and domestic mass surveillance of Americans. So those are the two areas where we have some concern, and we want to make sure the models are not used in that way. And we continue to have productive discussions about how to use our models for almost every use case. But while taking into account, I think these red lines are fairly important for making sure that AI is used in a way that's compatible with democracy and in line with the culture of our company. We're just attempting to make sure that we deploy our technology in a way that's compatible with and advances democratic values. The whole point is to defend democracy, and we continue to have productive discussions around this, and we're very excited to help national security of the United States and other democracies.
Dario, I'll end by asking you, 2026, the breakthrough that you expect to see?
I don't know that it'll be just one thing, but I do think that the models will continue to get more powerful. They'll continue to get better at a wide variety of tasks. We're going to see a bunch of abilities. The models, I think, may be able to do end-to-end tasks much more than they could before in software engineering. We'll see progress in finance. We'll see progress in biomedical. We'll see progress in cyber, which I think will bring some safety and security issues. But, I don't think there's going to be any one unlock. There's just a lot of momentum, and the models are getting better across the board.
Dario, it's been an absolute pleasure. Thank you so much for stopping by here in our CNBC TV 18 studios at the Impact Summit. We look forward to seeing much more of you here in India and hearing more from you about the partnerships that you intend to ink here in India as well. Appreciate your time. We are going to take a break, but the headliners will continue. That was Dario Amadi of Anthropic. We're right back with you after this.
Hello and welcome to News Center. I'm Parikshit Luthra. The Tata Sons board has deferred a decision on Chairman N. Chandrasekaran's reappointment until its June meeting, bringing to fore a boardroom battle at one of India's oldest business houses. While no official statement was issued at the end of the marathon board meeting at Bombay House yesterday, sources say the Tata Trust Chairman Noel Tata had asked for certain conditions to be linked to Chandra's reappointment, while raising concerns about losses in certain group companies. The 62-year-old Chandra has led the $300 billion conglomerate since February 2017, with his current tenure set to end in February next year. So what are the commitments that Noel Tata is seeking? Firstly, he's adamant that Tata Sons should not be listed and should remain a private entity. Secondly, Noel Tata has insisted that investments in new projects should not hurt Tata Sons' liquidity. And that's not all. He also asked Chandra to settle the ongoing feud with Shapoorji Pallonji Group. Listen in to what N. Chandrasekaran had to say after that board meeting.
And, can you give us the outcome of the meeting, please? We have been standing since morning. We have really worked hard while being outside.
So it's the news that your reappointment
No. I recommended it should be deferred because that was a request made by one of the directors.
From the promoter side, from the trust side, were there issues
Thank you. I'm not
all right. So the part where it was said that, you know, the performance of every company of the group, there was a lot about that also. Any comment on that, sir, that how one company's performance cannot be a benchmark?
No.
All right, what changes for Tata Group, Chandra, from here? What changes?
Nothing changes.
A CNBC TV18 analysis shows that the Tata Group's financial performance has significantly improved during N. Chandra's 9 years at the helm, barring a blip in the last few months. Yusuf is here with the analysis.
Well, Tata Group's revenue has nearly doubled and profits have tripled with N. Chandrasekaran at the helm of the $300 billion conglomerate. In FY 2017, the group's revenue was just over 6 lakh crore rupees. By FY 25, revenue had risen to more than 11.5 lakh crore rupees. The group's profit were around 35,000 crore rupees 9 years ago. As of FY 25, profits had nearly touched 1 lakh crore rupees. When Chandra took over in 2017, Tata Steel was reported an annual loss of over 4,400 crore rupees. But since then, the company has turned things around, posting a profit of 3,400 crore rupees in FY 25. Similarly, Indian Hotels Company has sunk from a 63 crore loss in FY 17 to a profit of more than 1,900 crore rupees in FY 25, reflecting a revival in the hospitality cycle. However, not all bets have paid off. In 2021, Tata Digital acquired a majority stake in Big Basket for about 9,500 crore rupees, strengthening its e-commerce push. But intensifying competition from quick commerce players and others has eroded Big Basket's market share from nearly 50% to under 10% in the last 5 years. TCS contributed nearly 75% of the group's valuations by 2020. But since then, the valuation has diversified, with TCS now accounting for 36% of the overall valuation. Despite the challenging situations in the IT sector, TCS remains the crown jewel with valuations of over 9 lakh crore rupees. Tata Group's total valuation now stands at 26 lakh crore rupees. FY 26 has been a challenging year for TCS. In the first 9 months of this financial year, TCS has seen its revenue grow by nearly 3% and profit decline by more than 2%. Tata Motors is also struggling after a major cyber attack at JLR and the tariff tensions hurting automobiles business across the globe.
The Trump administration has imposed countervailing duties on solar cells and panels imported from India, Indonesia and Laos. US will probe if government subsidies in India and other nations is hurting the competitiveness of American companies. Countervailing duty of 126% will be imposed on certain solar good imports from India. Imports from Indonesia and Laos have been hit with 105% and 81% tariffs respectively. Shares of top Indian solar companies slumped in trade on back of the announcement. However, top executives of these companies played down the impact of the new tariffs. Vinny Motiwala is here with more details.
Right, so we had the solar panel, solar module stocks which were in focus today. Why? Because obviously US said that initial duties of Indian solar imports at 126%. This was an ongoing investigation and most of the companies in India already anticipated that there would be a duty coming in. Now that came in at 126% this morning. What was the exposure for the companies? Premier Energies, 0% export is what they have. They are mainly domestic focused company. Bharti Energies, they had 28.6% exposure to exports. Vikram Solar exports exposure is at 16%. This is the exports exposure in total. Now, through the day, we managed to speak to the management of Vikram Solar as well as Premier Energies. Premier Energies obviously was not seeing any impact of this because they had 0% export, but they spoke about how it may not impact the industry as well in terms of the competitive intensity or the pricing. Vikram Solar also explained to us that the US duty that is being imposed is on the place of origin of the cell that is used in the solar module. So it's on the cell. If the cell is made in India, then you're using it in the solar module and then you're exporting that to the US. Then you will be charged this duty. So Vikram Solar is not doing that. They are not applicable to this 126% duty that is there because they do not have any of those solar modules which are made with those Indian origin based cells. So they do not think that this duty will bring Indian solar industry story to a halt. The export, they said that they have cautiously pivoted towards more on the domestic front over the last few years as well. US tariff uncertainty was always a concern. So they started bringing the export market a bit lower and more focus became on the domestic market versus what there was on US market. So they do not get impacted as well. So that's a clarification that came in there as well. Bharti Energies and their con call also highlighted similarly that they do not export modules to US from cells made in India and hence they will not see that 126% impact of duty. So these important clarifications came through the day as well for these companies. So that's important to take a note of as well.
US President Donald Trump claimed that the first year of his second presidency achieved a turnaround for the ages during what was the longest State of the Union address in the country's history. Trump's 1 hour, 48-minute long speech was laden with repeated jibes at the Democrats. His address comes months before the pivotal US midterm elections, with reports suggesting that the Republicans could lose control of the Congress. In his trademark style, Trump claimed credit for the economy, which he said was roaring like never before. The US president also doubled down on tariffs, with 4 Supreme Court judges watching from the front row. 3 of them had ruled against Trump's tariffs. Surprisingly, he did not launch personal attacks against the judiciary, but called the court ruling unfortunate. Trump even shook hands with the judges before making his way to the podium ahead of his speech.
Just 4 days ago, an unfortunate ruling from the United States Supreme Court. It just came down. It came down. Very unfortunate ruling. But the good news is that almost all countries and corporations want to keep the deal that they already made, right, Scott? Knowing that the legal power that I, as president, have to make a new deal could be far worse for them, and therefore they will continue to work along the same successful path that we had negotiated before the Supreme Court's unfortunate involvement.
All right, let's see what happens to the India-US trade deal now. Time for a short break, but coming up on the other side, Prime Minister Modi lands in Israel for a 2-day visit to deepen trade and defense ties between the two nations. We discuss that and much more with our guests on the other side. Welcome back to News Center. Prime Minister Modi landed in Tel Aviv for his two-day state visit to Israel. Prime Minister Modi and Israeli Prime Minister Benjamin Netanyahu will meet to deepen trade and defense ties between the two nations. The city of Jerusalem is decked up to welcome Prime Minister Modi, who will visit the city to interact with the Indian community. In his second visit to Israel, he will also be addressing the Israeli parliament, the Knesset, making him the first Indian Prime Minister to do so. PM Modi believes the visit is set to consolidate the enduring bonds between the two nations and even set new goals for the strategic partnership. On several occasions, both leaders have called each other dear friends. Taking a jab at PM's visit, Congress said the Prime Minister is displaying moral cowardice by not being critical of his dear friend. Meanwhile, the visit coincides with the first round of negotiations for the India-Israel Free Trade Agreement, which commenced on the 23rd of February and will continue until the 26th of February. Bilateral trade, excluding defense, stood at over $3 billion in FY25, almost half of the $6.53 billion in FY24. The decline was largely on the back of regional security situation and trade route disruptions. The peak in trade between both nations was in financial year 2023, when it crossed $10 billion in total trade. Let me now go across to Sanjay Suri, who is joining us live from Jerusalem to break down and decode the Prime Minister's visit. Sanjay, what are some of the big agreements on the agenda that we could see signed between the two leaders and the delegations?
Well, the focus really is going to be defense, defense, defense. This is what this meeting primarily is about, this visit primarily is about, because we are now on the threshold of an attempt from both countries and a plan, and a working plan from both countries to take defense ties to a new level. I know the expression a new level is rather commonly used and usually means very little, but we are looking at some specifics here. We've seen that $8.7 billion deal with Israel for missile systems like the Spice 1000, Rampage, and on the horizon, well, to use a pun, will be the new Israeli missile, the Golden Horizon. There's a plan for India to get that. All this is going to be envisaged and to be negotiated, because this is going to be decided at a level where really the prime ministers will have to step in and take a call. It can't be left to officials. The attempt is to go beyond this kind of acquisition and import, even if it's backed by assembly in India. The attempt is to get together all the way from innovation through engineering into joint production. And therefore, there is going to be a good deal of enmeshing between the defense industries in India and in Israel. And this will have huge economic implications, because these will be systems for use in both countries, but also potentially for export to third countries.
All right. Thank you very much, Sanjay Suri, for joining us with those important updates. And we wish you the best for covering the Prime Minister's visit to Israel. Let me now go across to Anil Trigunath, who is joining us, former ambassador to Jordan and Libya, someone who is an expert on West Asia. Ambassador Trigunath, thank you very much for being with us. Now, this is going to be the second visit of the Prime Minister to Israel. Both sides elevated their partnership to a strategic partnership during the visit of PM Modi in 2017. How does this visit build on the work already done in the last 9 years? And remember, we are age-old partners. India and Israel have stood by each other through thick and thin.
Yes, you are very right, Parikshit. This is a relationship which is truly has been time-tested, even when we did not have full-fledged diplomatic relations. You remember that whether it was the 1962, whether it was 65, 71 wars, or even 1999, the Kargil war. Israel is one country that has stood with us, and we have seen that once again during the India's counter-terror operations, Operation Sindoor against Pakistan. One country that stood without any qualification with India was Israel. So that is something that is a given. And in this relationship, which has turned into strategic, could become a special strategic partnership. So today, unfortunately, when I see it in the overall context, I find the strategic word has become more transactional. But out here, because of the P2P connect and because of kind of personal bonhomie between Prime Minister Modi and Prime Minister Netanyahu, I think that there is a greater momentum to harness the synergies between the two countries, especially in the technology and innovation area, be it in the AI, quantum computing. I mean, the next threshold that we need to pass going forward from defense to cybersecurity to innovation to agriculture to other areas. So Israel has been very much active here, has been trying to develop this kind of a special partnership. It has emerged as the top three partners of India in the defense sector. I mean, I remember we used to have the India-Russia-Israel partnership at one time, and our Sukhois, we had Israeli technology also was used there. So it is not that this is something that is going to be, but it's going to be really with this visit, what we will see is elevating it to a very different level. Israel has not palmed off its technologies, for example, be it the Iron Dome or for that matter, the Iron Beam that we are talking about for really attacking the drones, basically killing the drones at $2 per laser beam. So I think those are the kind of technologies India also needs. We have seen during Operation Sindoor how the Pakis brought in the storm of these. So we require new technologies, new defense, and we need to manufacture in India. That is another lesson. And therefore, Israelis are very ready, not only to part of the technology, but will also to harness India's potential, knowing too well that it is a country. I mean, I guess you remember that very recently when Netanyahu was under pressure from the US, he openly said it, that if India was a member of the Security Council, permanent member of the Security Council, they perhaps won't even need the USA. So it is the kind of relationship, I think, bilateral level is moving forward.
You know, Ambassador Trikunath, ahead of the PM's visit, Prime Minister Netanyahu has proposed the Hexagon of Alliances, a strategic framework designed to formalize a network of allied nations to counter regional threats. Is India likely to agree to this, and why is this significant?
Well, I think that this is Prime Minister Netanyahu's idea. Since India is a strategic partner both with Greece, with Cyprus, and with a large number of Middle Eastern countries, of the West Asian countries, be it Saudi Arabia, UAE, Qatar, Oman, and all. So a lot of countries there. But I think that this is more of a, in my view, his idea. I doubt very much that if it is called alliance, that India would in any way be interested in doing so. We are already partnered with them in the I2U2, in the IMEC corridor, and several other bilateral initiatives. And we welcome the Abraham Accords. But at the same time, India has generally been quite averse to joining any alliance by the name of alliance unless it is a multilateral kind of a grouping. So I doubt very much that we will bite that bait. But at the same time, I don't have any this thing that going forward, if there are greater fault lines or divisions where our interests are directly impacted due to some other external factors, India will have to consider aligning more closely with certain countries, including Israel.
All right, let me ask you about what we expect in terms of the trade negotiations. What headway can we make in the trade talks?
Well, I think the FTA has been discussed, and the Israelis and the Indian, both sides are very keen. And as you know, yesterday we have also started the framework agreement with the GCC, which has been in the works for 15, 16 years now. So more and more FTAs and CEPAs are being harvested now, courtesy President Trump, frankly. And I believe that there is tremendous potential. Right now, the trade has gone down last year, as you know. But it has a great potential of reaching $10–20 billion if you leave aside the defense. So I think that is something that the two countries will do. I think they will also try to find some ways to work trilaterally, be it under the context of I2U2 or between India, Israel, UAE, or in Africa or with some other countries. So that would be another area in which the countries can work together. So there are issues that will be addressed in these FTA negotiations, and I believe that we are going to see a fast track for this.
You know, defense cooperation has always been an important pillar of our partnership. In November 2025, during the visit of the Defense Secretary of India to Israel, an important MOU on defense cooperation was signed between the two countries. This year, there is going to be a defense framework which will also be signed between India and Israel, and many of the defense manufacturers are looking at that very closely because it would align the two nations in the defense sector. What can we expect in terms of India being a buyer of defense equipment, moving on to joint manufacturing, joint development in future? What could this visit lead to?
Well, I think that what we have heard from the Israeli side as well as from the Indian side, that not only that the defense and security have been the main pillar of our cooperation between the two countries. This is also that how to incorporate new technologies and work in India, because India provides the scale to Israel. For its technologies, for its arms, equipments. And Israel has understood that India will continue to pursue, and more so after the Operation Sindoor, that there would be Make in India. So Israel perhaps would be happy to work it in India, make in India for the world, that kind of a thing jointly we can do. We have had a successful collaboration with Russians and the BrahMos and others. So I think that that kind of a model could perhaps work more closely, and that is India's priority. And I think that we will buy off the shelf what is immediately required, but we would prefer that these are eventually manufactured with full transfer of technology. And Israel has agreed apparently to transfer technologies as well of the key things that we need.
All right. Thank you very much for joining us, Ambassador Trigunayatha, and taking us through all the key takeaways of the India-Israel visit. With that, it's a wrap on this edition of News Center. More news and updates continue right here.
The Nifty IT index is down 15% in 2026 amid growing fears that the rapid AI advances could disrupt both Indian IT services and global software companies. Bears warn that AI could erode SaaS demand and shrink the addressable opportunity for IT services, potentially pressurizing revenues. The bulls, however, believe that valuations have turned attractive and argue that the sector has navigated multiple technology shifts before and can do so again. Well, to break the debate down, we are joined by Abhishek Bhandari, the Executive Director, Technology and Internet Equity Research at Nomura India. Well, Abhishek, thanks a lot for joining in. Hello and welcome to Finding Alpha. I'm Nigel D'Souza. We're coming to you live from the Mumbai News Center. Well, Abhishek, you've been writing off late. It's been a very, very busy time for you. So we thank you for coming down to the Mumbai News Center, and we're looking forward to having a good chat.
Pleasure is mine, Nigel.
All right, Abhishek, let's get straight to the point then. Before we get to this entire AI disruption story, give us a broad sense about the size of the Indian IT services, as an industry, and if you could break it down for us, services, products, as well as platforms.
Got it. So NASSCOM pegs the size of the IT industry at around $280 billion.
Okay.
And the rough breakdown is 50% of that is IT services, 20% is ER&D, 20% is business process management, or BPO as we call it, and the remaining 10% is the hardware and the platform business.
Okay, all right. And if we had to put a point, which is the sector or the segment that is most under threat, the BPO part of it would be under threat. Everyone would be in different forms. But if you have to, say AI is going to be the biggest threat to which part of it?
Actually, entire IT services and BPO, because the fear is more on the deflation because of AI.
Okay, all right. Let's talk a little bit about that then. A large chunk of Indian IT revenues, they are linked to the SaaS players. Salesforce, ServiceNow, as well as Oracle, which many believe those companies itself are under threat. Does this create a dual risk for our IT companies, both on volumes as well as on pricing?
That's a good question, Nigel. What has been happening in the US market of late is, the people have written off the SaaS industry, saying that in the AI world, SaaS companies can be wipe-coded away by some startup.
Yes.
And that puts a lot of pressure on their high gross margins, which is around 70 to 80%. The per-seat pricing, which is on the subscription side, which could come under threat because of SaaS. In some extreme cases, people believe SaaS companies can become obsolete altogether.
Okay.
As you would know, IT services companies derive a lot of value by implementing the SaaS products into the client's, IT landscape.
Correct.
That's a fear. Having said that, I think it's too simplistic an assumption. The SaaS players actually have built quite a big moat around the data, the regulatory aspects. They gave a lot of comfort to the enterprises who are buying their products. And the real moat, what they have is the data, what they have created over the last 15, 20, 25 years of existence. In fact, they are also pivoting toward the AI world by creating AI bots and AI agents. And who will be the guys who will be implementing the AI agents into the IT landscape? It will be the system integrators like the IT services.
IT companies.
So I'm not as bearish, on the premise that SaaS companies going away or SaaS companies shrinking will be a bad news for IT. In fact, the scope of work will increase because the work will now shift from just implementing SaaS towards managing the bots, what the SaaS companies are creating.
And that's when our Indian IT companies as well come into play. The software is created and then implementation is upon our Indian IT companies. Okay, all right. Let's talk a little bit more into this now. Since you spoke about the annual deflation, if you could give us an example with regard to these IT contracts. How long or what's the time duration of these IT contracts?
Yeah.
And if you could tell us a little bit about this annual deflation. I understand that over a lifespan of a contract, there is some kind of deflation that takes place. So what has it been in the past? And in the time to come, will that deflation of, say, a couple of percent go up by another couple of percent? Give us an example.
I think this is the most pertinent question, what investors are grappling with in the, wake of the AI disruption. Historically, if you look at it, the book of business for IT services companies typically has a duration of 5 years.
Okay.
So let's call it every year, 20% of the business comes from renewal. Pre-AI world, the typical discounts what IT companies used to give to the clients in a renewal used to range in the range of 15 to 20%. Okay. So the annual impact of deflation was 3 to 4% on your revenue per year in the pre-AI world. Now, what is happening because of AI is there is a lot of automation happening. A lot of automation means lesser effort needed for the same amount of IT work. So the deflation has now increased, from giving a 15, 20% discount to now giving 20 to 30% discount to the clients. And what is happening is, since the clients are seeing more savings upfront, they're also shrinking the renewal cycle from 5 years to a lesser amount.
Right.
So in total, we guess, we estimate rather, would be the deflation because of AI is now ranging in the range of 6 to 7% for the IT services company. That's almost 300 to 400 basis points higher compared to the pre-AI world.
So annual deflation could move from 3 to 4% to around the 6 to 7% mark, which will in turn put pressure on price. And not just that, the renewal time frame as well could come down. So it could be a double whammy out there. Got that. Let's focus on a couple of commentary, that we've got in the last 1 year or so. Nandan Nilekani, he said that around 60 to around 80% of IT budgets, they're locked in maintenance. But now he says that there's going to be a big shift from maintenance towards innovation. Can innovation, spending offset this potential pressure on maintenance? So as of now, when an enterprise or a client gives a particular contract, what is the mix between maintenance and innovation? And how do you see that changing? And do you agree with Nandan?
I think Nandan has made a very valid point that, IT spends are more towards maintaining the estate rather than innovating.
Yes.
And, the general psyche of, any IT spender, an enterprise IT spender would be to keep the tech spending flat, if not improving. Nobody wants to shrink the tech spending because it is very hard, once you drop the tech budget, to get a budget approval again for an increase.
Right.
What happens is typically the budgets are kept flat. Now, what it means is if you're saving some money because of cost savings, because of AI-led, automation, you'd rather reuse it somewhere else.
Yes.
So that's the, general thinking process of the IT, officers, the CISOs, and all those things. Now, since most of the spending is being hawked away right now by the maintenance, very little is left for innovation.
Yes.
Right. So if the maintenance cost comes down, definitely, even with the same tech budget being flat, you can actually spend more on the innovation side.
Right.
Do remember, tech is one of the few things in the humanity where people feel always dissatisfied or, unsatiated because of buying. You always want to buy more and more because the tech is improving constantly. The cycles are becoming shorter.
Yes.
So the spending, shifts away from maintaining. I think a lot of it will go away into the innovation part.
Right.
So actually, I agree with him. I think the way to think about it is, AI is also making innovation simpler and easier and less risky. As an example, many of the banks are still running legacy mainframe, which may have been written in 60s, 70s. The coders who have written those codes probably do not exist anymore. Or the risk of migrating them, from legacy to modern apps is very high.
Right.
And a typical enterprise buyer is a risk-averse person. He always optimizes his career to reduce risk, focusing less on cost and innovation. With AI, this can actually change. A lot of the mainframe or migration or upgradation may happen at a significantly lower price and at a risk which is significantly lower compared to the pre-AI world. So I think AI definitely opens up a lot of opportunities. And I think the investments will definitely shift away from maintenance towards more on innovation.
So as of now, ballpark for the industry will be 70-30, 70 towards maintenance and 30 towards innovation. And in the time to come, innovation could move from around that 30% to 40, 45% or thereabouts.
It should go up. The pace of going up depends on the enterprise's willingness to adopt the new tech.
Indeed. And that's going to be quite interesting because as a customer, as a consumer, you're far okay to adapt to AI, but otherwise on the enterprise side it's going to be quite interesting to see how adaptation takes place. Since we spoke about Nandan, I also want to talk about Salil Parekh. He has pegged that AI first services opportunity could be $300 to $400 billion or thereabouts by 2030. How realistic is this? Because data sanitization or even cloud migration opportunity could be large, even in this sort of an AI world. Would you agree with this estimate, 300 to around 400 billion?
I wouldn't comment on the number, but the way to think about it is the typical IT landscape of any enterprise is very messy. They have been built over multiple enterprise solutions over a period of time. The data are often siloed; they don't talk to each other.
Right.
And the key raw material, as I say, to make your AI strategy successful is cleansed data. The data has to be cleansed, the data has to be sanitized, and data has to be harmonized across your enterprise.
Correct.
Who will do that work for you? A person who understands the context of your IT, none other than your IT vendor, who has been working with you for a long time, who's also a system integrator, by the way, who has implemented multiple solutions over a period of time, and he knows which is sitting where. So I think definitely the data migration and the cloud migration being the preparatory work for AI, for IT, for the enterprises to become AI ready will be a big opportunity. An IT services company will definitely play a role in that.
So data sanitization as well as cloud migration, there will be a role for Indian IT companies to play even in that.
Yes.
Got that. All right. But the counter view is that, enterprise tech is far more complex than, say, a consumer-led AI. So adoption and deployment will take time. Where do you stand on the pace of disruption? That's going to be quite interesting. Because there is a bit of a gap right now, between, an AI tool coming about and it's getting implemented. And at the enterprise level, it will be a little bit more elongated. So what do you think about that?
Sure. I think, AI in that way is slightly different from the previous tech. In the previous tech, we have seen first the B2B or the enterprise adoption being faster and higher compared to the consumer side.
Right.
It's just flipped, because in the AI world. And you and I, keep getting better models, in our GPT subscriptions or Gemini subscriptions every week. So the pace of innovation definitely is, moving very fast. Every model maker, every large, infrastructure developer on the AI wants to become top of the podium, and that's the innovation which is driving the models becoming better and better every day. The reality on the, the enterprise side is that enterprises customers are very skeptical yet. They see multiple unanswered questions. What is the, the legal sanctity of these models? What are the guardrails around compliances? Copyrights issues, etc. So they're quite cautious and slow in terms of adopting AI.
Yes.
So what they're doing right now is, they're starting off with POCs. Give me a small proof of concept with a small project. If it makes sense, then I'll probably roll out a bigger project for my entire IT landscape. So enterprise companies are going slower, but nowadays we have started hearing comments regularly from the IT companies, not only from Indian, but the global companies, that the projects have started becoming a little larger.
Yes.
From POCs, now they're moving to enterprise-wide adoption. Still, from a number perspective, if revenue numbers of Infosys, TCS, or Accenture is any indicator, AI is still just mid-single digit, between 5 and 6%.
Right.
So still small, but rising. I think the real wave of AI adoption will come once the macro becomes a little stabler, because that's, I think, is the necessary requirement for any big invention and a big investment to be made into the AI from an enterprise side. And also, once it's clear that AI can move just not from cost saving, which is the automation-led benefit, towards the revenue side, that's when enterprises will start coming through. So I think it's a matter of time. Even before AI becoming mainstream, the preparatory work of that will start. Again, going back to your previous point, in the previous discussion we had, the data migration and the cloud will be a prerequisite for any larger AI project to happen for any enterprise.
All right. The sense that I'm getting is, don't just throw in the towel with regard to these IT companies.
Yeah.
But there still could be plenty of work for them to do, even in an AI-led world. So that's quite interesting. But the question is revenue growth, growth, growth. That's what the street looks at very, very closely. And you have outlined multiple growth scenarios. So if we could walk us through the key bull, bear, as well as the base scenarios. Depending on growth, what kind of multiple will you give our IT companies? They have come down a large deal, from the top. So highlight those three big scenarios.
Sure. If you look at the bear case, which is the topical theme in the market right now, the bear case is this company's business models becomes obsolete. They're not able to replace the deflation in revenue with a new stream of revenue on AI, and they struggle on growth. They may possibly have a negative growth, or in the best case, very early single-digit 2 to 3% growth. They keep margins stable, by optimizing on the workforce. You will work in a scenario where the EPS growth becomes zero or close to, -1, -2%. Now, those kind of companies, X growth, in our view, could trade at 10 to 12 times.
Okay.
So that's the extreme bear, assuming these business models will become extreme. The base case is, the IT companies I would say adapt themselves, which they have done in the past tech cycles. Right now, we are going through the valley, as I call it, where the deflation of revenue is hitting first. The ascent into the mountain, which is the AI-led revenue, is taking longer than expected. But it will come. Ultimately, the AI models have to get monetized. If somebody has to monetize the model, somebody has to implement the model. And the implementers are nothing but the system integrators, which are the IT services companies.
Right.
In that case, I think the growth will come back towards mid to high single digit, in the range of 5 to 7, 5 to 8%, as you call it. In that case, I think the large cap IT may still go back towards early 20s in terms of multiple.
All right. That's the base case.
That's the base case. The bull case, is the IT companies pivot completely from just being, service providers to become value creators. What I mean by that is, the service model changes from labor, intensive work towards more like a platform.
Yes.
Where the company starts selling services as a software. This is, I would say, a low probability event right now, because we don't see too much of evidence of it right now. But if this were to turn out to be true, you could see a lot of non-linearity in revenue and the margins. And the multiples, in that case, could range even up to 30 times, for the good large cap IT companies. So I would say we are more of the base camp. We think IT companies in the past have demonstrated their ability to navigate tech cycles. Of course, tech cycle always has a deflationary curve followed by a volume increase curve.
Yes.
We are currently more in the deflationary side, and the volume is yet to come. But we think volume will come because the AI has to be monetized and AI has to be implemented in the IT landscapes.
Well put, Abhishek. You're helping us out with that. With regard, if things really go bad and there is no growth, there could be a marginal degrowth, then 10 to 12 times. If they get back to their growing base, 5 to around 7-8% odd, then maybe they get back to the early 20s. Yeah. And if it's all bombastic and things look very, very good, then maybe high 20s or maybe a 30 multiple as well. So we've got those three scenarios out of the way. Bear, base as well as bull. But my argument is, Cognizant. That's the large name, right, globally. That trades at what? 10.5, 11 times or thereabouts its forward earnings. But Indian IT companies, historically, we know they have traded a bit of a premium. Do you think in this sort of a scenario, does this valuation gap actually narrow between, say, an IT company in India that trades between, 16 to around 24 times, very, very approximately, and a Cognizant that's trading at around 10 to around 11 times? Will that gap narrow, or do you expect India to continue to trade at that premium?
See, traditionally, the US market is more software and innovation market, where the multiples for software stocks have been higher and the services multiples have been lower.
Yeah.
And Cognizant is no different. Cognizant actually has gone through a patchy period of growth. We cover the stock. We have seen periods of low growth, and now coming back on growth under Ravi as the CEO. Having said that, the other services stock in US is Accenture, which trades at around 15 times Bloomberg consensus earnings. So definitely the gap between the Indian IT companies and the large IT companies in the US has fallen quite a bit. We have seen the gap almost being 30 to 40%. Now the gap is hardly 15 to 20%. Having said that, I think we have to look at the multiples of Indian IT companies in the context of Indian markets, because there are certain nuances of the Indian market which give a premium to the IT stocks in India.
Correct.
Mainly the high dividend yields they have, which is higher than the market average rate, extremely strong corporate governance, free cash flow yields, etc. And for the first time, in the last 4 or 5 years, we have seen the gap between the broader market and the IT stocks now falling down to zero.
Right.
And even IT on their own standalone basis, they have fallen below their long-term average growth multiples. So I think right now the market is more, tilting towards the pessimism, which is why the multiples are under stress. I think the global multiples on services, especially in US, always have a local nuance. So, I don't think it's right to compare the two.
Not right to compare.
Having said that, the valuation gap between Indian and US stocks have converged.
Right. And just to, since you mentioned, one of the factors that investors are holding on to is the dividend yield as well as the cash flow yield. What is it at currently?
5%.
5%. All right. Got that. Abhishek, request you to hold on to that thought. We got a couple of queries as well coming in there, and we want to discuss your top picks. For the time being, we take a short break. Come back, we continue our discussion with Abhishek. You'll get a lot of your answers to your queries. Stay tuned. Welcome back. You're tuned into Finding Alpha, and we have Abhishek of Nomura who's helping us out with everything tech. And as you all would want to know, there are a couple of queries as well that have come in there because you all want to know which stocks are best placed. So let's get straight to the first query that's come in. We have a query coming in from Rakesh Arora, who writes to us from New Delhi. He wants to know the top IT stocks to invest in. And he's broken it up into three buckets: large, mid, as well as small cap stocks. Abhishek, what's on your radar?
Sure. So I think in the large caps, we like Infosys and Cognizant the most. We think they will continue to gain market share. They'll grow at a rate which will be higher than the peer average.
Okay.
In the mid cap, Coforge is the preferred pick. We think the company's ability to deliver mid-teens growth exists. And some of the large recent acquisitions, will help it become bigger in size and get access to more number of clients, the relevant ones. On the small cap, we like eClerx the most. It's a BPO company, but I would just like to clarify here the perception that BPO companies will all get disrupted, which is true partly on the BPO, voice side. The voice component for eClerx is quite low, is below 10%. I think they will be a beneficiary on the platform side of the BPO, and we see them sustaining close to 15% revenue growth in the medium to long term.
Okay, all right. So that's the top picks there: Infosys, Coforge, as well as eClerx, as you mentioned. All right, got that. We got another query that's come in there, so let's take that out of the way. Priya Datta writes to us from Kolkata. She wants to know the outlook on the Indian IT sectors over the next 2 years. Now, this is an interesting one. Will the sector emerge as an AI beneficiary, or is it going to be an AI casualty? Tell us, Abhishek, what do you think?
I think, the IT companies are going to be AI beneficiaries in the medium to long term. Taking a step back, the IT companies are system integrators. They integrate your different types of software tools, or they innovate on top of it. And the need of, system integrators even become more and more important in the AI world, where the pace of innovation will increase. That's one. And also, remember, IT companies have worked with their vendors, with their clients for a very long period of time. They understand the context of every enterprise, in a much deeper way compared to maybe a software company. And AI is all about context. AI for a bank is different for AI for a, for a services company, or AI for a consumer company. And even in the same vertical, the need and usage may be different. So I think the context understanding of IT companies is a very big, positive asset they carry. And that's the reason I think, they will be beneficiary in the medium to long term.
Okay.
Just to, recap, I think we are going through a revenue deflation first, where people have written off, the potential revenue gains, only thinking about the near-term revenue deflation because of AI. But the reality is, tech brings down prices. Eventually, it gets compensated by volumes.
Yes.
The ones who will be able to pivot by changing their business models, their operating models, those will be the winners in the AI world.
All right. Very quickly, Abhishek, before we let you go, there's so much of talk about GCC setting up shop in India. Now, this AI adoption is going to gain momentum. Do you think that's at risk? Because the entire cheaper labor argument goes out of the window. What's your take?
I think it's a myth that all the GCCs in India are built only because of labor, cost reasons. Many of them actually are kind of a internal IT department, not in the US, but in India. They're often created for innovation reasons.
Yes.
So I don't, completely agree that, AI will, swing the, mass away from GCC into something else. In fact, the GCC's role will become even more critical. Many of them will become a very important, strategy implementer of the AI side of their respective organizations. The numbers may change, the number of hiring may change, but the strategy to open a GCC will remain, because India is still a very large talent supplier at scale, at quality, which not many parts in the world can offer.
Okay, all right, Abhishek, it's been a pleasure having you on the show. Thanks a lot for joining in on Finding Alpha, breaking down this entire tech tumble debate. And it appears you believe that maybe tech still has a bigger role to play in the time to come. Thanks a lot for joining in.
Thanks, Nigel.
Well, on that note, we'll wrap up on this edition of Finding Alpha. Thanks a lot for watching. Stay tuned. More updates coming up.
Hello and welcome to Business 360. I'm Arundhati Ramanan and here are the headlines that we're tracking for you this evening. Sensex and Nifty and marginally in the green after a volatile session. IT stocks snap a 5-day losing streak. Mid-caps outperform the blue chips. The Trump administration imposes a 126% tariff on solar gear imports from India, initiates a probe to determine if government subsidies are making American products uncompetitive. Stocks of Indian solar exporters slump in trade.
No one has ever seen before, and a turnaround for the ages. It is indeed a turnaround for the ages.
U.S. President Trump claims an economic turnaround in his State of the Union address, doubles down on tariffs with Supreme Court judges watching from the front row, attacks the Democrats repeatedly in what was the longest speech in U.S. history. Tata Group stocks rise in trade a day after Tata Sons board defers decision on extending the tenure of Chairman N. Chandrasekhar until the next board meeting in June. Under Chandra, Tata Group has seen its revenues double and profits triple in 9 years. February vehicle registrations look set for its best showing in the last 4 years. Registrations show an average 21% yearly uptick across segments. Commercial vehicles lead the pack. Ather Energy CEO Tarun Mehta says the electric two-wheeler maker has the capacity to achieve volume growth of 40 to 50%, which can help the company turn EBITDA profitable. Adds no product will be priced below 1 lakh rupees, even as he admits there is a market for such products. That's an exclusive. Mumbai Civic Body announces an 81,000 crore rupee budget for the next fiscal, allocates 60% of the outlay for capital expenditure, proposes 2,100 crore rupees for the Versova to Dahisar Coastal Road project. U.S. Defense Secretary Pete Hegseth issues an ultimatum to Anthropic, sets a Friday deadline for the company to comply with Pentagon's demands on the use of AI. Anthropic CEO Dario Amodei told CNBC TV 18 he does not want his AI models to be used for autonomous weapons and mass surveillance of Americans. Bill Gates apologizes to the staff at his foundation over his ties with convicted sex offender Jeffrey Epstein, admits he had 2 affairs with Russian women and claims he did nothing illicit, calls his association with Epstein a huge mistake. We'll come to all of that and more in just a bit, but let's start with the day's market action. Dalal Street closed in the green with Nifty ending above the 25,450 mark. The Nifty mid-cap index rose 340 points, while the Nifty Bank underperformed. Nifty IT snapped its 5-day losing streak. The top story this evening, the Trump administration has imposed countervailing duties on solar cells and panels imported from India, Indonesia and Laos. A duty of 126% will be imposed on certain solar good imports from India. Imports from Indonesia and Laos have been hit with 105% and 81% tariffs respectively. US will probe if government subsidies in India and other countries is hurting the competitiveness of US companies. Shares of top Indian solar companies declined in trade. U.S. President Donald Trump claimed that the first year of his second presidency achieved a turnaround for the ages during what was the longest State of the Union address in the country's history. Trump's 1-hour, 48-minute-long speech was laden with repeated jibes at the Democrats. His address comes months before the pivotal U.S. midterm elections, with reports suggesting that the Republicans could lose control of the Congress. In his trademark style, Trump claimed credit for the economy, which he said was roaring like never before. The U.S. president also doubled down on tariffs, with 4 Supreme Court judges watching from the front row. 3 of them had ruled against Trump's tariffs. Surprisingly, he did not launch personal attacks against the judiciary, but called the court ruling unfortunate. Trump even shook hands with the judges before making his way to the podium ahead of his speech.
Just 4 days ago, an unfortunate ruling from the United States Supreme Court. It just came down. It came down. Very unfortunate ruling. But the good news is that almost all countries and corporations want to keep the deal that they already made, right, Scott? Knowing that the legal power that I, as president, have to make a new deal could be far worse for them And therefore, they will continue to work along the same successful path that we had negotiated before the Supreme Court's unfortunate involvement. Congressional action will not be necessary. It's already time-tested and approved. And as time goes by, I believe the tariffs paid for by foreign countries will, like in the past, substantially replace the modern-day system of income tax, taking a great financial burden off the people that I love. We are in negotiations with them. They want to make a deal, but we haven't heard those secret words. We will never have a nuclear weapon. My preference is to solve this problem through diplomacy. But one thing is certain, I will never allow the world's #1 sponsor of terror, which they are by far, to have a nuclear weapon. Can't let that happen.
And staying with US, speaking at a Business Standard event last night, Commerce Minister Piyush Goyal has said that the trade talks between India and US will resume as soon as there is more clarity on the tariff situation.
How soon you think you will be resuming your trade talks with the US?
Well, as soon as there's more clarity in the situation.
Okay.
The Ministry of Statistics is set to release a new GDP series on Friday using FY23 as the news base year. Lata Venkatesh is here with more on the new GDP formula. Lata, what can we expect?
Well, the base years are regularly changed. The current base year we have to calculate GDP was 2011-12. Our consumption patterns have changed, and therefore the Ministry of Statistics is changing the base year to the year 22-23. That is what is going to be released on February 27th. We will get even more additional information. The new series will incorporate more informal sector data. It will also incorporate more real-time data from the GST and the public finance management system. These are real-time data systems of the government. As well, it will have something which statisticians want, double deflation. That is, you don't just bring down the income of companies by the amount that prices have increased to count the volume of goods added. You deflate the input prices and the output prices separately, which is a more sophisticated way of counting the value add. That's the main contribution of the new series. Okay, as to our poll says that the Q3 GDP, which will be announced on February 27th, will come in at 7.7%, much better than the 6.4% in the previous Q3, but not as good as the second quarter growth of 8.1%. Nominal GDP is where it will be not so impressive, expected to come in at about 7.8, 7.9% compared to 10.3% year ago. Remember, these are forecasts made on the basis of the old series, which ends on Feb 27, but then you obviously can't make forecasts on a series we don't know. Also, the full year GDP number is expected to come in at 7.6%. We will get the second advanced estimate from the MOSPI. Again, this is based on the old series. This compares with the first advanced estimate of 7.4. Last year, the country grew by 6.5. So 7.6 is anyway a very good performance. Again, nominal GDP will be the disappointment. It's expected to grow by about 8.4%. Last year, we grew by 9.8, and everyone wants a double-digit number. Just one more word. The new series will give us comparable numbers for this year, FY26, FY25, FY24. So if the FY24 numbers change because of the new data available, then by nature, 25 and 26 will be different. So the poll that way is of limited value because a whole host of things are about to change with the new series.
So lots of changes to look forward to. All right, Lata, many thanks for those details. Now, Tata Group stocks digested the news of Tata Sons board deferring the decision on Chairman N. Chandra's extension till the next board meet in June. Sources tell CNBC TV 18 that Tata Trust Chairman Noel Tata asked for certain conditions to be linked to Chandra's reappointment. The group stocks were largely in the green today. A CNBC TV 18 analysis shows the group's financial performance has significantly improved during Chandra's 9 years at the helm, barring a blip in the last few months. Yusuf is here with the analysis. Yusuf?
Well, Tata Group's revenue has nearly doubled and profits have tripled with N. Chandrasekaran at the helm of the $300 billion conglomerate. In FY 2017, the group's revenue was just over 6 lakh crore rupees. By FY25, revenue had risen to more than 11.5 lakh crore rupees. The group's profit were around 35,000 crore rupees 9 years ago. As of FY25, profits had nearly touched 1 lakh crore rupees. When Chandra took over in 2017, Tata Steel was reported an annual loss of over 4,400 crore rupees. But since then, the company has turned things around, posting a profit of 3,400 crore rupees in FY25. Similarly, Indian Hotels Company has shrunk from a 63 crore loss in FY17 to a profit of more than 1,900 crore rupees in FY25, reflecting a revival in the hospitality cycle. However, not all bets have paid off. In 2021, Tata Digital acquired a majority stake in Big Basket for about 9,500 crore rupees, strengthening its e-commerce push. But intensifying competition from quick commerce players and others has eroded Big Basket's market share from nearly 50% to under 10% in the last 5 years. TCS contributed nearly 75% of the group's valuations by 2020. But since then, the valuation has diversified, with TCS now accounting for 36% of the overall valuation. Despite the challenging situations in the IT sector, TCS remains the crown jewel with valuations of over 9 lakh crore rupees. Tata Group's total valuation now stands at 26 lakh crore rupees. FY26 has been a challenging year for TCS. In the first 9 months of this financial year, TCS has seen its revenue grow by nearly 3% and profit decline by more than 2%. Tata Motors is also struggling after a major cyber attack at JLR and the tariff tensions hurting automobiles business across the globe.
All right, Yusuf, many thanks for those details. Now, February vehicle registrations are on track for its best showing in the last 4 years. Registrations grew at an average rate of 21% yearly across segments, with commercial vehicles leading the pack. Sudarshan Kumar is here with all of those details. Sudarshan, a stellar month for the auto sector.
So if you want to see the real impact of GST rate cut, you have to look at the registration numbers of the auto sector. And after outperforming the industry for the last few months, Feb registration data is indicating a continued strong demand. And if the current trend holds, February 2026 is going to be the best February that we have seen at least since Feb 2022. Most of the companies have seen registration in Feb 2026. Those are already higher than what they had seen in Feb 2025, and total vehicle registration so far in Feb 2026 is higher by almost 20%. Now take a look at the sector-wise. So total registration so far in this month is higher by 20%. Two-wheelers up almost 21%, passenger vehicle up almost 20%, and similar trend can be seen for commercial vehicles and three-wheelers. Now, if you compare Feb 2026 data with the last 2 months, you can see continued demand. Total up this month 21% against 18% last month and 16% December 2025. Similar trend can be seen for two-wheelers. Even PV this month 20% against 11% last month, and CV and three-wheelers too are seeing a strong demand with registration growing in the range of 19 to 23%. Now talking about the company specific, starting with two-wheelers. Two major companies, Bajaj Auto and Hero Moto, their registration numbers for this month, they are just 3% away from what they have done in Feb 2025. Especially for Bajaj Auto, export contributes almost 50% to their total volumes. And in the last 3 to 4 months, they have been doing 2 lakh units per month, and from the month of April, they are expecting to hit the level of 2.5 lakh units. Another two companies, TVS Motor and Royal Enfield, their registration numbers this month are already higher than the number they had seen in Feb 2025, and they continue to outperform the industry. Amongst electric two-wheelers, similar story that we have been seeing for the last few months will play out this month too. Ather will outperform and Ola Electric will underperform, and Ather's registration so far is already 40% higher than what they had seen in Feb 2025. In passenger vehicle, all the three major companies, M&M Auto, Maruti and Tata Motors PV, their registration numbers this month are already higher than what they had seen in Feb 2025. And surprisingly, the one which is outperforming the industry is Tata Motors passenger vehicle. Amongst commercial vehicle names, both the major companies, Tata Motors commercial vehicle and Ashok Leyland, their registration numbers for this month are already higher than what they had seen in Feb 2025. So in nutshell, if current trend holds, it's going to be a bumper February for the auto sector.
Sudarshan there with the details on those auto stocks. Now, Ather Energy's co-founder and CEO Tarun Mehta has said that the electric two-wheeler maker has the capacity to achieve volume growth of 40 to 50%, which can help it turn EBITDA positive. Speaking exclusively to CNBC TV 18 Shireen Bhan, he said that the company will not price its products below 1 lakh rupees. Take a look.
There is a market of products below 1 lakh in our industry. Our estimate is that maybe about 20% of the industry is below 1 lakh. again, it's our estimate today. We believe that we've got to focus. We can't go after every single segment, every single price point, particularly when we don't have PLI. We don't have PLI, so we have this huge 15% disadvantage compared to people who don't even want to probably build electric.
Yeah.
So as people who want to probably push the envelope on electric, we are balancing a very difficult task that we are starting off with a 15% disadvantage here. So we've got to be very careful, not get into segments where there could be a there could be a lot of bloodletting that happens, a lot of cost pressures that come in. So for us, the Lakshman Rekha is 1 lakh. We will not go below that. But I think it still leaves a lot of gap. Today, our entry-level model, including the software Pro Pack, is more than 120K. So I think there is an obvious gap that we can bridge here, which is where EL can fit in quite nicely.
Given the fact that you've sort of got your plan in place, you're building on the infrastructure and the investments that you've already made, by when do you believe you could start to see a return on these investments?
So our gross margins improved. That took us from minus 36% EBITDA to maybe minus 20% EBITDA. But then our volumes went up 50-60%. And that's taken us from minus 20% EBITDA to whatever, minus 5% EBITDA. The current capacities can further grow our volumes by almost, I would say, almost 50%, 40-50%, 30-40%. And I believe that should be good enough, barring like some global commodity crisis. That should be good enough to turn profitable, at least at an EBITDA level, if not a PAT level.
On that note, it is time for us to head into a short break. But coming up next, U.S. Defense Secretary Pete Hegseth has given Anthropic until Friday to allow the Pentagon to use its AI technology across military applications. That and more when we come back. Stay tuned. Welcome back. You're still with us on Business 360. U.S. Defense Secretary Pete Hegseth has given Anthropic until Friday to allow the Pentagon to use its AI technology across military applications. Hegseth has vowed to remove Anthropic will lose its government contract if it fails to do so. Anthropic CEO Dario Amodei told CNBC TV 18 just days ago that he does not want his AI models to be used for autonomous weapons and mass surveillance of Americans.
The possibility of Anthropic being blacklisted by the Pentagon. Have you been in conversation with the authorities there? Is there an update on that you can share with us?
So we've been deploying our models for U.S. national security for quite a while, and I think our basic position on it is we've offered the models in kind of a very wide range of for a very wide range of use cases, and I think the main areas of concern that we have are fully autonomous weapons where there isn't a human in the loop, and domestic mass surveillance of Americans. So those are the two areas where we have some concern, and we want to make sure the models are not used in that way. And we continue to have productive discussions about how to use our models for almost every use case.
And staying with AI, from inking deals to calming investor fears over SaaSpocalypse, AI companies have had a very busy week. Rachna Dhanrajani joins us now with the details. Rachna, what's brewing in the AI world?
Well, a massive week in AI. And it's only Wednesday. Anthropic is, of course, caught in a storm with the Pentagon, but the headlines just keep coming from the maker of Claude. The company, founded on AI safety, has now quietly rolled back a core pledge. It now says it will not pause development even if a system appears risky, as long as competitors are moving ahead. Simply put, competitive pressure is now starting to outweigh precautions for Claude. There's also a deepening geopolitical flashpoint here. Anthropic says 3 Chinese AI firms, DeepSeek, Moonshot AI and Minimax, ran what it calls industrial-scale distillation campaigns. The company detected about 24,000 fraudulent accounts, generating more than 16 million Claude interactions. Anthropic says the goal was to extract its most advanced capabilities, especially reasoning, coding, and agentic tool use, so rival models could be trained faster and more cheaply. The company is also warning that the models built this way may lose critical safety guardrails and could ultimately feed into military surveillance or cyber systems. Markets, meanwhile, are still absorbing the aftershocks of what Wall Street is calling the SaaSpocalypse that we saw roll out a couple of weeks ago after Anthropic's Cowork plugin released, triggering a sharp sell-off across software names that wiped out almost $285 billion in market value in just one session. But yesterday brought some relief after Anthropic pivoted toward partnerships and integrations. But the broader message from investors is quite clear now. The AI platform shift is definitely underway, and the software hierarchy is now being reshaped. Coming to the hardware front, AMD has now landed a $60 billion AI chip agreement with Meta to deploy roughly 6 gigawatts of AMD GPU capacity, with Meta also receiving stock warrants of up to 10% in the company. The deal runs over 5 years, and more importantly, it positions AMD as the most credible challenger yet to NVIDIA's dominance, and sharply emerging as the number 2 now. Speaking of NVIDIA, all eyes are now turning to its earnings tonight. Street expectations are for roughly 72% profit growth on revenue of about $65 billion. Investors will be watching closely for signals on the Blackwell cycle, China exposure, and next-gen chip guidance. Back to you.
So lots of things to watch out in the AI world for. Thank you so much for those details, Rachna. But with that, it is a wrap on this edition of Business 360. More news and updates coming up on the other side. Stay tuned.
Hello and welcome to Startup Street. I'm Shruti Mishra and with me is Arundhati Ramanan. These are the top headlines from the startup space. Home Essentials has raised 70 crore rupees in a pre-series B round led by 361 Asset with participation from India Quotient to expand its omni-channel presence by opening 20 offline stores, strengthen supply chains and deepen its product portfolio. The firm plans to scale to 500 crore rupees in revenue over the next 3 years.
Armatrix, a Bengaluru-based deep tech robotics startup, has raised $2.1 million in a pre-seed funding round led by Pi Ventures and others. The funds will be used to complete development of its proprietary snake-like flexible robotic arm technology, expand the engineering and R&D team, and accelerate pilot deployments across industrial customers.
Gut Clinic, a healthcare platform, has raised $1 million in seed funding round. Currently operating in the Delhi NCR region, Gut Clinic plans to expand to Chandigarh, Punjab and other parts of northern India with the target of establishing over 20 centers in the near-medium term.
Bewakoof co-founder and CEO Prabhakiran Singh has stepped down after 14 years to focus on personal priorities. He confirmed in a LinkedIn post the D2C fashion brand was acquired by Tomorrow in February 2023. Singh will remain with the company until the end of March to ensure a smooth transition.
Home decor startup LiveSpace's Chief Business Officer Lalit Mittal has left the firm following co-founder Saurabh Jain's exit. Mittal has decided to pursue his own entrepreneurial journey after spending 6 years at LiveSpace, according to the firm.
U.S. Defense Secretary Pete Hegseth issues an ultimatum to Anthropic, sets a Friday deadline for the company to comply with Pentagon's demands on the use of AI. Anthropic CEO Dario Amodei told CNBC TV 18 he does not want his AI models to be used for autonomous weapons and mass surveillance of Americans.
Arvind Casey is appointed as OpenAI's Chief People Officer, bringing in a veteran operator as the company navigates its next phase of rapid growth. Arvind joins multiple other Indian origin executives at the ChatGPT maker, including Vijay Raji, the CTO for applications, and Srinivas Narayan, the Vice President. Well, those were the headlines we've been tracking for you this evening on What's Brewing Today. India's digital economy is booming, but so is digital fraud, with global losses now estimated at over $1 trillion annually as compliance tightens under the DPDP Act and enterprises race to secure user data. The battle to build the trust infrastructure of the internet is intensifying. Mumbai-based IDFI has just raised 476 crore rupees in a fresh funding round led by Neo Asset Management, positioning itself as a full-stack trust and privacy platform for the modern digital world. With over 500 enterprise clients and 500 million checks annually, the company now plans global expansion, strategic acquisitions, and deeper investments into fraud prevention and privacy governance. Joining me now is Ashok Hariharan, the co-founder and CEO of IDFI. Ashok, welcome to Startup Street. Now, this raise comes at a pivotal moment. India's DPDP Act enforcement, a 5x jump in budgetary allocation, and rising compliance pressure. Ashok, how much of this funding momentum is regulatory tailwind versus pure business performance? And what does this round truly signal? Capital, growth capital, consolidation firepower, or a larger global ambition? How do you plan to deploy the funds?
First of all, thanks for having me. Is it regulatory tailwind or is it our performance? Obviously, I'm going to say performance, but it's honestly I would say 3-4 things which we have done well. One is IDFI has grown significantly over the last couple of years. And we have taken pole position on detecting fraud and as well as on the privacy and data governance side. And with that, but the second big thing is obviously regulatory tailwinds do exist, and I think the regulators are getting serious about protection of Indian citizens. I think that's great. And the third big thing I think is unfortunately fraud has grown in this country significantly, right? Yes. And as fraud grows, not only in this country, but globally, platforms like us do need to sort of come and protect against that fraud. And with that, I think these are the three big levers for that growth. I think you did ask me about what are we planning to use this fund for. First of all, part of that fund went into giving returns to some of my earlier investors, employees, as well as angels. And part of it is set aside for international growth as well as for acquisitions. largely against our 3 platforms, which is around onboarding, risk, and privacy. We're looking at consolidating in those areas, and obviously for international expansion, where we're again looking for acquisitions globally as well. So we would want to start to look at Southeast Asia, Middle East, Africa, developing markets largely.
All right, like I mentioned earlier, 500 plus enterprise clients, 500 million checks annually, and you have built this profitably. So take us through your growth numbers and what do sustainable unit economics look like in a fraud tech business where threats keep evolving?
Yeah. So last 6 years, I think we've been around for 14 years. Last 6 years have been fabulous for IDFI. On the back of something very horrible that happens to the world, which is on the back of COVID, which moved things towards digitization. But the second big lever was obviously increasing fraud. On the back of that, we've grown over the last 6 years about 15 to 20x, depending on 6 to 7 years, we've grown about 20x, and 6 years about 15x. And I think that's coming on the back of the general trend towards digitization as well as fraud. And with fraud increasing and the way we are, fraud is evolving with fraudsters also using AI in a lot of places. I think we have to keep building tech to be able to catch that, because you use AI to catch AI fraud, which is what we are doing at IDFI, and we will continue to do so, and we keep building new stuff.
All right, do share with us some of the growth numbers that you're seeing currently.
Yeah, I think last 3 years have been fabulous. We've grown over about 35%. This year is going to be even bigger, as on the back of regulatory tailwinds as well as global expansion that we've done. We are in Philippines, Indonesia now, and Middle East. We're seeing pretty large, heavy growth. I mean, pretty strong growth in those geographies. So we're expecting a pretty good year. The next year.
The global RegTech market is still fragmented. What gives IDFI a defensible moat? If I'm a global bank or fintech choosing between an American major and IDFI, why should I pick you? That's the number one question. The second question, are we going to see IDFI emerge as a global RegTech consolidator, acquiring niche players to build a dominant trust infrastructure player?
Yeah, first of all, I think one of the things that we decided very early is that we're going to go deep in the market, in whichever market we operate in. A lot of our global competitors go pretty, they do breadth over a large number of countries. So we said we'll choose our countries, but we'll go fairly deep and be able to assess risk, which is fairly localized, by the way. The way risk and fraud, the way fraud happens in India is not the way fraud happens in Philippines and Indonesia. So to think that you can take this, you can take a more broad-based approach would be, in our opinion, is not as valuable to the enterprises we work with. Second is because of that deep local knowledge. I think when it comes to solving for fraud and trust and privacy in these local geographies, global players do choose us over their global counterparts that they may have chosen somewhere else. The third question, we become a global consolidator. That is the ambition, and we are like I said, we are looking for acquisitions as we speak.
All right, and we'll surely keep a track of that on Startup Street. Wish you the very best as you expand globally and you keep innovating your trust stack. Many thanks for your time today on Startup Street.
Thank you so much for having me.
And moving on the hot seat, marketing has become intelligent, ads adapt, targeting evolves, messaging shifts in real time, but the website where intent turns to revenue has largely remained static. Now, San Francisco-based Fiber AI is looking to change that. The startup has raised $7.5 million from Accel and others to build what it calls the agentic web, a world where every URL becomes an intelligent, self-optimizing experience. With early claims of cutting customer acquisition costs by up to 50%, the big question is, can Fiber redefine how enterprises think about their websites in an AI-native internet? Joining me now to discuss this further is Ankur Goyal, the co-founder and CEO of Fiber AI. Ankur, thank you so much for taking time out and being here with us on Startup Street. You basically argue that marketing has become intelligent everywhere except the web, right? So what was the trigger moment that made you believe this gap was big enough to build an entirely new category around?
Yeah, first off, thanks a lot for having me here. So I think I was an entrepreneur before this as well. I had a D2C brand which focuses on women's health. And we used to sell a lot of products where there's multiple USPs. And I always used to see significantly low conversions on my website. And that's like, if you think about it, website is the only channel that is owned by us, right? Everything else, Meta, Google, etc., is owned by those companies. And so that's where I felt like with agentic AI coming in and with content becoming so easy to build, there is a possibility that websites will get redefined. And that's where we started, because we thought if you are targeting very personalized messaging on a Meta or a Google ad campaign, why don't you carry that messaging back into the website and make sure the website is also personalized?
Sure, absolutely. And you've claimed that you've seen 35 to 50% reductions in customer acquisition costs and up to a 10x increase in engagement, right? What's sort of driving those numbers, and how do you price this so that cost aligns with outcomes rather than, software seats? Take us through the kind of clients that you're catering to and how have you helped them become more efficient?
Yeah. So when we went after the client, from my experience, I would have gone for more D2C kind of customers, but we realized the large power with us comes with banking, finance, and telecom customers, and that's what like our early customers have come in from, especially both in US banking ecosystem and even in India banking and telecom ecosystem, right? Like the major drive for us is if you have each customer bringing you a lot more value. Like for example, a credit card, a customer has a high LTV, a lifetime value. Versus like a t-shirt brand which have a low LTV. So we go after the customers where high LTV is there. Now for us, the reason why the conversions has been so high is because if somebody is searching best credit card for me in travel, right now most websites within India ecosystem or US ecosystems will take them to a very standard web page where it will talk about generic credit card messaging. But with us, what we can do is we can make sure the messaging is around travel, because that's what the customer searched for. And then this leads to a higher form fill on the website, and thus a more engaged customer, which I said like 10x increase in engagement, which we see with how much time they're spending on the website, what is the bounce rate looks like, as well as higher form fill rates, because now the customer knows, hey, I came for travel. And they are actually talking about travel with the credit card. So I might give the information and figure out if this is the right fit for me. And so those are the two things that are working for us, because we've been able to match the intent directly on the website.
Yeah. And we're running out of time. So if you could quickly tell us, you've raised this $5.7 million to build the agentic web, as you're calling it, where every URL sort of becomes intelligent experience agents, right? How are you planning on using these funds? Where will the money go?
Yeah, so far we have been developing the product. Like now the goal and the focus for us is to get it to the market. We have good early customers, some of the Fortune 50 customers that we have. Now we want to build on back of those customers plus the funding that we have raised from Excel and go out, do a lot of conferences, build our brand, do a lot more media coverage so that people know that we exist, and we can build a better revenue in this year.
So you're still taking it to the customers. Have you already spoken to customers? Where are you in terms of, who you're talking to, and where are you seeing more demand coming for this product from?
It's still one of the biggest sector that we are seeing demand is from banking. Like some of the largest banks in US are our customers. Some banks in India is also our customers. That's the biggest demand that we are seeing at least at our end right now. And the way we are approaching these customers is mostly conferences, which are very dedicated to customer experience, to conversion, to marketing efficiency. So that's how we are getting to these customers right now.
All right. And, going forward, what would the mix sort of be between geographies? Are India and US your primary markets now, or are you already targeting other geographies as well?
I think I'll say US is my primary market right now. And India is a market because we are close to Indian ecosystem. And so we end up supporting a lot of Indian ecosystem. But we are seeing a lot more pull in from most of the English speaking nations, like from UK, from Australia and Canada as well. And so that's what we want to have our energy and focus right now.
So that's where your energy and focus is going to go. All right, Ankur, thank you so much for taking time out and being here with us on Startup Street. And we wish you all the best on this journey going forward.
Hey, thanks a lot for having me here.
Well, with that, it's time for us to head into a short break. Coming up, D2C fashion brand Libas is on track to hit 1,000 crore rupees in revenue. Next year, the apparel brand is now shifting focus to building a non-apparel portfolio. Details on the other side. Stay tuned.
Welcome back. You're still with us on Startup Street. Libas wants to be India's first D2C fashion brand to hit 1,000 crore rupees in revenue, and it's moving fast to get there. From launching new designs every week to adding stores at a rapid clip, the apparel brand is now looking to build a non-apparel portfolio and has started with the launch of fragrances. Shilpa Ranipeta spoke to founder and CEO Siddhant Keshwani on what this extension means for the company and its aggressive expansion plans. Take a look.
So, fragrance as a category was something that we landed upon very accidentally, to be honest.
Really? Okay.
It was more to do with, customer feedback, because we were very personal when it comes to curating fragrances for our stores, right? We were always very particular that the entry experience of the consumer should be great. And when that happened, people started saying, we love the fragrance. How do we use it? Now, I think it's just been a 1 or 2 month old category for us, but about 30-40% of the bill cuts that we're getting, people are, picking up perfume. So we realize that it's a very good quick checkout transaction as well.
Right.
Helps us increase our average bill values, average sales value and all this. We want to be known for fast fashion because that's what our core USP is, well, right?
Right.
So currently on a store level, our perfume contribution has already reached about 1.5-2%. And we have consciously decided that we will not exceed it over 3 to 4% because that's how much we want.
But non-apparel overall, how much do you see that eventually?
So I think non-apparel eventually should do about 15% of the business or maximum 20% of the business on the store
right.
level.
I want to talk about Libas overall, the growth also. FY25, you saw about 610 crores in revenue. You're projecting about 700 to 800 for FY26. Help me understand what has really been the growth driver for Libas, especially in a hyper-competitive market. And currently, what's your average billing ticket size like, and how do you see that growing as well?
See, on the strategy front, what is leading to majority of the growth is, the speed that we execute things at. We are extremely fast at, launching new designs, launching new trends, launching new marketing campaigns. And I think I would call ourselves one of the fastest in the industry. This year, we're already at a run rate of about launching 80 to 90 new designs every week, and we want to scale that up to 150 to 200. And when you do that, your repeat purchases, people are buying more frequently from you. So that's more on the strategy front. And on a distribution front, a lot of new stores opening. Like this year alone, we opened about 35 to 40 stores this year itself. So I think overall, our store expansion is also fueling a lot of our growth, and I think stores are going to lead the next 2 years of growth for us.
FY27, then, how do you see your revenue? I mean, what are the targets that you have set for the next?
So, if God is kind, we would ideally like to be the first fashion brand, D2C fashion brand in the country to reach 1,000 crore revenue. And we want to grow now sustainably, organically, more profitably, and focus more on building efficiencies rather than just scale, etc.
Right.
So I think for us, 50-50 is what we see our online-offline split to be over the next 1 or 2 years.
So, 60 to 70 stores a year, that's quite a bit of capex that will go in for you, and you have been profitable. But, if you are going to be investing a lot more into physical retail, that comes with a lot of investment capital required. How do you then sustain profitability, or do you believe you'll have to take a hit there to sort of put yourself on a growth path temporarily?
So I think we've always been a brand which has been profitable since day one, right? So we're very conscious of our unit economics. We've run the brand bootstrapped for a very long time until we raised our first round about a year and a half back. So we still, because we raised around just a year and a half back, we still have a runway to open about 40, 50, 60 stores over the next 1 year. And I think because most of the stores are self-sustaining from day one itself, additional capex and all has already been in check, and if we feel that if the markets are doing well, stores are doing, and we want to expand faster, probably another round or an IPO is something that we are going to be looking at to scale up operations as well.
How soon do you think you would want to go down the IPO route?
So it's too soon to comment on IPO, to be honest. I think over the next 1 or 2 years, that is the eventual plan, and we are working in terms of corporate governance, etc., to kind of reach that as fast as we can. I mean, keeping fingers crossed, maybe next year, maybe a year after that. But yeah, over the next 1 or 2 years is the timeline that
But
we're
you're
thinking.
well funded until you get there.
Absolutely,
Yeah?
absolutely.
Well, moving on, from expansion plans to investor returns, plenty coming in from Rebel Foods at the Founders Forum India. My colleague Madiha Mujawar caught up with CEO Ankush Grover to talk about investor plans, investor confidence and returns. Take a look.
Very fortunate to have
early backers like Peak 15 and Lightbox, and now we have Temasek and KKR also on the board. So I think we've raised multiple rounds because and investors being patient because we're building something which is much bigger and much bigger purpose. So I think we've raised almost series, I think G. So we're very fortunate to have great backers who believed in our purpose and our mission and always build to push it to right scale and right purpose.
15 years Series G funding round. So how long is the road to profitability now? How much do you have to wait, and how much will your investors have to wait for you to turn profitable?
I think we are almost there. So they don't have to wait anymore. I think we are there. We're decently there, and I think so. As we build, I think the leverage, operating leverage, is also coming into play. So I think we are pretty much there in terms of profitability, in terms of scale also.
Where are you going next?
So we are opening a lot of cities. We are opening Jalgaon next. We are opening Hoshiarpur. We are opening more locations in Bombay, Delhi, and all that. So I think within India, we are at 120 cities, targeted to be at least 200 cities in the next 1 year.
Foreign plans?
We are already in UAE. We see it as an extended market to India. So I think UAE will penetrate more. GCC is where we are right now, and I think there also we are seeing good growth. So for now, I think these are the two markets we are at.
Have you been approached by newer investors as well?
Yeah, we keep interacting with a lot of investors and keep getting that inbound interest. But again, as I said, when the time is right, we'll always engage and get new investors, as you said, in the whole journey. But we are very fortunate. Our investor like Peak has been with us for almost 15 years now. And a lot of investors have been up, and we have been.
So how much value has been generated for your existing investors?
I think last round we were public information is over 1.4 billion. For early investors who came in like early, I think they would have made almost 30-40x return, to be honest. But I don't know the number, so maybe we can get back. But I think the whole thesis is when you build something which is a category like what we have built, I think the journey is long, and we had these patient investors with us who know that what we are building and how valuable it is.
And with that, it is a wrap on this edition of Startup Street. From Shruti and me, goodbye and many thanks for watching. More news and updates continue right here on CNBC TV 18.
Hello and welcome to India Business Hour. I'm Ashmit Kumar. Here are the headlines that we're tracking this evening. Sensex and Nifty end marginally in the green after a volatile session. IT stocks snap a 5-day losing streak. Mid-caps outperform the blue chips. The Trump administration imposes a 126% tariff on solar gear imports from India, initiates a probe to determine if government subsidies are making American products uncompetitive. Stocks of Indian solar exporters slump in trade.
We have achieved a transformation like no one has ever seen before, and a turnaround for the ages. It is indeed a turnaround for the ages.
U.S. President Trump claims an economic turnaround in his State of the Union address, doubles down on tariffs with Supreme Court judges watching from the front row, attacks the Democrats repeatedly in what was the longest speech in U.S. history. February vehicle registrations look set for its best showing in the last 4 years. Registrations show an average 21% yearly uptick across segments. Commercial vehicles lead the pack. Ather Energy's CEO Tarun Mehta says the electric two-wheeler maker has the capacity to achieve volume growth of 40 to 50%, which can help the company turn EBITDA profitable. Adds that no product will be priced below 1 lakh rupees, even as he admits that there is a market for such products. That's an exclusive. Enforcement Directorate attaches Anil Ambani's Mumbai residence worth more than 3,700 crore rupees over a bank fraud case. With this, the cumulative attachment of property stands now at 15,700 crore rupees. ED claims the total outstanding amount from Anil Ambani and his companies is more than 40,000 crores. Prime Minister Modi in Israel on a 2-day state visit. Benjamin Netanyahu, along with his wife, received Modi at the Tel Aviv airport. The two countries are scheduled to sign key economic, security and diplomatic agreements. Prime Minister Modi will also visit the Holocaust Memorial in Jerusalem. Mumbai's civic body announces an 80